Our orders are on the books. Our name is on the cover. Ladies and gentlemen, fellow traders and enthusiasts, welcome to the show. I'm thrilled to have you here today on Friday, the last day of the week, and again delve deep into the dynamics of the often tumultuous world of the stock market. Today, we're going to focus on two fascinating companies that have the potential to reshape the very mechanisms of our financial system. GameStop and LivePerson. Make sure to hit the like button and share this video so that everybody knows we're live. GME, as you know, it's captured the collective imagination of retail traders across the world. It symbolizes our fight against nefarious actors who fail to deliver as part of their process. This isn't just about making money, it's about holding those accountable, those manipulators that take advantage of the market and leave honest traders in the dust. As Nietzsche said, who fights with monsters should be careful lest he himself becomes a monster. We fight not just for profit, but for integrity and fairness in the markets. But today I want to shine a spotlight on LivePerson, that's the ticker LPSN. It's the company, I believe, with the most potential to revolutionize the market in ways that are both profound and profitable. While GameStop battles against those who fail to deliver, LivePerson takes the fight to those who manipulate prices with sophisticated algorithms. And they're backed by funds that exploit these manipulations. The beauty of LPSN lies in its accessibility and profitability for traders like you. It comes at a much lower cost of entry, and it offers a much higher percentage profit. Imagine you invest $1,000 in LivePerson at around 69 cents and it reaches my target of $69. That's an astonishing return on investment. Your $1,000 would turn into nearly $100,000. And that's not just a pipe dream. It's the result of meticulous analysis and strategic trading. This is the kind of opportunity that is rare and precious, and I believe in it 100%. Through my extensive analysis, I'm confident that LivePerson could soar to those heights of 69 bucks. This isn't just a number pulled from thin air. It's based on meticulous research, deep insights, and skills that few other traders possess. Our community has witnessed the extreme price moves in stocks like COS, driven not by a genuine belief in the underlying company, but instead by traders who exploit our movement for their gain. These traders are not invested in the GME narrative or the broader fight for market integrity. They're opportunists looking to ride our wave, and they're going to leave many people holding the bag. As Mark Twain once wisely noticed, when you find yourself on the side of the majority, it's time to pause and reflect. And I caution you, costs, volatile moves may tempt traders to buy in at extremely high prices, only to see those gains evaporate as the price corrects. It's a classic trap, and I urge you all to stay focused on the long-term strategies that we discuss here on TradeSpotting channel. Now let's get back to LivePerson and why I'm so passionately focused on this company. I believe that our approach to LPSN will make a significant impact on the market and the world around us. I have a track record of identifying and capitalizing on such opportunities, from Carvana to Root and various AI funds. My calls have consistently outperformed, proving that our community's collective wisdom can achieve remarkable results. In fact, aside from Keith Gill, no other live streaming YouTuber has called the same level of success in their moves that I have, and that's a fact. As Churchill once wrote, success is not final, Failure not fatal, it's the courage to continue that counts. And this journey isn't just about trades, it's about defending you, the retail trader, and giving you the tools and skills that you need to succeed. We're in this together, navigating the market. We've come with a blend of passion, knowledge, and strategic thinking. Memes, we've got them too, and when they're used correctly, they're powerful tools. They reflect our collective belief and they amplify our message. As Einstein said, creativity is intelligence having fun. And our creativity is reflected in these memes and messages. They must be harnessed wisely. I sit here before you as someone who's been fighting this fight for decades. Long before Roaring Kitty made the headlines. I've persisted through thick and thin, sometimes alone, sometimes with a community of like-minded individuals by my side. I've continued when others have given up, and I've done so even when it didn't directly benefit me. I walked away from this idea of maintaining a mythic status in order to get closer to you, those who share this journey with us. In the end, we will remember not the words of our enemies, but the silence of our friends. And so I need you to hit that like button, share this video, and talk about these streams on your social media accounts. Choose not to be silent. Above all, our success hinges on technical analysis. This is a way to manage your risk. By focusing on the technicals and a bit of fundamentals, we can navigate the market with confidence and precision. Together, we can achieve great things, standing united against those who would seek to exploit us, and proving that the retail trader is a force to be reckoned with. The fight we're in is like many others in the world today, but with a crucial difference. It's not just a ruse to make you feel like you have a voice, it's the tangible impact of that voice. The proof that you can make a difference and that you're in the right place, in the right trade, with the right people. In life, we're often presented with poor choices, choices that seem pivotal and central to how our countries are run and the opportunities that are left for our children and our legacy. Those choices are often false, designed to limit our potential and to control our outcome. But with LivePerson, we're not confined to somebody else's determinations between various poor options. Instead, we're injecting our own forceful and impactful existence into the mix that matters. We create our own path and we make our own impact. As Ralph Waldo Emerson once said, do not go where the path may lead, go instead where there is no path and leave your own trail. Thank you for joining me today. Let's dive into this deep, deep, dark world of GameStop and LivePerson. And now you're armed with knowledge, passion, and a relentless drive to succeed. And together, we're going to make an impact. We're going to forge that path to a brighter future. Let's get started. Remember, none of this is financial advice. I don't think people should trade like me. I trade very, very dangerously, right on the edge of the precipice. Everybody should make their own decisions in the markets, and the risk we take on is both that danger and that beauty of that market. So trade wisely, stay informed, and check out what we're seeing on price action so far. LPSN up 1.27% at 0.6227. In pre-market, it touched as high as that 0.69 that we spoke about. Costs at 16.15, up 51.93% and touching the prior daily high. We've had a little bit of a market holiday, but we're back now, and so's costs testing those prior highs. Chewy up 0.58%, closing these little gaps left with these volatile price movements where there was very low volatility post-market. GameStop again down at 1.6%, trading at $24 on the nose. It's also back below an important diagonal trend line and testing these horizontals we marked out as significant. So we'll go up now to the 4-hour time frame. I'll also like to comment briefly on Bitcoin. It went through the longest period of consolidation in its history. There's excellent takeaway from Rocky Outcrop's recent video on Wednesday, and he's got quick, easily digestible clips where he talks about the prior bull cycle in Bitcoin when it went through that level of support, the nature of continuation, where it eventually found a bottom, and what that diagonal trend line that we see here means for the potential for this retrace on Bitcoin. If it is that it fails to make its way back above 58, then you might be looking at tests below, and I'd urge you, with everything that I've said today, the most passionate and the most significant message I'll put to you is that you will develop the skills and the tools necessary to make a difference in your own life if you follow Rocky Outcrop's videos. You shouldn't miss one. They're all very short and they're only once a week. Everybody can manage it, and if you do that, you'll be repaying the faith that I put in you. If you don't do that, I'll soon lose patience with you. And that has started already with a number of people who've been watching me recently, have heard my call to watch Rocky, and haven't tuned into those videos. So don't expect me to be investing in you when you don't follow the advice I give you. That's a very clear message now. And if you hear it directly to you, go and watch his video and then tell me the bits you liked about it in the chat box today. Achieve your own redemption. Costs, having come up to these levels, is presenting an extreme danger to everybody who invests in this current trend. It's very, very oversold, overbought here on the daily time frame. Likewise, on the 4-hour, you're overbought. On the 1-hour time frame, you're overbought. Coming up for a further higher high with a lower level on momentum, speaking to even increasing danger at these high prices. 30-minute time frame, similar situation, extremely overbought previously, held a trend line on the RSI, which was also an important Fibonacci level on this move. Take it to the low, to the high, you can see 236, 382, and that 382 being the deepest retracement you would expect under bullish circumstances. So it could continue, but the warning signs are there. Is it the darling that people dream it to be? No. Is the emoji calendar specific to days that prices moved? No, it hasn't been. It's been very wrong, but people's cognitive dissonance and the later movements in price allows people to convince themselves that it's correct. Don't let them convince you. It's a simple and fun way of bonding with fellow investors. I'm not ragging on it. I'm telling you that it's only useful under a certain circumstance and when used under particular means. It is not the be-all and end-all and the answer to everything. If you think that it is, and you fall out with me because of my opinions, don't bother falling out with me. Just don't bother talking about it, or don't bother trying to take advantage of the world-class education that comes across in these shows. Go find your own level somewhere by the sandpit. So, Lipson, 6230, downward sloping resistance on this guy gives us an inverted head and shoulders. There's also a Gartley at the low side of the trend, and if we go to regular hours now, you can see prices pushing up towards that resistance level on that head and shoulders. Got a little bit of a gap that would be closed at 0.60, but price having tested back at previous gaps and back above important Fibonacci levels on that particular retracement, whether we take it from the prior high, which subsequently was followed by, there's that gap closed, followed by a higher low, then you would look to this trying to break 0.6391 during market hours to start convincing price that it has more to run on it. And if you're to take it from the breakdown point, you can see it made it back above an 886, which is a very bullish move and does potentially speak to the likelihood of continuation. If it is that it needs to come back down and test this lower level again, you can see it's 0.58. There's another trend line. It's had a number of touches here. We can extend that all the way back to the previous low, take it along underneath price action. You can see 1, 2, 3 touches. So it's real, it's impacting price at the minute, and it's leading to the potential for a higher low followed by a higher high and continuation of that uptrend. Tesla at 244 has made extreme moves since we talked about the potential entries in at around 140, 146, 148. It's made big moves since the recap and the other idea that people would maybe want to enter in around 169 up to 174. And it's now putting in moves back above a downward sloping resistance. So far, this guy, for people on this show, has done extremely well, moving up 81% on a very large company that itself has got a very strong narrative in the greater markets. This potential broadening wedge then, if it does break, you're looking for 263, then 279, and then prices testing up to 299, which is where at some stage it will go. AMC losing that $5 marker, very important that it holds on to that. If we do measure this from the low to the wick high, you can see that it's come down and tested a golden pocket. It's not gone any further, it left a gap, it closed that and it tried higher again. So far it's failed, and on opening price action here, still during the opening range, so we cannot draw a trend from what we're seeing yet. We can say that there's a little bit of danger presented. If it doesn't pick up soon, it might be a tough end to the week for AMC. Likewise, might be a tough end to the week for GameStop if it doesn't pull up. This itself has a broadening wedge here on the 4-hour time frame. It's also persisting below an important diagonal. That diagonal is also relevant on the weekly time frame from the breakout zone, touching wick lows, catching this third touch in at around June the 24th, which spoke to the validity of that trend line on a weekly time frame, and now it's broken. So even down here on the 15 minutes, you can see that a rejection from that area is significant in this candle, mostly wick, and then that which is body all negative so far in the opening 15 minutes is very negative, 1.68% in the opening 15-minute candle on any stock which has any popularity, speaks to significant sentiment to the downside. So tough start to the day for GameStop as we see costs finding a little bit of resistance at these levels we spoke about down to the 5-minute time frame, and you can see that recently it's put in this doji. If it now reacts with a negative candle that takes it back to close a gap below 1275, you would look between these two highs and say there's horrible amounts of divergence if you go from the body to the wick. If you go from the wick to the wick, there's also divergence, with this being higher on price, and clearly it's way lower on the RSI. Not just is it lower, it's presenting the worst kind of divergence, that swing failure, which suggests prices will come back down and test the most relevant level of support. And if that isn't in at around 11.26, then it's likely around $8.17, and that doesn't really look to me to be a low. It looks instead like a period of continuation was due afterwards, because it itself was consolidation, and so I wouldn't look to that to be significant support. I'd look to the top side of a gap at 581, and if price is crippling down here from a divergent top and a failure swing, then I wouldn't imagine it would be looking to find support at 576, and instead I'd expect it to come back down and fill the gap. And if that's a move from where they are now, then you'd be talking about hitting all the way down 71% retracement in price, which would be a terrible tragedy for retail traders, because it won't be institutions that have been buying all the retail traders or all the large market manipulators trades up here. It'll have been retail traders like yourself who think that this is a shortcut and an easy answer to success, but it isn't. Very often you'll find that those answers that are presented as the easy route to success are in fact hiding even more risk than those trades that seem to stutter and start before they really get going. Lipson now hasn't managed to move back up since it filled that gap. Started the day with such a positive open, come back now, test those previous moves. Still lots to be said for price action today, and you're looking at Tesla now 147, having also put in this similar nature with regards to a failure swing. The benefit to Tesla, and the reason that we could maybe discount some of that negative impact, is the fact that it's managed to make its way back above a very important downward sloping diagonal. That isn't the entirety of the story though, because if we do measure it from its previous peak down to these most recent lows, and that touch of the bottom side of the Broadway wedge, you can see that it's really just come in and tested this important level, that 886, and not managed to recover it or go further than it. Then you've got the fake out move above, the intermittent resistance ahead of you coming back to testing the local high, and that local high back towards that $300. You would say that it's likely it comes in for around there. I think it's slightly closer to 299. So that's what we're looking at today. And that's the first 15, 17, 18 minutes of price action there for us on those important stocks, which are really interesting to lots of different traders in the markets. VThor is making a really extremely strong move, up 10% already. Having tested lower and gone further than many other alts, this strong reaction and this low liquidity is leaving big moves and a lot of money on the table for people who are traders and can manage their risk. You got your bullish divergence here between the body candles, the wick lows coming in at an even more extreme move than you saw across the broader market, and a big reaction then in terms of percentage moves. Still up 10%, but from those lows to these highs, that is a 30% move. So there's a lot of things that you can manage risk on easier than costs that'll deliver you moves that, should you get 3 or 4, will be the same as what people describe as absolute miracles in the market. And you get 3 or 4 of those every week if you stick it out, persist with your teachings, and interact with those social and education opportunities on the Rocky Outcrop Discord. We did cover Bitcoin and did a big analysis of Rocky's video on Wednesday and what it would mean if there is continuation in that breakdown. So if you're on the Discord and you're on the paid side, check out the crypto room and add your own thoughts to that development of Bitcoin. Try and keep it so that it's helpful to other people and explain your thinking at your various stages. That on the paid side there, you are interacting with a number of millionaire traders who've come from nothing really, just a few $1,000s, and turned their account into multiple millions. They don't cry about it, they don't talk about it, they don't boast about it, but they don't spend their time interacting with people who don't try and add value to their own commentary. So try and do that, and you will be aligning yourself with allies who will make a significant difference to your journey. That's one of the big opportunities on Rocky Outcrop's Discord, because it really is a serious resource for some extremely serious people. So that's what we're looking at, as well as Bitcoin's dominance changing. Part of the reason for this is because the alts were such laggards over the past couple of months. When there were down moves in Bitcoin, they were amplified in the alts. When there were moves up in Bitcoin, you didn't see much movement in the alts. And so that Bitcoin dominance picture changed significantly. Now, when Bitcoin corrects, the alts don't have much lower to go in order to reach their significant support levels, and so you have an impact then on that Bitcoin dominance level. And that speaks to potential accumulation across the market and panic driving prices rather than a concerted downtrend in effect. So pay attention to Rocky's video and keep your eye out on what might be happening. This most recent retracement here, 1 hour time frame, you can see that the RSI is pushing up to where it has been previously, price not having made it anywhere near there yet, and so that speaks to, again, great danger that's potentially there if you don't manage your risk. GameStop 1.44%, down to the 1 minute time frame now. Stretch it out and see that you've got this bullish divergence on the most recent lows. It's gone through this important horizontal that we said would have a likely impact, and it's met a downward sloping diagonal across the top of recent price action. If the RSI pulls back above the center line, maintains its own moving average, and starts aiming for the bullish control zone, it would be great to see prices recover 24.24 and then back inside this upward sloping diagonal trend line that we've pointed out is really significant all the way up to the weekly. So these are important elements to look to, and we're now 21 minutes into the market day so far. VThor 8.92%, costs up 43.44% now, and GameStop back 1.5%. Now going to check in with the chat box and see what you guys have been trading and what you have been talking about since we've started. Thanks very much for joining me here in the show today. Zoltan, BMJ Shadow, Kitties, and Neil, great to see you. Hedgie Hunter, as always. Howdy doody AJ, Ishmael, AJ, BMJ, Elena, great to see you. Rod, L. Baker Matthews. Some of you are up very early in the morning to catch the show and the opening of the markets. Great to see you. Nick, Rod Bigelow, Daniel Gallagher, Tubes, Merrick, Sean Deanna, Frozen Fears, great. I'm a Philly 88, suspended. Is this the market halts? Are we talking about market halts? Send the links, what up? Yo, I'm a Philly ED, how are you doing? Good to see you. Fred F, link please. If you're looking for the Discord link, it's on the screen. We don't have any mods with us yet. Oh, Sarah's there. I'll put the link in for us. https:/discord.gg/rockyoutcrop. And this is your link there to the free side of Rocky Outcrop's Discord. Get yourself involved. If you're looking to associate with those millionaires and be on this paid side, then you'll want to go to www.patreon.com/rockyoutcrop, where you also get not just access to the paid side of Discord, but a full suite of indicator tools that will mean that your subscription to things like TradingView can be on lower tiers while still getting the same value. Even better so, because the indicator suite you'll get access to proprietary tools invented by Rocky and myself and updated now so that nobody has anything like them, even those people who've tried to act as the great pretenders. Nobody now in the world has the quality of indicators and the insights that those indicators can bring you. They're not a collection of other indicators. They're not something somebody else has done before, said in a different way. They're a totally new way of trading that's based on the things that Rocky and Outcrop and I learned from collectively 40 years of trading as individuals and with a background in professional companies who taught us this from some of the world's greatest at the time. So you're getting the best possible quality of education here on this YouTube channel. If you think that that's unlikely, it's not. It's just you finally met fate at the point which it's speaking to your destiny and you've actually arrived at somewhere who can properly help you. It may feel like in this sea of nonsense on YouTube that people sell you things that won't really help, that are designed to benefit them. But I am a trader. It's where my money comes from. It's what pays for my life. And these things simply help support the community. If you were to give them away for free, you'd be having a laugh. This is life-changing stuff. Check it out on Rocky Outcrop's Patreon. Hi guys, great introduction today, Jamie. Very inspiring sport. How you doing, Colin Murphy? We've had literally hundreds and hundreds and hundreds of these inspiring intros. And so I desperately appreciate those people I find, like yourself, who fight by my side trying to make a difference, a profound difference in the market, while also collecting a huge profit on their works. So, 23.95, GameStop continues to slip. LPSN holding that 0.609.8 level, and this test of 0.58. If it happens now, you could get 5.7, but probably takes a little moment or two. 0.58 to get right back down and put in that potential higher low. VThor slipping now after that extreme move. GameStop Bitcoin trying to put in higher highs, having previously put in a move towards the bullish control zone here on 1 minute and slip back below the center line. You'd be looking for price to continue the uptrend, or you would start to get concerned about these signatures we're seeing on price. SPY itself, like we said, you'd have to have a real reason to doubt SPY. There's an awful lot of people who suffer under the need for a story in order to see prices go up. The people who do this, they don't rely on price itself being a story, and what a story it is, constantly putting in higher highs, constantly putting in higher lows. We call that an uptrend. It's been doing it for an awful long time now. There's no real fundamental reason that SPY wouldn't continue to do so. Without any significant change on the markets, we can expect the current story to keep proving true, and that's means that we'll continue to see those higher highs and higher lows. VIX then, having tested 12, the area we expected that it would find a little bit of resistance, not having managed to retrace back towards the significant downward sloping trend line here, you can see that it's also matching up with this level below. And if it does slip back down and SPY completely validates everything we've been saying as it continues to do so over the last 3 years, then you'd expect VIX to slip below this important horizontal, which has been in play for a number of months now, and come back down and test this downward sloping support, which again is valid and goes back quite a long time. So if it is that you see VIX slip now, it could be testing back down. If it gets to 8 is the area on VIX where you would see the stock market make absolutely huge moves, and I'll show you what that means now on the weekly time frame on VIX, just by calling out those points in time where it's made it there previously. And you tell me if you remember any significant events. So for example, you've got here in 2019 these touches of 8, right? 2018, 2019, you'll have heard of COVID and that breakdown in the markets where oil went to less than zero. You've got it here back in 2000 and just ahead of the 2008 move, where prices then went on that absolutely rise up to the top side. Go back slightly further, you've got it down here towards those levels in around the end of 1995, and again towards the end of the tech boom. And at these points you've seen huge moves on VIX, probably the biggest moves that you see on this ever. This speaks to the amount of contracts that are out of the money on SPY. And you've seen moves that were in the region of 421%. You've seen it move here from the low to the high up 1000%, and then again most recently post-COVID you saw this move up 900 odd %. So these are the huge moves you get on VIX. This is a very easy ticker to trade. You can also take options on it, and in those senses you can be making extreme amounts of money. You can make generational wealth on just a couple of trades when VIX gets down towards 8. And so if you're waiting for SPY to break down and you're actually betting on that happening, then you're wasting capital that could instead be kept to the side and deployed when you see VIX make it to these low moves. Whether it's that you bet then that SPY will break down, or you subsequently wait and invest in that index, add to it over time and watch your investment grow significantly and make a life-changing amount of money, or whether you trade VIX itself and you take options on this contract and you watch it go up, making generational wealth, not just for you, but so that your children could piss it against the wall and still their children would be born into what feels like infinite money. So huge moves on the stock market are likely coming, but none of that until this trend abates. And it isn't abating anytime soon because there's nothing significant that would cause it to do so. This is a weekly time frame on SPX, S&P 500, and even if it was to come down to these lows and confirm this trend line is real, you'd still only be testing back towards where it was last October and this upward sloping trend line. If you drop down to the 4-hour time frame, you can see that there's another trend line in effect doing something not too drastically different. Taking it from these lows, it's had 3 touches. Another one would likely prove to be support. If we zoom in, you can see that there's also a gap here. This gap would be filled at a test of that trend line, and probably, even if price went that little bit further, would make for an extremely good entry. So that's that gap here. It would be filled on a test of this trend line, and if it was to happen by the 9th of July, that's next week, you could still see it hold 5382 on SPX. So absolutely massive moves potentially coming in the stock market, but ahead of them, you've got a very reliable trend to trade. So things looking good so far on the show. We've got 153 viewers, but only 74 people have hit like, which is extremely demotivating for me as your host here. We've got no contributions, no new members, and nobody really interacting on that side of things. We've got, could you take a quick look at Riley? Hi Zoltan, good to see you. Maybe, if nobody else comes in with any donations to support the show, definitely have a wee look at it. So far so good on what I've been putting out there. 153 viewers, so 25% down on the average we've seen recently. That speaks to the increased damage that these moves on costs and co are doing to the GME narrative. There's hype quickly leaking out of one ticker, and it doesn't go into costs. It leaves a large section of the community disillusioned with the process because they themselves have been playing their trades based along other people's behavior rather than making their own decisions and then staying engaged with price to make the most of all these opportunities. And if they'd been doing that and focusing on themselves, this chat box would be getting bigger and bigger, the show would be getting more and more sustainable, and we'd be going places rather than me watching you guys go backwards. Tracebot, could you take a quick look at Rally? Zoltan, good to see you. My name was I'm cool, I'm really cool. I had to update my gamer tab. I'm Philly AED. Good to meet you, Philly. Good to meet you. I'm so cool. Debating and not pulling the trigger on 0-day meta calls is haunting me. Steph Curry. It's haunting you. Well, that's your greed and your fear of missing out causing you to experience emotional reactions, which will damage your trading. Which, you know, the fact that you would do that would be very negative for your future. Support and show the King Jamie. So and the King Jamie, $4.99 from Nick. Thank you very much, Nick. You're a big part of the community. You support us here. You're over there on Discord. You're a good member of Rocky's channel as well. It's great to see you. Thanks very much for the donation. Appreciate it, buddy. Cheers. Kevin Ha with lots of hit the like button messages, reminding everybody. Bluegill the same. He's too. Thank you very much, folks. Good to see you baking pancakes. Or have they lost their capital to trade and are getting liquidated? Either way, it's because they're following other people's advice rather than making a strategic approach to price, which is what's advertised and spoken about at great detail here on the show. So possibly that's what's happening. Possibly they're drunk, having had a celebratory Independence Day and not yet recovered. It being Friday, maybe they're taking a long weekend. Any of those things could be true, but it speaks to a lack of enthusiasm with regards to their approach to their investments. GameStop, positive reaction now. These lines proving to be extremely significant. That's that donation from Rick and Bacon. Good show already, Tracebot, frickin' legend. Thanks very much for the $5, buddy. I appreciate it. Cheers. Good to see you guys here. Thanks very much for supporting the show. How do I donate to you? Links in the description, buddy. Links in the description. But, you know, your first advice is to get on the course that we outline for your advancement. And that includes the course itself. It's also the Discord, the paid side of Discord, and then supporting the show. You could do it by being a channel member or using the links in the description below. YouTube takes 30% cut off the top of everything, so there's also transaction fees and so on. So much more of your money makes its way to the show if you use the links in the description, but I appreciate that some people are not able to use those for whatever reason. But thank you very much for asking, and Philly. Those links are just below. I hope we can close above $25 today. You're talking either about GameStop or you're talking about Chewy, both of them trading at very similar levels. Market cap of Chewy is 10 billion. Market cap of GameStop is 10 billion. Average volume on GameStop 68 million, average volume on Chewy is 17 million. So more daily activity on GameStop, but very similarly sized companies in terms of their capitalization. Chewy now pushing up 2.24% today. GME up 1.48, a strong recovery from that previous dip, having held these levels, putting inverted head and shoulders and got that bullish divergence between the most recent lows here. You've had a positive reaction. That positive reaction, put in context, it's a 15-second time frame, so not desperate amounts of context, but you had this low and then you had this inverted head and shoulders here, which also came with this lower low on price, but at the same time a higher low in the RSI, which spoke to a move, that measured move taking you to the previous level of resistance up here on the breakout. Found support and then went on and test these previous levels being these highs. So you've now got a higher high, and looking left you can see that it's challenging this macro high. Go up to the 1 minute time frame, you can see that makes sense then. If this is to be a recovery, it would need to defeat this level to be putting in a really higher high, which at that point you would be able to take this, all of this as an uptrend. You draw a line through it and you say it continues on again. This reaction coming in with a higher low speaks to a degree of ambiguity, which means that there is an awful lot of interest at what happens at these levels. So should it break it and then find support potentially at 25.15, it could well be that at that point, you know, you're looking at this sort of move on price action and it goes on again. but this is where you're seeing consternation in price, and after such a strong move to the top side from this reaction, NG, 10 bucks, Nick, thank you very much, appreciated. Now you get the hedgy spank with that one as well. It's random what one shows up, so it's really appreciated. Thank you very much, Nick G. Great show. Just want to show support. Keep it up. Cheers. Cheers very much, Nick G. Thank you very much. Good people watching the show. Same good old people. Support me, and I appreciate it. Thank you so much. Whoop whoop. What's the best way to support? The best possible way to support is that which most benefits you. So taking the course, that's the best way to support. The next best way to support is to be on the paid side of Discord, where you'll be interacting with significant traders who'll notice that commitment and put their effort into helping you. And these are the best ways for you. In terms of like return to me, YouTube takes a cut. So if you are donating, it's to use the links in the description with Streamlabs, and then an ongoing commitment by being a channel member is also really appreciated, and you can choose various tiers to be on. And then there's also the YouTube super chat function, or super thanks if you're watching after a video. And all of these things help, all of them. The best ways are the ways that also help you. And so that's with those avenues via the course and the premium side of Discord. You'll get the best possible help that I can provide if you choose either of those, along with the help of all the other people who see that as a meaningful decision. But in terms of just watching right now and donating right now, the Streamlabs link below is probably the best return there. TradeSpot and GME making a move. Nana, good to see you. Yes, this GME we've got up at the minute. I'm pretty sure Kevin will have been talking about GameStop when he was speaking to these current moves in price. I see AMC's back above 5 and holding that level. GameStop on the 1 minute time frame was where you were getting a clear picture of that previous high. Whoa. This is the previous high. I'll keep that marked out because that's what we're going through at the minute. This is this resistance level above. If you break through that, it'd be very significant. This is a support level that you would ideally like to see GameStop hold now that it recovered that level. And then subsequently, it could, of course, start pinging around and bouncing up again. It's the end of the week, so significance then for anybody trading GameStop because of this picture on the open interest when it loads, if it ever does load. Sometimes it has a problem. I'm not sure what the crapping problem is with this website. But everybody, now this is a feature of the most recent generation. They're going to grow up with these crazy spinning circles for so many different websites. I don't trust any of them. It doesn't mean anything. It's going round and round in circles, getting nowhere. Well, tinnitus. I can make the same point on this chart. If the tinnitus would stop, I'd be able to hear myself think. Chris Ruff, 20 bucks, boom. Why donate? Because you deserve it, that's why. Any potential for a start of a gamma ramp today, early next week? How would you go about seeing one if there is one set up for it? Yo, Chris, one of the ways that I would look to would be, first off, to be aware of these nodes, right? Open interest is what leads to the gamma ramp. Open interest is all those currently outstanding trades that are derivatives from the underlying. So in GameStop, you're looking at options, but in other assets, there are other instruments. In GameStop then, open interest is the options contracts on the chain. And you'd be looking at these and measuring the total open interest at these nodes.
Come at me with an imaginary knife.
That's Chris Donation there showing up. Thank you so much. I appreciate it, mate.
That's how it's done.
That's how it's done.
Who's next?
So, how the gamma ramp is done is when you see the nodes here and the volume of these nodes. So you've got 1,696 open interests short. You've got 7,394 long, which speaks to 7 million trades long. So 7 million trades then, if they were all exercised, would mean that of the daily volume on GameStop, which is 68 million, 10% of them would be needed just to cover that open interest exercising. And if it was then that the market makers need to go and acquire those 10 million shares, which is very often true because market makers in and of the instance of their trade don't necessarily always locate that other side of it, which is why we have these failures to deliver. Failures to deliver occur when a trade is not settled within the settlement period. The settlement period is 1 day. So that open interest, should it be exercised, will require 10% of the daily trading volume, the average daily trading volume, in order to locate and then provide shares to meet that settlement date. If it doesn't, it turns into a failure to deliver, and after a while those failures to deliver can build up. In order to meet the obligations of holding a failure to deliver, the other side of the trade must post the collateral, that is the amount that those shares would cost if they were to buy them in the open market, and they have to pay the cost to borrow, that is the money it costs to loan those shares, even though they haven't actually loaned them. So if it is that those failures to deliver need to be closed out, then every time there's an addition from the open interest that turns into a failure to deliver because it fails to meet the settlement period, then it increases the potential liability and it heightens that need to close. And when that exceeds a certain level, i.e. beyond the number of days it would take, like that's called the days to close, and this is due to if you have a high number of failures to deliver or you have a high outstanding short position, then how many days volume is needed in order, if you bought every single available share that day, how many days would you need to buy every single share in order to close your position? And the longer this figure, meaning the more days that you would need to buy every single share available, speaks to an increasing danger on the short side, because it's very unlikely that you're going to be able to acquire every share that's available that day without impacting price and pushing it higher, therefore making your decision the next day even more expensive. And so this process of closing out failures to deliver can lead to an increase in velocity in the price, and that's the short side buying up shares in order to close positions which they would have taken much sooner, much more previously, and then leaving themselves a problem. The problem then gets bigger in their attempt to solve the problem, and that's why you see memes like, stop hitting yourself, hedge fund, stop hitting yourself, and it's like, lo and behold, they could not stop hitting themselves because retail wouldn't give up their shares, right? So the hedge fund's hitting themselves in the face and doing themselves the damage. Donating for cat treats. Eric, very much appreciated, sir. Thank you.
That's how it's done.
Boom. That is how it's done. Cheers, Eric. Cheers, Chris. So you want to cause an issue with these days to cover by making it as many days as possible, which presents a huge liability to the short side. You want that to come concurrently with a high rate of failure to deliver, so that these companies have to post the collateral anyway and are so then incentivized to close out those trades. The closing out of those trades pushes price higher, and then when it pushes higher, it makes it go from this node where you've got 7 million contracts up to this node where you've got 8 million contracts. And then along with all those previous problems they've caused themselves, and lo and behold, they wouldn't stop hitting themselves, they then get added on another 8 million, which they then have to go out and satisfy. That acquisition to satisfy that settlement or else close out those failures to deliver means that there's even less shares available to borrow. That means that days to cover increases even more, the liability gets bigger, the collateral gets bigger, and these people are really on the thick end of the stick at this point. And so this is how the gamma ramp happens, and it could just be in the period of 1 week. It could also be that you're talking about what happens next week, where the same thing happens again. In at around $30, you've got 31 million shares, right? That's 31 million. We were talking 7 and we were talking 8. There's 24 million up at around that price of $25. If it gets to 30, that's 31 million. If it gets up to 40, that's another 20 million. And so this problem that started at 7 million shares, which they didn't satisfy because they were afraid that their actions would push price higher, causing it to be a cycle they couldn't stop, then accelerates to the point where they're now facing extremely large losses. And then those people are obviously caught between a rock and a hard place. They've got nowhere to go other than to close. And every time they try to meet the obligations from these outstanding open interest contracts, there's 20 million at 40, there's another 19.2 million at 50. It could go to crazy, crazy levels. Now, we're not saying that you're going to see GameStop at 125 right now, though there are reasons on the chart that suggest it could make it there in extreme moves. Now, there's another 46 million shares. And so this becomes a potentially never-ending process for the short side of the trade. And that's why we say when we look at the charts and you're trying to get price to break through these levels of resistance, that it's not the long side of the contracts, the bulls buying shares at resistance. It's the short side of the trade, those who believe it's going down, the bears, who end up buying at what is resistance and then causing their previous selling pressure, which was having that downward impact on price, to all flip long. All of those closes involve buying, and it's those buys from the short side that push price up through resistance. So bulls buy at support, bears sell at resistance. When they fail to deliver, when they fail to meet the settlement period, or when they get themselves caught up in a high short interest stock, then that triggers further moves, which causes even more extreme versions of the same ratios. And as that happens over and over and over again, it increases the gamma, and that's why we call it a gamma ramp. So what you're really looking for is price to close out above important levels of resistance on important days. And today is the first of those. If you're talking about this being a gamma ramp, you'd say that the first level to meet is 25 bucks. Even better if it touches 30. Now, there's lots of other open interest contracts at higher strike prices, but much of the open interest is hedged rather than simply directional trades. So you're talking about 25 bucks and 30 bucks. So if you go to the 4-hour time frame on GameStop and put that in context, you can see this downward sloping resistance across the top of price. And if it is that price is to make it to that resistance level, which would be a natural area for price to slow down at a third touch of this important trend line across the top of those most recent peaks, then you'd be back above 30 bucks and you'd be kicking off that first leg of a potential gamma ramp, which would be very exciting. You don't need to make it there though. In order to capture liquidity for the long side and keep the shorts on the hook, you only need to be above 25. Currently, prices on GameStop trading at 24.38. We're only an hour, not even 50 minutes or so, into the start of today, Friday. So if you see the opening range close out positive, that would suggest that even more danger for the short side of the trades. If you see it by lunchtime, closing in at around 25, that would speak to even more danger. All of this danger adds up and can be quantified by the short side and will impact their decision on whether to close or not. So if you do hold out and test those $25 levels close towards the end of lunch, then for the remainder of the day, everybody be aware that the narrative over the weekend will be maybe the gamma ramp has started. They'll be weary then that retail traders will open up their apps or their laptops on Monday and just hit buy because they themselves believe in this continued velocity. Price is self-fulfilling. Price drives price. And everybody on the other side of the trade is aware that the direction of price. So if it starts accelerating towards them at speed, like a bus, some of them will be paralyzed. They'll be caught in the middle of the road. The shock and the horror of the moment will freeze them and make it impossible for them to actually act, which means that they'll get run over by the process. You know, they'll get run over and squished, and the wheels on the bus go round and round. And you can kind of push your granny off a bus, but you can definitely push hedge funds off the bus. So bus will run over them. There'll be a number of people then on that short side of the trade, cognizant of the potential for things to get even worse, because that'd be in line with how things have been happening previously. They'd be aware of the fact that this trend could accelerate against them, and the bus isn't going to brake or slow down. Likely it's going to speed up to make sure it makes it over any resistance they cause. they'd want to get out of the way, and a lot of people will try to get out of the way, and the only way they can do that is by buying, which is like them putting their foot down on the accelerator pedal and helping the guy with the stick go up another level so that it gets even more efficient at the speeds it's currently traveling, which speaks to continuation and further acceleration. So they can push the bus and push the price up through the gears. In order to get there, it needs to start closing out back above 25. Doing that would take it back within this symmetrical triangle you see. And if price does make it back in there, having tested support, then there are very few areas it's likely to slow down. If that bus is slowing down, if that price is slowing down, it's akin to going round a corner. When you're going round a corner, you drop down in a second, you aim for the apex and you accelerate on the way out. So the slowing down might happen around 27. That would also be the top side of this broadening wedge, and we could anticipate price slowing there to turn a corner. That might not be turning direction, and if it does keep going, then you'd be looking for it back up at above 30. You could test 30, it would be a 382 from the previous oscillation, so it could be that the trend before is still in motion, and it wouldn't be necessarily the area where price exploded to the top side, because there is still a chance that it could go down from there. That's because if you're a short position, and you're looking to add to your short position because you've got a lot of belief in your hypothesis, or because that's the remaining liquidity you have to change your own entry, to bring your entry up on the short side so you can later get out and rescue your capital, then 30 is the dollar value where that'll happen. And so it's not attractive, and it doesn't make sense, and it's not a smart idea for the short side of the trade to interact with price between or below 25. Above 25, at that 25 level, that's okay. But then if it's at 26, not a smart idea to add. 27, likewise, it's at this 236, so there is a little bit of a reason, but it's not a very good one. It's top of broadening range. That also means it might happen there, but you'd need to see a weakness in momentum in order to take that trade, and it's very unlikely a sophisticated short side trader would take it. It's much more likely that a desperate retail trader would be taking profit at those areas. Now I say desperate not because of their own poor mentality, but simply due to the expiry today, and they're not going to want to pay for the premium on a contract and then lose all that in the exercise, especially when the option chain is so high. So it may well be that in at around 25 you see some of these contracts closing out. They'd be terminated in that someone on the short side of the trade could match it up with theirs, close out both positions. That wouldn't be exercised, instead it would be terminated. And it may well be that's what happens, because that's what's happening to the majority of option contracts on the majority of stocks all of the time since the beginning of these instruments. So we can't rely on exercise in driving price, and we can't rely on all 7 million of these contracts or all 8 million of these actually being exercised, because that would be extremely unlikely, and the liquidity required to do that would be extremely high and not commonly found in the retail traders. So these are the areas, these are the reasons, and these are the distinctive points on the chart, partly due to that idea of a gamma ramp and hundreds of other potential strategies and ways that price could be pushed higher, or that it could be that we're looking to see positive moves on GameStop. So it's an answer to Chris's question about the gamma ramp. It's also folding in the technical analysis we do on the channel, why, where, and how it is that price reacts at certain levels. And then for your own takeaway, because you can't cause a gamma ramp, we don't act in coordination, and nothing we're doing here is in concert. What you might be thinking is for your own trading, that the risk management levels, especially with Friday today, end of the week, and those contracts closing out for this expiry, that managing your risk means following price with a stop, having a clear take profit target for a certain degree of your shares, and if it's option contracts, a lot of people exercising them at these areas in order to lock in those current profits. If you roll your contracts, that is to close the ones you've got and get the ones for subsequent weeks, then you'd still be closing out those trades. You'd have to be aware that those option contracts would be terminated, not exercised, and in that moment you'd be causing a stickiness over price as opposed to leading to that gamma ramp. So it may well be that the sensible option is not to roll, but instead close and then reassess, and that's a takeaway. It's also true to say that if you're trading shares only and these prices are back above your entry, then it would be quite normal and natural for price bounce between support and resistance. So should it make it in, coming back, finding a little bit of resistance? Definitely possible. It's also true to say that we have fallen out of this diagonal, so there's no guarantee it'll hold. And we're also in this broadening wedge, which is price oscillating higher to higher highs, lower to lower lows, but more or less going sideways and not breaking those important levels of support or resistance that we saw previously. And so it may well be that this broadening wedge is extended until such times as it's meeting these levels that price was previously at. Putting all that in context, you can see that the apex of that symmetrical triangle comes in at around 28, and that's also going to be relevant for people now that price has made it so far into that symmetrical and may be approaching those important crux points with regards to support and resistance. So managing your risk and using the technicals to do so is a great way of trading. It's in fact the best and most likely way to turn you into a successful trader, because there is no way to manage risk other than using price. The best way of quantifying and visualizing price is on a price chart, because everything that ever happens to a stock, every possible manipulation, every possible fundamental consideration, every other trader in the world, every option contract, every futures, every single buy and sell, every possible sentimental implication, every single future move on price, everything that's ever happened to that stock before is all spoken in its most clearest form, in its most digestible way, in a price chart. And anything you do on that price chart to analyze price will be technical analysis, and that's why technical analysis is king. Those who don't respect it get hammered by it. If you're not managing risk, then you're not properly quantifying opportunities, because opportunities are compared to each other in terms of their cost, not in terms of their reward, because rewards are not guaranteed. You've got to ask the Lord above for the wisdom to control those things you can't, and to not worry about those things you can't. You can control your own cost of trading. You can't control the future of price, and that's why the best way to trade is using technical analysis. The only way that works out over time is technical analysis. Anybody who ever tells you any different either isn't a successful trader, or is soon going to lose all their money, or is just making shit up because they want to seem smart on the internet. The answer, my friends, is there on the price chart. So positive moves in price so far. GameStop still holding 24.42 down to the 1 minute time frame. Put that move in context. Came up, touched that level, didn't hold the important support, back at that diagonal trend line. Chewy 24.87, putting in a similar oscillation but not dropping off as quickly. But we spoke about how the volume is much lower, a third of what we'd see or less on GameStop's average. And so that panicked reaction, that profit taking, those eagerness to short, there won't be quite as amplified an answer or message there. Costs at 14.42, struggling here, putting in touches of bearish divergence, retracing back down again to previous lows, bouncing on the idea of bullish reversal divergence, but failing to put in higher highs because it's got cat vomit all over it. Resistance at the center line of the RSI there is brutal and bad news. LPSN at 0.6290, making a big impact again, up 2.29%. And if it does continue, then you've got lots of obvious areas to aim for. It's like Risk Krispies, lots of snap, crackle and pop. You get big gaps in air in the lower time frames. But here you can see that tightening of price action here. You had one enthusiastic move to the top side. That didn't break these macro highs and this overall trend, but it did speak to positive enthusiasm behind the price. Come back down, W bottom, pushing up into the bullish control zone now and meeting that resistance level twice in such a short period of time. It's back at resistance. There's absolutely no way you can say that this thing touched resistance. Oh my goodness. Computer's like trying to take over from me here. There's no way you could say that this thing came back to support, having touched resistance here this morning. It's simply gone on back again to test resistance again. And those repeated tests of resistance, they call it, that creates this brittleness in that level of resistance. So there's a degree of brittleness creeping in there now. It's definitely not getting stronger in the broken places. Completely the opposite, shout out Sarah in the chat box. So if it is that breaks through these levels, then you would look to find it as support, because people would see it's been tested significantly, it broke definitively, and now it makes a good place to put in entries or to manage risk. And so a lot of people will be looking to go long from this area should it break. which speaks to the enthusiasm likely coming on this. If it does pull back, we've got those areas below to look to and this tightening range of price action, though everybody and their dog can see the fact that this exists now, and so who needs to wait for the inevitable, right? It'll be more costly if you're wrong, and you'd make more money if you were right, so people will just take advantage of that obvious potential now, especially when they've got clear ways to manage risk, which they have from that exact manifestation of the problem itself. So lots of positive potential moves there. Costs, again, trying to hold this, but important level of support now broken. A clear rejection on momentum here, and it's quickly losing its hype and enthusiasm. What was driving the price of cost? Was it because it's such a fantastic company? No, not at all, not at all. I mean, here's the 4-hour time frame, put it in context. It's been shit for a long time. Why was this so positive here? Well, because it hooked on to the GameStop narrative back then. It got a lot of people interested in it who thought maybe this was an easy way to make money. They learned their lesson, very much so. And this is a problem with being a gambler, is that you will, instead of actually changing your attitude and approach to price, you'll instead just wait until you can gamble again and lose your money along with your family and your dignity. And so you need to, instead of copying people or looking for shortcuts, you need to make real rational decisions based on a process that can be iteratively improved so that you get better and better at doing this over time and have a strategic plan for taking advantage of properly good value opportunities. That's speaking to deep value then. So if you want a really big move on price, you need to find a company that is extremely undervalued. That is not Cost. Cost is not extremely undervalued. This thing's currently got a market cap of 136 million. It's got a very small ownership share from large ownership share from very small group of people. It's got extremely suspicious behavior on it. The nature of the moves, the way that things were posted on Superstonk and then the subsequent move in price is much more likely to be people exploiting the GME narrative than it is to be GME or any serious GME traders really believing in the value of this company. And so when the overall market sees that imbalance, that inefficiency in price, then the hypothesis is that the market will recalibrate. There are always bigger players out there and they love free money. So if they can just use the weight of their own impact, if they can trade this, and because they'd be going short, they'll be taking so much volume, they'll be putting in a very strong ceiling on price so that it can't go above there, so that anybody who buys it up to there will only be facilitating their best value entries on a short position. They'll sit on that level. They'll do it at various places, liquidate it if they're trading on margin accounts, and they'll take absolute advantage by completely rinsing them all the way down. And it would be that the efficient market hypothesis says that all those people who could do that got a phone call this morning. It told them, this is your opportunity. It cost you very little. It's exactly what your account is built for. Here's the way to do it. And they'll have spoken to someone like me who advised them on the best way to make money without spending anything that they couldn't afford to lose, presenting little to no risk to them and pushing the price down. Now, it's impossible to cause a gamma ramp on Cost because there is no open interest, because it's only traded in terms of the shares. It's a very small, narrow way that you can possibly impact price, and it's much easier to have a negative impact on this ticker because it suffers under the weight of its own gravity so extremely, because there's really dangerous volatility inherent in a stock that doesn't have option contracts. And so this thing, should it collapse, will cost so many people so much money, and they'll not be able to do anything because they're trapped in their own cognitive dissonance along with their fear and their greed. Having seen it moved once and then seen it move twice, they'll take that as the potential for them to be right and it could be happening again, when in actual fact that second move was simply confirmation of the fact that people can exploit the long side of this and will do, and they'll continue to do so. Now it's down 30%, losing $14 and getting absolutely hammered because, let's face it, it's a piece of shit, right? I don't really give a shit what you think of their headphones. They are very much a headphone company. If you find yourself in a conversation with somebody saying, yeah, but they make microphones too, then that person is just trying to justify the validity of the emoji calendar, which itself was proved wrong when Chewy moved on a date that wasn't part of everybody's speculation due to the layout in the calendar. So while it may be that emoji calendar does speak to truth, the truth is that people trade off the speculation they see within it rather than it speaking to any manifest truth that's born before it was looked at. It's only that people look at it and then act on it that cause it to have any validity. That validity then, the moves in price are based exclusively on these type of things. The meme itself didn't contain any inherent truths, and that means that it'll collapse. Now, if you also look at that emoji calendar and combine it with the idea of a Kansas City shuffle, the Kansas City shuffle being the idea that you can trick traders, you can trick anybody by showing them that they're being tricked, giving them that suspicion leads them to take an alternative route. That alternative route is actually the trap, and then they walk into it. Means that if you're presented with a Kansas City shuffle, there is no effective way to counter it other than standing still and watching that trick itself cannot impact you if you don't interact with it. That's the only way to behave when you're presented with that type of logical approach, is to fight it with your own logic. And so if you're caught up in a stock that looks like it's going to move down and wreck you, then think about how if you had just put your dreams in a plan of action that happens in future over a period of expiries, through a strategic approach to how you'll make the most of your own skills, then eventually one day you will make it, especially if you stick with me and these good people in the chat box. If you stick with us, we'll make sure to take you on to success. We'll do our absolute best by you, and that effort that we'll make on your behalf is worth infinite amounts of emoji calendars, is worth every possible tweet of a dog picture you'll ever see in your life. And it's people like me fighting this good fight that are trying to do good things for the market, that are trying to increase your ability as traders, that are trying to improve the efficiency of your actions, and so that when you meet the markets, they themselves improve in their efficiency, and so that the good guys win. And it's true to say that there are certain people, those people at the very top of the community, who, while they do include nods to this channel in their own memes, while they do point out the good work we're doing, also do things that without further clarification do harm good people. And my philosophy is do no harm first. With my own trading and with the way I interact with the chat box here in the community, it definitely shaves the big 80% off the potential audience. If I hadn't been communicating these things so vociferously for the last 36, 48 months, then I'm sure there would be a much, much bigger audience. You know, there's videos I put out there that don't include these wise words to the retail traders that get 16 million, 18 million views on Twitter and so on. But when I talk about these things, about how you should be cautious, about how your future is in your own hands and you could still fuck it up if you don't pay attention to the proper methods for moving price and your own behavior on the stock market, then those videos are likely to be lucky if they get 1,000 views. And that's because there's no virality in telling people that you still have to do the hard work, that work is 10 times harder than you would have conceptualized it to be. It'll take you 10 times longer than you could have ever planned for it taking you, and that it will be a difficult road, but it's still 100% worth it. That causes people to tune out and want to go and watch other people who tell them that some other trader's going to come in and make it possible for you. That's not going to happen. Those traders that could make it happen for you are much more likely and much more incentivized to exploit you and take from you. It doesn't matter how they frame it, how they talk to you, or the sense of a relationship you have with them, they will be exploiting you. And whereas the traders who actually can help you, they're not going to push the price around for you. They're going to push you into learning how to do it properly, and they're found on the Rocky Outcrop Discord via his Patreon. They're in the important chat boxes there. They're having conversations with each other. They're making shitloads of money. I know because they tell me all the time and I try and help them as well. And they make huge moves, and they're the next generation. They're the people that are going to be running the firms. Some of them work at big firms. They've got anonymous names, so they can't tell you who they really are. And they did previously tell their real name, but not anymore because now they've got these jobs. They got the jobs by showing these people the record that they'd put in over the past 12 or 24 months. That record, they developed the skills that made it possible to get that experience, and all they need to do to get these huge jobs is to walk in the front door and show them their results. And that's the sort of people you want to be with, because they'll push you to being like them. They will not take advantage of you, because you'll be aligning yourself with them and making good decisions under the banner of Rocky Outcrop and Tradespotting, because we've been doing this for so long that people know that we're legit now. And this is still can't manage to capture $14 again. It's coming back down here and not falling into the bearish control zone. It is managing to hold just above this gap close, which would be in at around 12.60. That's a huge percentage move from here to there, and it speaks to incredible danger on this thing. If it does move up again, people would be asking why that is. It's got higher highs, it's got higher lows, it's very possible. The momentum coming back down to these levels does give it the chance to start boosting off again. That boosting off again is an area for you to manage your risk at. I'm not saying that you can't trade this thing, it's bad, though there are better things to trade, and this has great potential opportunity cost. It might actually be that the best idea is that you stay the fuck away from it, but if you do want to interact and there's no putting you off, then you're looking for the important horizontals. And while I've got these lines on, I'll move them together and show you where it is at the minute. These are the areas where you'd be looking for bounces. The top guy, you want to be managing your risk immediately below that. This most recent, the lower guy here at 11.14, you'd want, if you put your entry there, you want your stop immediately below that, so that you're not paying shitloads of money for the cost of that trade. And that means that your cost is low. Then relative to that, your reward is a much higher ratio, and it's that ratio that gives you the safety of being able to commit capital to a trade. So if you're trading something like cost, a lot of people will just be approaching it with no fucking idea how much they should put in the thing. And that's because they don't have the strategy for working out how much it's going to cost them should it go wrong. If you can work that out, then you can see how much capital you can put in, and you can compare that to what you're prepared to lose. What you're prepared to lose isn't in your entire life, it's over any significant period, maybe just a single day trading on the markets. And so if any one day you have the amount that you're prepared to lose, then you'll be able to work out how much you're willing to put in any given trade. If your amount you're willing to work out lose in any given day must work within your overall success rate, right? Because you're not going to keep losing a third of what you can possibly invest in trades every single day, because then you'll only be able to trade for 3 days, and you want to be able to do this for a long time. And so on the course, we've got a guide that, as a standard template, as a boilerplate example for professional traders and how they manage that process. And we've got ways in which you would be able to adapt it to your style and personality based off the edges that you develop. Those edges themselves, we give you the way of thinking that will allow you to develop your own edge that matches your personality. And we put you through drills. Drills, real, actual, facing the market, interacting with price, getting good at the technique and the mechanisms that are necessary to be a good trader. And so that course isn't just technical analysis, it's also about how you meet the markets, how the rubber meets the road, how the bullet meets the bone. And now it's there at $13.93, again losing that $14 target, even when it does have a chance to boost. It's only given it up to the point where a lot of people are getting out of the trade, because let's face it, it's a piece of shit and people are trading it for fucking stupid reasons. And don't come crying to me if you do get caught in a cost trade, because I've told you where to manage your risk and it's stupid, like I say, very stupid. Chewy up 2.78%, holding $24, but losing the center line there on the 1 minute on the RSI, so I'm not very positive about that. GameStop 24.49, it is the beast that makes the moves, that creates the attention for all these other trades to start hijacking that opportunity and riding the wave of GME's community. It itself, GME, then suffers from the fact that a lot of the money that would have been going there from traders who believed in it feel confused or conflicted, especially when they see Roaring Kitty's position meeting the equivalent dollar value that he had in GameStop previously. They didn't think of this idea of the Kansas City shuffle and the fact that do nothing until you understand more about that particular scenario is the only response in those dangerous times. So do not think that you're going to make money by following Roaring Kitty into Chewy. Don't then place it in the greater context of what might be happening with GameStop's M&A activity. Instead, focus on when would be a good time for GameStop to perform that M&A activity. And the answer is when the cost of money changes. There it goes with the proper boost now. When the cost of money changes so that it makes sense for a business to invest in expansion because they've got stability, then they can have confidence in the value of their investments. And when they do that, and they've not got this other opportunity on the side, which is just free passive risk by investing in bonds, we're getting a return by doing nothing. Their actual actions and work needs to be rewarded, and its reward is measured against the return from a passive investment. So when that value of a passive investment drops, then it doesn't even need to make more money to be in business. It could be the same business opportunity, but relatively it makes much more sense to do it when the price of that passive investment, when the return from it drops. Why will it drop? Because the potential for rates to be cut. Are rates going to be cut? Very, very nearly definitely. I talked about that presentation of false choices, and yesterday here in Britain we got one with Keir Starmer, who illegally prosecuted people he knew to be innocent and then got a job in government and has been rewarded for his previous bad behaviour by the powers that be, putting him in a position which he cannot lose, and he himself does not deserve the role he's got, nor does his party, and nor does our country or the people who live here deserve to suffer under the massive incompetence that's coming. But people would tell you it's better than those who just left office. They themselves were incredibly incompetent, put up the price of everybody's mortgages with their own incompetence, and they continue to persist in the background, impacting everybody's decisions with that false choice that everyone's presented with here, with a ridiculously shitty government, with ridiculously incompetent people in charge, put there by people who can put people there, not by their own volition. And so this disgusting, fucked up, shitty country run by fucked up, stupid fucking people now takes this lead where people think they're going to change something for me, they're going to make it easier for me, and they aren't. They aren't at all. They're going to do absolutely nothing of the sort. A big part of the vote was just sticking it to the other guy, and that's what's happening in America, where you too have been presented with absolutely shitty choices. I actually think that Joe Biden is a nice guy, all of them that's left there. I think Donald Trump has a very dynamic personality, but he doesn't use it for the powers of good. And those two choices that you're being presented with are absolutely shite. Right? Now, you're not allowed to talk about this in the chat box. I only am allowed to talk about this because you might be wrong and annoy other people, and I'm allowed to annoy people because I'm right. They are shitty choices. It's a massive joke. It's a false dichotomy. You're not really getting any option. It's all the same outcome. It's trying to control the outcome by presenting you these shitty choices in the first place. We're suffering from it over here. You're suffering it from it over there. And there's only one escape, and that escape is by injecting your own actual life force into the mix. It's by making a difference on things that actually impact the bottom line of these people. And that's two things that you can do it with now are GameStop and Lisbon at 0.63, putting in an uptrend that defies all gravity, an uptrend that defies all the expectations of those people that push price around, who people who wanted you and everybody else to not know about what could be happening here, so that should it move, their strategic funds, their algorithms could be the ones that benefit from what should be your God-given fucking destiny, again being robbed from you, just like it was from your parents, just like it was from their parents, just like it will be from all the other shitty wars that people are sent to fight other people's battles, because one old man falls out with some other fucking old man, and both of them want more money, and they'll send you and everyone you care for to death in order to make an extra couple of bob. These fucking bastards. You can fight back against them, and you can not get caught up in their shitty games on things like cost, which broke that support level and is now pushed down to that first area of opportunity and had a reaction like we said it would. We'll give you the skills and tools. The skills and tools are things they cannot hide from. They cannot change the facts. They do not have the ability. In fact, they use these things to manipulate you. And you want to know about those algorithms? It's based on the skills and tools I teach. And I know this because I was there when they were coming up with the computer programs, when they were asking the traders the ways to quantify these things. I was there. I saw how it worked. I know what they are, and I don't need a fucking computer to work it out. I see it all day, every day. And it's people like me, and it's not just me, but it's people like me who know these truths, who try to help you. It may be that they're just trying to help with the odd person make a little bit of money. And the little distinction you get here is that I'll never stop. That I know exactly where I'm going, and it's right to the heart of the bastards. It's right to the heart of darkness. And there, when I get there, I'll mutiny those bastards, and we'll all be here to watch it happen. 1 minute on cost with a positive reaction from that support line. It's bounced off it twice, having bounced off it and fell into the bearish control zone, not putting in bullish reversal divergence, suggests that it's actually screwed. I'd be quick to take profit and get the shit in hell out of this thing, because the next place it would go to is 11 spot 11, and if that doesn't hold, then it's probably going all the way down to $2 at some point. So stay away from that shit unless you've got a really strong strategic approach and a plan for trading it. This guy's met that horizontal that we spoke about there as being a potential area for the phase of price to change. It's come up and tested that resistance, the 2 that we marked in as important, found support in that diagonal trend line on the 1 minute time frame, looking to make a move again. So what did we miss out in the chat box since those most recent messages? I can't remember what we started me onto that thing, but it was probably the bastards fucking me over in 2008. That was probably the genesis of it. Yo, running degen. What did we say here then? Go back to where I saw the last message. It was from Eric, donating for cat treats. Good to see you, Eric. Thanks. 171 people watching. Hit the like button. That's KT in chat box. He's a long-standing member of the show. He's an incredibly nice guy. He tries his absolute best to help people all hours of the day when he's interacting. He's a particular type of communication style that a lot of people will really appreciate. And so if you see him around, give him a shout. He'd obviously try to help you, and he's a super nice guy. He also sells the best coffee beans in the entire universe. The best beans in the world. Kindness Coffee Company. Get in touch with KT. KT, feel free to share your contact details there in the chat box if anyone wants to get in touch with you. And you'll be able to take advantage of the best possible beans, the best possible coffee, and it'll keep you alive for longer, up for longer, doing more damage to the bastards. TraceBot, this might quite simply be the most effective clip to let your friends and family watch to understand what's going on. Barry Barabuspa. Barry Basaba. Basuba. Barry Basuba. Barry Basuba. Yeah, Barry, it might be a good clip. I rely on you guys helping me in that way. Thanks very much. After I do the show today, maybe I'll make a wee clip of it if nobody else is able to and put it out there. But it's all about whether the information is disseminated and shared, and it's not very easy for me to do it from this position because there are the powers that be that don't particularly want it to make it out there. It's very difficult for me to never swear or perhaps speak in tones that the algorithm doesn't like, and therefore reaching certain people, going beyond those barriers of the algorithm. That's such a difficult challenge. It's such a hard, and it's meant to be hard to make its way out there. I mean, obviously this is the sort of stuff that's very viral should it make its way beyond those mountains. The challenge of getting it out there is there by design. And it's unusual because these sort of platforms themselves live for and exist on the promise of virality. And so you'd have to wonder why it is that an algorithm would be constructed so that this sort of content doesn't do the purposes that these platforms that host the algorithm are extensively for. Why would that be? Is it because people would be so offended by me saying what a bunch of fucking dickheads that we're fighting against? No, it's because those dickheads are the people who fund these companies. They're their biggest investors. They hold the most amount of their shares. They use those shares as collateral themselves for their own nefarious activities. So if there is a broker dealer out there who gets themselves in the shitter and needs to borrow shares from somewhere at the last minute, then they'll get them from these massive holders of these companies who will allow them to borrow them in order to close out their failures to deliver. They borrow more shares to close out previous failures to deliver. It's called kiting. I myself have sat in a seat in front of a computer and closed out trades in that exact method, knowing at the time that what I was doing was probably hurting somebody, until the point where I couldn't fucking stand it anymore. And my life forked off at that moment. And that's why I'm here with you now. Because I was fucking shown what it was that we were having to do. And saw the fucking awfulness. Stood in the fucking chicken factory, stripping the chicken, ripping its guts out, hanging it on the hook and watching it get bathed in chlorine. Knowing it was going to be fed to people who couldn't possibly afford to eat something that would have been grown better. Knowing that was going to end their life, cause them fucking intense health problems. And all the while they'll be sold the message that it was a good idea to have that chicken and eat it. And I couldn't handle it anymore, because nobody who's in the right mind can. It'll either strip away all humanity left in you and make you just like one of the bastards, or you'll stand up and do something about it, and very few people do. How are we talking about this again? Tracebond, thanks very much, Barry Busby. As long as you're a live person. Jamie, would you rub cost shares on your belly just because? Panther of all hawk tas. That hawk tas stuff really took off, didn't it? It's pretty funny that. What was it? Rub it on my belly. I've got a very, very flat belly. I'm not sure if it would create that staticity you're looking for. But I'll tell you what, if I ever get my hands on a share of COS, which I did previously when it was exciting, and it's not now. Now it's a fucking manipulated piece of shit. When it was exciting and interesting and potentially going to do something back in the day, I may have had a couple for a while. But now, no, I won't actually acquire it on my own. If one arrives in the post, then yeah, sure, I'll rub it against my belly and then pin it to a mast on the outside of town so that everybody can see it. I see most of the Gaiman to be in the end positive, though dealing with death. Neil Gaiman, possibly that author you're talking about. Yeah, I always thought Gaiman was funny and positive. Aye, it must be that author. I was raised by witches and neoplantologists, so I really appreciate Gaiman's subjects and research. Hey Diana, that's interesting. Oh my god, so I shouldn't be all in on COS I-18. Panther of Octaz. Panther of Octaz, what's it doing now, COS? It's at 13.0. It's lost 13 now. Previously we were talking about it losing 14, now it's losing 13, and the high of this thing was 18. So you shouldn't be all in COS at 18. Surely it's a joke, right? You must be joking, Panther of Octaz. Surely you must be joking. At this stage, you'd be looking at the potential for bullish divergence, but it's in the bearish control zone. And I say on this show, I don't like arguing with things in the bearish control zone. You'll have to prove to me that you're not going to break down, and at this point, it looks like it wants to, so I'm not going to argue with it. 0.6383. This thing trading at such a little value, so little, you know, and having talked about things like BBBY before they ended up breaking down and presenting opportunities that made people hundreds and hundreds, and I think we got like a 1400% move on BBY at one point. That was on shares alone. Looking at these sort of moves on those sort of tickers and having experience of the amount of people who traded Root and the amount of people who made money off Carvana and the danger and risk that they were entering at those moments compared to the danger and risk at this is nothing compared to that risk that was being taken then. And the opportunity available on this is so much greater. The cost of entering it is so much lower. The higher targets so far away in percentage moves that this thing could really change people's lives. Now, it's not financial advice, but think about it. 69 cents, $69, that turns 1 grand into 100 grand. That might be the only opportunity a lot of people have for that kind of a trade in their life, in their entire life. And, you know, I talked about it before I ever bought any, but to make no mistake, I started buying it after that and I've not finished yet, and I'm going to keep buying it. It won't be like I stop buying it when it breaks above $1. That'll be a sign to me that it's a great trade and to buy more of it. And when it does it again above 238, it breaks back up from that level. Again, I'll buy more of it. I won't be selling it at these levels. I'll be buying option contracts in the money already for the furthest possible away expiry. And when it is that prices make it back above those levels, I'll be exercising half, putting that rest of that half into paying for the exercising. That'll increase my share position, and I'll do it again and again and again and again, all the way up, so that in the end, well, it's the documentary we're making at the same time, all the memes that we're making to make it obvious about the timeline, all the DD we've done to reduce people's risks, we'll do it so that people can look back on it and see that it's real risk management that makes a difference. It's actually using the skills and tools available because of technical analysis that makes it possible to build these positions. And then you'll see behind the curtain and the same inner workings of the way that Roaring Kitty manages his GameStop, in the same way that other people make their impact on price without pumping and dumping, but it's just investing in things they believe to deep value that provide real return, that allow you for easy risk management. You'll see that. You'll see the inner workings, and you'll see how it can be done again and again and again. And at that point, the people on the other side of the trade will absolutely shit themselves. They'll know that not only can you, but you've got a guide to doing it, and not only you, but their own allies will turn around and say, there's more money in doing it this way. And they won't be looking for the morality, they'll be looking for the profound profitability of that behaviour, and they'll think this is a more lucrative action, and they'll see it for what it is, as hugely potential, like completely providing an opportunity to flip the system on its head and to make it so that those people who were the gatekeepers, who controlled the behaviour of prices, that they've got a new way of doing it, a way that actually makes more sense and delivers some good for the world. And that's what we're so overdue. We're so overdue for that kind of change. So cost, it's bounced to that level again, bit of reaction now. Back through the centre line on the RSI, pushing higher than it has done previously. Prices haven't done. Speaks to the amount of power pushing it there as being outsized compared to the power that was pushing it up previously. If this isn't sustained, that too would be a sign of weakness. Those people would realise that they're acting alone. They don't have the support of their peers. They'll exit and they'll come back down again, now towards the bullish control zone, still failing to break these important highs, not yet reached this resistance, was previously support, now likely resistance. Looking left, you can see there's no reversal divergence ahead of the move. On the 15-second time frame between these two lows, Tampoco, you've also not got it. You've also got this, it's overbought. This area it needs to go through a period of consolidation to prove that it's got the strength to keep going. And the truth is that these sort of oscillations are often used to get people on the sidelines to invest their liquidity so that those people who are looking to push it short can get out and get in again at better levels, and also trap people who were trying to manage their position by entering lower to bring their overall entry down, hoping they could get out. And these opportunities are put there for them to enter, and then just at the point they get excited, it gets slammed down on them again. So be very careful that doesn't happen to you. Okay, it's 4 o'clock here, so we're an hour and a half into the show. And the chat box. I get ear infections and my ear holes are infant size, so earbuds hurt. That's terrible, Sarah Herrera. You need some ear muffs. You need some ear muffs and some topical antibiotics to make that easier on you. I use those to kind of pinch the earlobes, so one of my earlobes get a little sore after a while, but I'm just slapping them on all willy-nilly while working in the yard. Good tips, good tips. Any stocks on GoPro stock? It's very low cost, the company is still making moves and the brand name carries a lot of value in my opinion. Hi Matt Ames. Yeah, I think they should have sold out to Apple a long time ago, right? A long time ago. I'll definitely have a look at that if you want me to, with any sort of seriousness, I could have a look at it. Why do so many people say Brian is a nice guy? Who is Brian? That's a good question. Why do people say that? And who is he? Yo, Dirty Jez. Jimmy, I'm in tears and grateful you speak the truth, thank you. Joe, Elena. There's a lot of passionate people here, yourself one of them, Elena. Morning, Emmanuel Del Galadilio. Hiya, Chip Hawkins. Hiya, Fo Fakao gang. Notion, Mr. Notion. Good to see you. I'm a Korean investor, lips into the moon. Boom. Good news all around the world. Hope you do well out there, my friend. What's it like in Korea at the minute? I've heard you are moving your capital south in 2030. To get away from the rat race in Seoul. Is that true? Are you moving? What part of the country are you from? 35 months from Kitties. Legend. I have a large lips in order for 0.60. Keep running away from me. well, let it take its time. Let it take its time. Maybe it makes it there shortly. Don't worry, kitties. Don't worry. If it does run away from you, then there's other great places to enter too, and a lot of overhead opportunity. So there is no rush to being rich, and it offers up great moves for you. If you're patient and calm, then you might get it at 0.6, which is a difference from what you see it here. It makes it easier for you in future to manage that position. And if it breaks up, then you'll be able to enter from an area of clear support, again offering you same risk management benefits, and that is so much more important than the potential profit. Plus, in this example, in this particular potential, in this move, it may well be that you don't need to worry about a couple of cents at the end of the day. So I would say stick with your plan. It's a good one. It's a good one. Costs $13.85. There's a period of consolidation here. Price isn't breaking down. RSI is falling down to levels, so there is still interest in it, and we'll see how that evolves, but it's not exactly amazing. You've got a good average there, full gag. Fago Kang, good entry there. I have $1,001 January 2025 calls on my 6,900 shares. I'm ready to change my life. Eric, good shit, 6,900. It's going to be hilarious sharing these positions later. Not financial advice. Everything goes wrong. I'd feel terrible, of course, but you know, manage your risk and it won't happen to you. Notion. Woo! Oh, my chat box just jumped really quickly. Sell orders at 18.54 today. Lol. Is that on cost? 18.54. Here were the moves. That was 18.48. Oh my goodness gracious me. I suppose you would have had them in line with this previous peak. Well, you see, when price gets to your order, what did you do, Vix? When it got close to it and it put in one candle that was away from your entry, and then opened another 15-second candle away from entry, came back, closed a gap, and bounced, and that bounce here was a rejection from the bullish control zone. Did you think to take profit and close it out there at 1760, or how did you handle that position on costs? Hi everybody, hi Go Win to Win, how are you doing? Hi Luke Spears. Mac Tavish, will the Nasdaq ever come down? Yo Mac. Sure, yeah. When the Chinese hack the banking system, it'll all come crashing down like a massive ton of bricks. But the bad guys will make lots of money off that move. It's on us to be protected. PSNY screwed me about 100 times before I finally gave up on it. Hey, that's not my ticker. Smart, wise, good move, Vic. Jamie, what do you think about Maxon today? I haven't really had much thoughts about Maxon. Is this institutional AI algos trying to close out FTDs on costs? No, there's no failures to deliver on costs of any significance, really. And because there's no option chain, there's much less institutional activity, full stop. It's not anywhere near a similar narrative to what we've seen on GameStop or those type of stocks. And most of the people in costs are being manipulated. Those people who are driving the price, I've got no interest in making a change to the market dynamics, or most of the people buying costs have got absolutely no interest in GameStop. In fact, they disdain at you and the GameStop investor, and they're hoping to make money from you because there's no one else to sell it to other than other people who get excited by the move because it's a piece of shit. You can say they make good headphones, that's cool. Betamax made really good compact discs. Didn't change anything. The movements we've seen on price are extremely manipulated, absolute crap, and the stock is too. That was a bit of a dramatic move back down again. Touching the top of the bearish control zone does give it a reason to bounce. It's in line with this trend here. But we should put this in context along with this trend line suggesting there's a bounce. You can also look to this high, how high it got on the RSI, but price looking left, nowhere near as this high, which on the RSI was much lower. And that's a divergence, and that divergence speaks to less people with less interest and less money pushing it, pushing it and failing, managing to get it higher, the price higher, failing to get it higher than when more people were interested in buying it. And put that in context, there was also similar situations previously. More people pushed it up and didn't manage to get it quite as high as are pushing it now, right? So less people now pushing it, and price making a bigger move than it did at these last times when more people were pushing it here, price went higher. So less people push price higher. Now more people push price lower. So that more people are less effective than less people were previously, right? So it's taken more effort to get less distance, which means that it's getting harder and harder, and the slope getting more and more incline, and that speaks to extreme danger and weakness in price. Underneath you've got that trend line, but put it in context, it's in facing a great deal of weakness. There's a W bottom, it's broken through an important level of resistance, and a lot of people will get excited, but when you put it in actual context of price itself and the strength of prior moves, it's crap, it's doing crap, and again it's presenting extreme warning signs. So while it could pop, and there's enough manipulators out there to try and make it do so, again it would be trapping people who are just overly eager.
I need
to
a
get in
volunteer.
it. Boom.
Come at me with
Diana
an
Stevens,
imaginary-
$1.99, appreciate it. I like ACHR, and I'd maybe like to find an entry. How does the chart look? Okay. So important levels of horizontal support and resistance on this guy would include its initial range there from what we've got on the chart back in 2021. And then you had this level of resistance that price touched on a retracement and then fell away from again. You'd have this touch of support, which was also resistance subsequently, and the same is true of this level. It's also true slightly higher up where you've got support at these wicks lows, resistance here, support at this breakout, and then support more recently, so that's another interesting level. You've got a W bottom, which suggested that there was a potential reversal in play. That reversal took you back above this diagonal, weekly time frame, so it's obviously real. Took you back above this diagonal. There'd be various ways of marking that out. You could be talking about it as this guy, and that's the least incline that you can get on that trend line while it's still being relative. You've now got a more recent one, which is also broken. And so maybe you'd be looking for a retracement. The retracement off the back of this guy took it up to here, a golden pocket. The equivalent now would be breaking here and going to the golden pocket, which is at 520, and that horizontal level we've already got marked in. So the fact that it's a resistance level and it matches up with a fib, which would be a previous retracement from a similar pattern break, suggests that you'd be very unlikely to look for higher than that price right now as a sensible move. Whacking ya, $10. Boom! Thank you so much, appreciate it, sir. A Hyde Park in London for an Andrea Bocelli concert right now. Listening to Trade Spotting in Hyde Park. Hey, well, you're out on a nice day trip. I should be out presenting these shows out in Hyde Park, walking around with a massive screen, talking to everybody properly. But I don't know if I could say the same stuff about Sir Keir and your friend of mine, Rishi Sunak, without, getting attacked by the angry mob. The angry mob. Thanks so much, Wackanya. It's really appreciated. Cheers. Listening to you as the pre-show. Fire here. Thanks for being here for us again today. Thanks for tripping in, even with your little trip out. Thanks you very much, Wackanya. So, Diana, I'd be looking at this thing as a piece of shit that's giving you a lot of good opportunities because you traded it sensibly, but overall, price action's not doing anyone any favours long term. Most people underwater on this who've bought it and held. If you're wanting more, then what would we do? Drop, you've got the part of the reason that this thing fell over is because this peak and this equal sort of peak in price action matched up with this signature on the RSI and subsequently this one. That's called a failure swing. And at that point, you would look for price to come back down to the longer term support. Longer term support on this thing, it's difficult to measure when it's got such little price history. But the prior important point of support when it broke through the previous formation was in at around here at 330, and the tests here, the lows came in at around 330 because of the failure swing, and that's this power of that signature there you're seeing. For more about it, take the course. If you were now to break up back above the golden pocket and test these prior highs, which is possible because you've come in with bullish divergence on the lows, you've recovered the center line on the weekly, and if you're looking for higher highs, then first place to be would be 791, then 10.13, and then $12. Is that likely or possible? Yeah, likely. Yeah, possible. Likely, you would have to wait until you see more artifacts to judge the probabilities there. At the minute, you're not getting enough information on that front. So I'd be cautious. On the daily time frame, you're in the bullish control zone. I don't like arguing with that, but just to put it in context, price looking left, it's not exceeded these highs. That is these highs here on the RSI. The RSI then much higher, price not much higher. That speaks to the lack of enthusiasm on this current move as compared to then. And if it is that it's going to come back down again, it's made it back about a 50% and it's up 3.56% today. So I'm not arguing with this, I'm putting it in the greater context of price. And in that sense, it's not doing as well as it has done previously. So I'd be very, very cautious about the idea of aiming for anywhere higher than 530 and this golden pocket in that previous oscillation that we saw with this test back towards the golden pocket from this guy being a similar formation to what we see here. That make a lot of sense. If it is to get there, then or even if it's to come back from these levels and test support, it would be that support is either this prior high, so prices could come down to test $4, and that's a good 10% off at the minute, or they could come back lower and test the 236, which is also the breakout point from that downward sloping diagonal, which is relevant on a weekly, and then you'd be looking in at 363. And that's talking about 20-30% off price at that stage. And if it comes back to test these prior lows in line with that diagonal, then it'd be come back to $3, so 136 off of 436. Be huge percentage moves. Areas to manage risk if you are looking for an entry are waiting for price to come to you, because this is a train that's moving at pace, and anyone who's tried to jump on a train that's going very fast will tell you that it's a very uncomfortable experience. It can break a lot of your bones, and even when you get onto that train, the difficulty in doing so means that holding on is very, very hard. It's also tunnels and stuff that can whap your head off, so you gotta be careful. So 4 hours, you're in the bullish control zone, you've not put in a bearish inflection on the RSI on this leg of the trend. This trend might be distinct from the previous one, so this could be the start of a move, but even in the start of a new trend, you'd look for it to put in higher lows and higher highs, and right now if you've got this high, you've got this low, which is a higher low, you've got this high, which is a higher high, and you've got this low, which is a higher low. So anywhere that this puts in a high now, and it could be anywhere in this zone, you'd subsequently be looking for a higher low again. And that higher low, you don't want it dropping back into the prior formation, so you don't particularly want it to be back below $4. And so the lowest entry, where you've got a very close ability to manage your risk, is at $4. And then anything below 392, you wouldn't want that trade anymore. It may well be that it drops back lower, still puts in a higher low and still explodes, but then you would get really tight costs, so you're not spending a lot of money on that, and do stop out, then gives you the opportunity to take that same thing again in at around 350, 360, with a stop just below 330. Again, that's costing you a lot, nearly 10% in that stop, which is far too much really, but in around that area, looking for a really good area to manage risk on these tiny time frames, along with an edge that suggests now going to buy and a reason to execute. Then you might be getting like inherent with that reason a good area to manage risk, and then so not holding a costly trade into another potential bounce area makes sense. It's also true that it could not bounce there, it could just be continuing a downtrend, because in context, all of this is a lower high than back between this breakdown point and this here that's now a low, and you know, it would be very sensible to think about this on the daily time frame as potentially in a downtrend. We'll borrow this to point out that that would be going through the middle of the downtrend. One high, lower, low, lower high. The next area you might be looking for on the daily is another lower low. And this thing coming back and testing $1, and that's totally possible that that happens. Turn off the drawings now. Oops. You had a rocket outcrop flash to target at 380 when the price was at 299. And that indicator at that stage would have given you a simple, easy 26-27% move on price that would have been reliable. On the 15-minute time frame, you also had a warning at 373. It was coming back to 325. So you could have taken profit there and not exposed to a 12% drop. So indicator making lots of money, and here in the 7-minute time frame it tells you that price will come back. Also there's a fair value gap just above that and a rocket outcrop flash at 342, so that's below all those significant levels where you'd be looking for continuation of the current uptrend. 3-minute time frame, there's this little gap here which speaks to dodginess in price. There's that area with a fair value gap which also was present with a gap and a rocket outcrop flash down there, so I'd be very, very cautious again. 1 minute, 2 minutes, we've got a trend line here. Touching that speaks to price coming back down again, and if that angle proves to be support, you would wonder why it didn't push on test that gap there. It's very unlikely that would happen, very much likely it does test that if it breaks. So filled this gap, come up to the bullish control zone. There's no way price is anywhere like what it was previously, so not excited about that. I'd be very cautious there. And then on these itsy bitsy tiny whiny time frames, again you're getting extreme warnings. This looks like it could break. That interrupted one means that you've not got an immediate danger, but whether or not you feel like 30 seconds is immediate or not, it's up to you. 10-second time frame, it's just going sideways. There's not an awful lot of enthusiasm behind it. This thing's current market cap is 1.4 billion, average traded volume's 8 million. The volume today currently is 11 million, and it's up what percentage? 2.82. So a low volume traded stock, quite a large market cap in comparison to that. And it's possible that you're only trading this because you've done very well in it in the past, and you think then that it provides you some sense of comfort due to that sense of familiarity. And indeed, that's a big trick that catches lots of traders out. It was never that familiarity or that sense of comfort that made things easier. It was that occupied a space in those traders' minds when they got worried about approaching new tickers, and I would urge you not to fall into that trap. You know, you've made such a good start to your trading journey, Diana. You could eventually go on to be absolutely magnificent. Your own sense of confidence at the minute is in no way a reflection of your potential as a trader. Much stronger indicator of how good you could be is my commentary on it, and I'm telling you now that if you try and focus those skills that you're learning into any ticker at any time with the focus on managing your risk, then you could be absolutely a brilliant trader. So don't ever gravitate to the easy. Don't go back to the familiar just because you think that in there is some sense of understanding that you don't have elsewhere. That's not the case. It's that you were right on the money at the time, and that feeling is inside you, not inside the stock. And that's what's to work on, cultivating that sense of feeling, that understanding of potential risk management zones inside yourself, so that you can activate that when it comes to anything that you might happen to be trading. GameStop holding flat for the day. Chewy up 4% at $25, but you know, this is hard to describe as positive. 1 minute time frame here. Again, struggling a little bit. The fact that it's come back down to the bearish control zone, had a reaction, that reaction is putting in cat vomit on the top side, is very, very concerning. You turn on the drawings and look at this guy from the top to the low in the 236, holding the most recent touches on price, and this slightly touched lower here, still back above a 382, gives people the idea that this could be a bull flag, and it matches up with it in terms of all the normal ways of trading. And so without any context, people will say that this is likely to happen, that the most craziest of traders will be looking at moves like this, taking it to 45 and then 58. Those excitable but also naive traders will be looking at this measured move here and saying that, stop it, a break of this guy being this downward sloping diagonal here, might lead to prices testing towards 20, and there's a little horizontal level at 22, 23, so they'll think that's possible. But putting all of it in context is to say that judging this here off a Polaroid of price doesn't tell the full picture of what might make up the movie of cost at the end of the day, right? A single frame doesn't tell the whole story, and so I'd be very cautious, right? If you're storyboarding it out, you're at the very beginning of the journey, and the big twist that makes the movie interesting, that's yet to happen. Lips in 2.33% for the day. Average volume 2.28 million, not completely off the pace for that at the minute. Market cap 55 million. Enterprise value of this thing's close to 10 times that. Earnings report in a month. I'll be tuning into that, and I can't wait to hear what they say, because these are really good earning calls. Really good earnings calls. Listening to a LivePerson earnings call can make you a better trader, right? There's no short, sweet commentary, rely on my actions, not on my words. No, they tell you what their actions are going to be. They're very understated, they underpromise and they overdeliver, and it's a good thing to listen to a LivePerson earnings call. You will do well. You also meet a very interesting CEO in John Sabino. So that's what we're looking at there. GameStop and Chewy costs, and covering ACR as well. Bitcoin trying to recover there at 56 and change. That's good to see. Ethereum, huge. This is a huge percentage move. Absolutely huge. Like the oscillations you've been getting, it's just a gift in Ethereum recently. These lows to these highs, that's 7%, and it's like, the bullish divergence between these lows and the fact that the market structure doesn't change until back up at 3,000 was meaning that anything at 2,800 was giving you a huge percentage opportunity at very, very low risk. So that's interesting to look to. And cost, let's keep our eye on this and see how it performs. Also, let's keep our eye on Bitcoin and GameStop. So if you've got anything you'd like me to look at, use the links in the description below and I'll get to it. I don't like the idea that I'm like ignoring anybody in chat box, and I often see people ask me for requests, but of course it's only yourself will be interested in that ticker. Only you, and this is a show that could be watched by thousands of people by the time I finish making it, and then after it goes out live on YouTube, when it's there on YouTube, watched by thousands more, and those people all turn the show off when it turns up to this obscure ticker they've never heard of and they're not interested in. I'm not saying it's not a good trade and that you didn't do a great spot in it. It's just would be counterproductive for me to cover it. While as I want to help you, those people who see that the reason I'm doing it is because a donation comes in, then they'll make sense to them why I'd look at it. They might skip through it or they might persist with it, but they won't just ditch the show because of that. Whereas if I'm flitting from one thing to the next as if they all are as important as each other, then people will get confused. A lot of people are very straight line, don't understand why I might do stuff. So if you want to support the show, then do use the links in the description below and I'll be happy to look at things, but otherwise I won't want to confuse everybody, and as you can imagine, it's not going to change my life covering a ticker for $2, $5, $10, whatever, but I will do it and there'll be a reason for it and it will make sense, and then over time these things become sustainable for the show. Otherwise, I can't. So GameStop 24.50. Still flat for the day. What's happening in the chat box? Yo, Case, 5 gifted memberships, Fortnite Chilies. How you doing, sir? No cave. No cave. Nick Cave. NC Cave. Is that you, Nick Cave, legend? Count. How you doing, Count? Love, exclamation mark. Good to see you getting one, sir. Good to see you getting one. So Fortnite Chilies, Nick Cave, Count, Love, and Aaron Woolever. Woolever. That's great. Say thanks to Kitties for getting you those membership gifts, you lucky people. Congratulations and welcome to the memberships. Hey, Love's big thanks. That's nice. What indicator are you using? Is it a combination of the RSI and others? What do you mean, what indicator? The RSI on the bottom here is a custom RSI. It's called the SRI. It's Rocky Outcrops version. And it's made slightly differently from the Wiles Wilder version. It's got a lot of different things on it. And then the other indicators, they're proprietary tools that are not based on other indicators. They're invented by us, Zoltan. By Rocky and I, mostly by Rocky. And very much mostly by Rocky, and they do completely different things from the RSI. Completely different. It's RSI talks about the power behind the price. That's how I describe it. And that's what his one does, but more accurately. But that's not what his other indicators do. His other indicators are based on market participants. The fact that he knows how certain people behave and what they'll do next based on what they've done in the past. Because some moves are like a play in American football, right? They're not done when like the quarterback throws the ball. That's only part of the move, and like the ultimate goal being a touchdown, he knows what will come next, and in being able to understand that dynamic, he can tell you where prices will go at certain times, and so that's why he does his things. The RSI is a normal RSI rate, but extra zones and GME. No, and stop asking me to explain what proprietary things are and learn how to use what they are. Okay, don't do that. Kate's never died. Count. Thanks. Luke. Yes, Nana. No, Nana. No, that's not what it is. So instead, just, ask how to best use these things, not how is they're calculated or used. Like what, when you get it, ask how to use it, or if you don't get it, ask how to use the RSI you do have on the Discord. People like Rocky are good people over there, and they'll tell you. I mean, it sounds like I'm being abrupt, because I am. Not that I mean to be offensive, though I'm sure it could be taken that way. It's mostly because, there's how many people watching? 172, right? So in terms of like advertising money for making the video, I'll get £4, right? So what's that, $5 maybe max. And that's if I'm say on all day, like the entirety of the day. And so to get $5 for revealing proprietary secrets that other people will copy, exploit, and then use to their advantage to make tens of thousands of dollars, it harms us, harms you, harms the community. And asking me these things, you have to be aware of that. That's an obvious outcome, right? And I have to be careful and cognizant of all potential outcomes. So it seems like I'm not being fair or nice, but actually I am trying to be fair and nice. Like, who cares, right? You know that I appreciate you, mate. Over on Discord, everyone does over there knows I appreciate you guys. So it's like, so don't worry about it. Just we'll have a laugh and not care. Oh, I have his RSI vid queued up for tonight's learning session. Sweet, legend. Just wanted to understand if the base RSI you're looking at is the same. I don't have your trading view. You don't have trading view? Oh my goodness, get yourself trading view on the free, at least the free version, buddy. Get yourself at least a free version of trading view, yo. For sure, yo. And if you're on the paid side of Discord, then you'd be benefiting from the paid indicators. And then you just plug them into trading view, you'd be absolutely flying. There are deals on trading view every so often, so you can get like a paid version of trading view for like ridiculously huge discounts. This is why I sometimes feel bad when people get TradingView, they watch the show, they see this charting platform's quite good, and they go and get TradingView. Like, I got TradingView TradeSpot, and I'm like, oh, fuck, that's great. But the paid version of TradingView, you can get like 70, 80, 90% off sometimes in the sales. And like, you can buy it for like a year's worth or like months worth, and then every time you buy any more of it, it just gets added on to your amount you've got going. And like, you can get like a year's worth of TradingView, and some people would be paying that amount for just a month. So I do feel bad when that happens, and so I try to point out there's also Rocky Outcrop's got an affiliate link which will get you slightly better deals on the sales every so often too, or at least because he has that, he's cognizant of when the sales start and tells people, So you should don't try and get a pay. I would say, like, I mean, if you're making lots of money as a trader, these things are just the cost of doing business, and you won't care. You won't care. But if it is that you're trying to budget because you've not got all the capital in the world and you're trying to be sensible, which most people are, and no matter how much money they've got, then it is wise to wait for the sales there. And there will be another one coming up on TradingView towards the end of the summer. Plus, there might be another one in the meantime. There might be another one in the meantime. Oh, if I can use a free version, maybe that's what it'll be this weekend's project. Yes, definitely check that out, Nana. Free version of TradingView is great. It is really good. Like the only thing is it sticks adverts up in the bottom left where my face is at the minute on this video. Like it'll stick an advert up there every so often, but they just ignore it, or close it, whatever. Just close it or ignore it. Also, if you're on the indicator tier there on Rocky Outcrops Patreon, you get those indicators that stick, like you see this. Like it's got it, like all the things you could possibly want in it. And like you get guides on how Rocky's did a video 2 weeks ago where he walked through some of these things, and like having some of these on with each other is like an edge. You're kind of also getting an edge. Like of course Rocky didn't just put on random shit. You put on stuff that he would use together. And so you can turn on certain things, turn off other things, and it automatically prints all the information on the chart for you, which makes it slightly easier to like develop an edge. Like these Fibonacci zones, liquidity gaps, support and resistance, and then the moving averages gives people like a really clear picture of, like, if I turn off the drawings, everything on the chart there that's not price action itself, that's all put in by the indicator, and you don't have to draw it or work out where they are. It does it all automatically, so it's better than the trade. And see, it shows up there a couple of seconds later because it has to work shit out. Like it shows stuff for you and puts it on in the right places, and then you can be like, who's going to go up to the weekly time frame when a lot of people get excited, miss something out, or they're doing their studying Confluence and they'll forget where the prior weekly high is or the prior daily high. Now we're seeing that on GameStop, prices made it towards the prior daily high. That's clearly an inflection point. You have to be aware of that. And if you're watching it rise up here on the hourly, getting really excited, and closing the gap and then pushing a wick higher, you'd be really excited. But if you had this indicator on it, it'd tell you, and it's going to come back and test the moving average. It's reached an inflection point. It'll look for support. That pushing towards the daily low and then recovering the 50 simple, that's important. If that can push back up to the 200, that's important. But the 50 simple is below the 200, so the short-term trend is down. So your inflection is bearish, and so you don't get excited about these moves. Instead, you're cautious, and so it's painting on sentiment. It's painting on the likely outcomes. You don't have to do any drawing, right? I'm drawing at all. Plus, it does things like puts on. Like, a lot of people find it difficult to know where a Fibonacci retracement should go, or what's the most relevant Fibonacci retracement in any given time frame. And here it's just popped it on for you. So you see it's made it towards the golden pocket there. That's obviously another reason why you would be very careful at this area, and that's on the 1 hour time frame. You go to the daily, and it knows that that's not the appropriate fib anymore. It puts this one on for you, and you can see you're at the 50% retracement here. That's also likely to be an important air inflection point, and you're at that 50 simple holding it. You can just go down through the time frame and get more and more of them. It literally saves you hours and hours and hours and hours of your life. Like I have drawn on tens and tens of thousands. Who was that? TAMCAL. Yo, do you have any opinion on dividend stocks? I'm thinking about OXLC. Yeah, dividend stocks are alright if you're looking for the best one in the world, of course, is SPY. Best dividend stock in the world. My appreciation, like what I'm looking at with dividend stocks is you've got capital appreciation and you've got capital passive return on your capital. Thanks very much. What was I just finishing that sentence was, yeah, I've drawn tens of thousands of Fibonacci's in my life, and it would have saved me months of my life not doing it if I'd had that indicator, but I didn't until Rocky made it. So that's an opportunity for everybody. So with regards to dividend stocks, like the best one in the world is SPY, because you get a broad investing range across a basket of different tickers. Some of them provide dividends. Those dividends are then reinvested in your position, and then you benefit from that passive return along with the capital appreciation that all the different stocks in there go through. And SPY is obviously driven in extreme amounts by the tech stocks. Most of them don't provide dividends, so you're benefiting from that capital appreciation, whereas it also includes those high dividend paying stocks which are interesting to institutions and insurance funds and so on. So they're getting like a reduced risk, their exposure to the capital appreciation, so their equity grows in value along with the passive return for holding that stock in. They get a daily return or a weekly, monthly. You can just quantify it in whatever way you want and work out how much of that benefit that is. So SPY is the best one, and it's often overlooked when people answer that question there. Outside of that, my idea would be that you're looking for stocks that particularly are set up to benefit from dividends, and say things such as real estate investment trust. In order to qualify as a real estate investment trust, you have to put a significant percentage of your profits into dividends and pay it to the holders. And so we've got a list of REITs here on the channel that are particularly interesting. The world's biggest REIT fund is VNQ, Vanguard Real Estate ETF, and they pay out dividends and it has capital appreciation element. On the 4-hour time frame here, you can see things going sideways recently. That's because there's a potential rate cut coming. When the rates are cut, then this passive return available through dividends takes on even greater opportunity. In the daily time frame, you can see that it has pushed up here recently and then come down. That's 2021 post-COVID move up here, rates reaching their peak, that destroying a lot of the value in that passive income and making it difficult for REITs to do well. There's still huge opportunity there. This is a really good watch list with regards to REITs, and I shared a video and guide on how to do that on my Patreon, which if you're on the top tiers on Rocky, I'll happily share that with you too. Over on Discord, a video guide on real estate investment trusts and when to look to them. It's also the sort of thing that includes ways to manage that risk. Here's the ProShares Ultra Short Real Estate ETF, and that uses a leverage instrument over the top of its underlying investments so that you can make the most of short side moves. Now this will go down when real estate investment's going up, it'll go up when real estate investment's going down, and it itself is a compounded. There's some people in Edinburgh that wear like period clothing, which is super strange when you see them walking around outside these really old houses, especially when they've got a dog and they're walking around, and you look out and it looks like you're in 1800 all of a sudden. Anyway, so that's a distraction. So this is a compounded ETF, which means at the end of each day it will close out those swaps that are used to create that extra leverage, and it means that in a down day it loses over total value, and on a positive day that total value is reinvested, and it means that it doesn't necessarily have the same massive benefit long term as it does short term. It means that holding these things overnight can present extra risk, and the short term trading these things is a good cover, but a holding a position on this maybe not necessarily so, and SRS offers up that opportunity. So if you're looking to trade for investments that are providing passive return via dividends, real estate investment trust is a very popular area to look to. And then if you're doing that, it's also possible to cover with one of these type of instruments like SRS, or by using a hedging strategy, long on one, short another. But some people don't have the ability to go short without certain capital requirements, or their broker won't allow it, and so that's the sort of thing that provides that opportunity. And you yourself asked about OXLC, so I'll get into that in particular, but that was already a good answer. OXLC. Oxford Lane Capital Corp on the weekly, very strong moves. What's the dividend on this thing? Adjusted for dividends. Here's if you unadjust it for dividends. See, capital appreciation alone, this thing pretty desperately bad. Lower highs, lower lows, and a broadening formation. If it was to continue this way, you'd see it going way down, lower lows, lower highs, and just generally being absolutely awful. Like that's the potential there. If you include the dividends, then you can see that actually it's been in this uptrend. That uptrend fairly regimented. If you take the wicks out at the bottom, go with the body closes alone, and you're looking at something like that, still not terrible. But I'd be very cautious of this thing because a breakdown could be absolutely wicked. Let's look at it unadjusted for dividends. assuming that they're going to keep paying dividends, which is obviously possible they don't, but assuming they do, because that's the way it's been going, and assuming there's rates cuts coming, those dividends would be more attractive. And this thing might also be dividend yield 20%, market cap 1.47 billion, average volume 4.72 million. So there's this clear level, we can drop that on, and say that when price gets down to around 146, it's a really good buy. And when it's putting in these increasingly higher highs that follow this linear trend to the top side, you're looking at moves potentially up to previous highs 560. That's more or less where it is at the minute. It's touched the top side of the bullish control zone, nearly overbought, and it's very unlikely that this would be a good place to buy it, right? Because when it's up here, that tends to be a peak in price action. This guy had a bearishly divergent top between this and this area. It prevented his failure swing. After that failure swing, he came all the way back down to support again. At this point, you had something similar with a bearishly divergent top. Here, not a complete failure swing because it wasn't exactly the same sort of move. Broke the center line on that RSI, another move down. That move down being to where it had found a common level of support recently in around 370, and it could well be that that's what you're looking for then, like on the weekly time frame, just on that previous signature we've seen with regards to momentum. It may well be that you're looking for something strength like this to be at a low, maybe oversold when price returns to 370. In advance of that, it could test up as high as $7, but it's already at the area where it likely comes back from. And if it is to push up there, probably on the RSI, you see it putting in again bearish divergence. And long term, that's what you look to. If you're buying a stock because of its passive returns, then you're not going to chuck in loads of money at $7 only to watch it lose 20% over the next few months, and then your dividend only to make up for the money you've lost in capital, and everybody else to be happy with the stock, but you to be upset even though price is doing well. And so you would be best if these type of stocks to wait until they're at long-term entries so that you benefit from the capital appreciation and the passive return, and you use your technical analysis to give you an advantage in the market and get in at those really good entry points so that you can use a stop in profit and benefit from that passive income building up over time, along with having made already what you would have looked for there in the capital return. So I'd be looking at that. On the daily time frame, you've got your failure swing already. It's held the center line here. It gets rejection from the bottom of the bullish control zone. That'll be a clear failure swing. It'll come back down and it'll smack 370. Could possibly even break that at this point because you've got bearish divergence between these peaks too. At which point you'd probably be looking at this thing come in, test 290, if that doesn't hold 195, and if that doesn't hold 140. So I'd say it's very dangerous. It's not really the time to be buying it. While you've got a good strategy in terms of like looking to dividend stocks, a more sophisticated approach might be that which I outlined at the start of this answer. So that's hopefully some answer for you, T.A. McCall. Thanks very much for the donation, really appreciated. I thought IEP was the best dividend stock. No spies. Scooby Booey. Scooby Boo. Don't. Kitty's saying that because it's got such a high dividend based on the total value of the thing itself. You know, the dividend's really high. Part of the reason for that is the way it uses its own share price in its calculation and in its mechanics. And that mechanic is what Hindenburg were targeting when they started shorting the thing. And it's true to say that IEP likely comes down, test 1060, 1050. That point could potentially be a buy, but the chances are it doesn't hold and it breaks even lower. So I'd say it's very dangerous, you know. And Iken, fantastic trader, fantastic fund operator there. But the way in which he behaved and the things and what he did, they're now well understood by everybody else, and that edge that he had by operating in secret are now completely exposed to everybody, and it's unlikely to have the same longevity, that strategy, as it had in the past. So yeah, I mean, respecting the fact that TA works and that his operations and mechanics are now open to everybody, you can expect to see all of those future iterations being heavily signposted on the chart and trading IEP to be very easy to the top side and very easy to the downside, as long as you don't use your emotions and don't use the narrative out there that has now moved on, and then instead focus on like the up-to-date current situation, which is that Carl Icahn has been exposed as not actually the magician that people thought he was, that many of his tactics very cynical, and that him himself only slightly better than the average trader, but having adopted the mechanics that made a big difference to the way that his fund worked, presenting and reflecting on him as being better than he actually was. And so he did very well in the period of time that he had that edge. He made the most of it, and that's the best thing you can say about him, that he exploited the advantage he had fantastically well to create a narrative around him as one of the best traders in the world. And while all that was true in the moment, the narrative has changed. It's not like that anymore, and people will be picking over his dead bones if they try to use the same strategies in future. As much as I like what he's done in various ways, I still am honest about how it would be that you'd best interact with his fund. Lisa Joe Scooby, catch the R-Week video. Boom. Thanks so much, Lisa, with the share of the link to it from my Patreon. Appreciate it. Appreciate it. And I really appreciate those people who are on my Patreon stick with me. I try to always make sure that anything I do that is premium content or behind any sort of a restrictive access is available for you guys over there. And I know there's a lot of people who do watch it and do support it who've got the means and ability, so that it doesn't cost them a great amount relative to their own circumstances. Thanks very much for sticking with me on Patreon. Appreciate you guys. Thanks for sharing the link, Sarah. Right, 160 viewers. So I've lost people from the peak of the show. What did we get in terms of likes? Did we get the likes? Did we get any at all? Why does that keep opening up when I try to? That's a chat box. Thank God I didn't get rid of that. Phew. Oh no, did I just though? Serves me right trying to do this. I should not be aware of the likes. I should ignore the likes. 173 from 160 concurrent viewers. So it could be even possible that he's all hit like then that are watching right now. Wow. Certainly can't get upset about that. Oh my god, the chat box is like stuck up miles away ages ago. I have messed up the little itty bitty things. Oh, stop it, Spa. This is the window. This is this window. This is GameStop. This is the low dramatic time frames. This is the list. Cost holding 1424. Again, I'm not going to argue with something that's about to jump into the bullish control zone. GameStop 24.55, still flat for the day. Still got the chat box. Okay, everything working. How can I join the Discord through the app? I have tried through the links that's posted, but it doesn't show up in my Discord app. I just got Discord to connect with this group. Benson Kitty! Yeah, I don't know. I mean, I don't run Discord, like the company Discord, so I don't know. It's like when people ask me, like, why is TradingView so shit? And I'm like, mate, because it's fucking... There's just still problems. In every software in the world, there's problems. What I'd say is the best way to do it is to click the link that's shared in the chat box here. I should have put in the HTTP. That one, yeah, that's clickable. So click that and then sign up through that. Open a Discord app, boom, and it opens it for you like that. And continue to Discord, you should get, or, you know, I've already got Discord and whatnot, so it works for me that way. But that's like how you sign up, by clicking that link, rather than like going and downloading the app from the app store and then trying to sign up from inside that and doing whatever the fucking hell that means. Like, don't do that, just do it via that link. And that worked, thank you. Oh, you worked that way, great. Jamie's having another good hair day, equals bullish for GameStop and GB. I'm not really, am I? I don't think I really am, sir. I don't think so, sir. I don't think it is, sir. But I appreciate that nice comment, Mr. Pancakes. This is very much appreciated. After you press join with the invite link. Hey, GT, I'm still lurking. Legend. Press the link there. Press it. Press it. Press it. Don't stop. Press it. Well, don't lurk. Get involved. And then, you know, later on when you get more involved and you're doing more stuff, people will be like, oh, that's your chap. That's the guy. He's been here a while. Oh, that's that dude. And then you'll get, you know, more help and more appreciation. So the sooner you get involved and the sooner you start saying things and contributing, the more people learn about you, the longer you'll have lived in their memories and history, and the more help you'll get when it does come to the time that you need it. I missed the open push to 25 since then, GME, just trending down, looks like. Mostly sideways there on GameStop, Mr. Luxa. Mostly sideways here, 1 minute. Open and push to 24 spot something. What was it? 25.08. Was it here? Oh, here from the lows. Oh yeah, the inverted head and shoulders, the higher low, then the higher high, and then subsequently sideways. It's not exactly trending down. What we were talking about was like this low here, this high here, this sort of formation. You know, you've got like, within this you've got an uptrend. This I would say is not really important, and nor is this, you know, desperately important. If you're including that, certainly not. If you're looking at this as the start of the trend, you know, this move here, which was, you know, class B bullish divergence throughout all of this move, so like this inflection point happening in momentum, and so price reacted to the low, the high, the higher low, the higher high. Now you're looking for a higher low, right? And a higher low could be anywhere above here, anywhere in at around 24 bucks, even as far down as 23.89. That could still be a higher low and would still constitute part of an uptrend where you've got, you know, the potential for, after all these higher lows, higher highs, to go on and do the same again and target up around 25.44. And that's, you know, that's the nature of price, that it does these things, right? Like the oscillations in it. And so this being all part of the opening range, that is where you get the most enthusiasm, the most liquidity, the most people trading. Since then there's been less people trading, less volume, and less impact on price between those ranging targets. So looking sideways, holding these trend lines, that's the big guide. The previous price action dictating these trend lines, that's the big guide, as opposed to seeing the same thing, the same level of enthusiasm, like repeats and can sustain throughout the day, of course. That's less likely. So you're looking at this thinking like a higher low or a higher high. Well, the current thing you'd be looking for is a higher low, so like that's partly why you've got that sense, Mr. Luxa, about it looks like it's trending down. Not exactly trending down, but like looking for an oscillation low, which would be a higher low than previously, and effectively trending up is what you'd be looking for, ahead of potentially testing this high. If you did just go straight there, then this would be your higher low, right in at around 24.29 here, which is fine. But then it doesn't give you like a formation, a chart formation to trade, which reduces the fidelity of that as your, you know, risk management. Took us back to cost. I pushed Control Z so often it took us back to cost. So yes, does feel that way. Having missed the opening range especially, it has very much felt like it's just trending sideways or down. But in context, it's not really doing much at this exact second. Yo, you're welcome, T.A. McCall. Trade spot and I stupidly sold GameStop at 24 spot 12, hoping it can wipe down there so I can pick it back up. You're not stupid. You were making decisions that you felt were right. What were you thinking at the time? Was it a profitable trade? Was it taking a loss because you were hoping to get in again cheaper? And like employing your own patience as a tool. You're welcome, Mr. Luke. Employing your own patience as a tool and advantage and part of your edge, you know, your own patience. That's a big part of how you make the most from trading. And the more and more you do that, the more and more you'll notice other people. Wow, there's a guy who's like 190 years old walking past outside with a massive bag of shopping. Feel bad for that guy. He should use the online delivery service. Maybe he likes getting out though. But then why carry so much shopping? That's just ridiculous. I mean, if he has a heart attack outside the flat, I'm going to have to go and take care of him, for God's sake. So, right, or one of his arms fall off. Who's going to put it back on? Nobody. So, using your own patience, the more and more often you employ it as a tool to your benefit, the more you can see how other traders aren't doing it. And that's what's causing the oscillations in price. That's where price goes, to those places where those people will be exploitable because they're emotional. And the more and more you use your patience and wait, and even if it means that you don't get trades, you wait, and then eventually you wait long enough, you do get the trade. Those are the ones that pay off the best, right? Because a big move down and a big reaction to it means that you can be in a trade that goes a big distance in a short period of time. It's super hard to employ that, especially during periods of really excited trading, or when the hype is real, or when people are posting on social media, or or when you see your friends making money and so on. But there's phases in the market, and there's uptrends, downtrends. There's people making money on a positive winning streak, and there's other people, the best traders in the world, going through days or weeks where they just seem to can't catch a break because phases have changed and they haven't updated their approach, or the TA they were using isn't appropriate for this current behavior and price. And I see that all the time, of course, from this role, and I get oversight over a lot of different people, and I see that all the time. And that informs a lot of the tone which I use in these videos, or the things that I'll talk about and the reasons why, is because there will be different phases and there will be different types of TA that work at different times, and I benefit greatly from that, in that I can constant reminders to myself, really meaningful ones, for me to stay cognizant of all potential phases and to know what the current circumstances are and what would that mean if it was to change, and how would I prove and judge that. And then again, how do I communicate that to other people? And being able to communicate it to others helps me articulate it properly. So I conceptualize it, I can then articulate it, and in those two moments, those two actions, I get myself a greater understanding of price, and that helps me when it comes to acting on those thoughts and advice, because I have a guide for how I should behave, and I understand what would make it different. There's a lady out trying to throw her dog treats. The dog is so fat, right? This dog is so fat, and she lives about 20 feet from the green outside. And she's a really rude lady, but whatever, I don't talk to her. Other than to tell her to pick up her dog's shit, because no one else should have to do it for her, and there's kids that play on that grass, which she's finally got into a habit of doing because I say it really loud and shame her in front of everyone else. And so she starts doing that, but she's got treats that she throws her dog, rather than a ball, right? She throws treats, it goes and it eats the treats. But the crows, what they're doing, I don't know if I'll be able to see this, but what the crows do is they all eat her treats. Can you see that? It's miles away there, but there's hundreds of crows. Anyway, the crows are smart now. They just go and eat the treats. The dog runs over and they're all gone. And that's probably better exercise for the dog. Unplugged my PC in that movement. Pardon-moi. It's now 5 o'clock here. That's 2.5 hours of work. We've done good jobs here, I think. I think we've done a good job so far today. How is everybody enjoying the show? Is there anything I'm missing? Have I missed anyone's donations or anything like that? I hope not, but let me know if I have. Kick-Ass Man became a member. Boom! Thank you so much, Kick-Ass Man. I missed that at the time. Bloomin' heck. Kick-Ass Man, thanks so much for being here. Thanks so much for being a member. It's appreciated. Crows are incredibly smart. Darn tootin'. Crow diet plan. It's the crow diet plan for the dog. Run over there, and it runs, and it's like, where are all my treats gone? The dogs have eaten them, mate. Dogs have eaten them. Crows here are good at ganging up on the seagulls too. Though I don't think they should try and take on Steven Seagal. He's got a black belt in kicking crows' ass. You can't lay a finger on Steve. I have a tummy hurt today, please provide me, please. I'm surprised all Americans don't have tummy aches every day with the crappy food you're getting given served up. You know? And then everyone working hard. Every option for convenient food in America seems to be poisonous. It's not funny, but it's true. And the fact that it's true is sort of funny. Get well soon, Sarah. The trick is to cook your own food. Yep. And to buy fresh vegetables. Fresh vegetables and cook your own food, but who's got time for that, right? Very few people, because you have to work hard, right? Because the cost of living is so expensive. It's like so ridiculous. And rents are like, it used to be that you shouldn't spend more than 30% of your income on rent, but I don't know how you're supposed to manage that nowadays, like, because it's ridiculous. Like the average rents here, like this house would cost you £2,600 to £2,900 a month to rent, the one I'm sitting in at the minute. So if that was a third of your wages, you'd have to be making 50 grand a year. Which is way, way, way above the way above the average wage. You know, twice the average wage or something. And how are you supposed to afford that? Like, you're not. It's about the average wage. This house costs you about the average wage. You have to spend 100% of your wages to live here. So how are people supposed to do that? I don't know. I think that's because of the way, you know, the property ladder works. You're supposed to buy a house that's more than you can afford, do that house up, sell that house, and then you've got a greater deposit and you've got a better value mortgage, and then you can get like a slightly better house, and you're supposed to do that a number of times. That of course drives up the price of houses even more than it would otherwise. That's what I've been doing. And not like I feel bad about it, but you know, how you're supposed to do that and have a job and go and do the shopping and cook all your food fresh. It's like not possible. So you're going to resort to convenience at times. You have to pay for convenience, which means you've got less money to pay for your rent. So everything's a sacrifice. Everything's a choice between two evils. It's a tummy ache, which you're only going to have because you need to do your job. So then you have to do your job with a tummy ache to pay for a house that isn't as good as you want, that you can't really afford anyway. So everything's a little bit sad. It's a little bit sad. Whoops-a-daisy. I like steamed vegetables. Same here. And our fried chips. Trick is meal prep on the weekends. Yeah, all you need to do is employ an awful lot of different tricks. But then if you're making them on the weekends, you're having to freeze the food, so it's not that freshness, so you're not getting the benefit of eating the fresh food, which is like what you're paying for when you buy the fresh vegetables. So, you know, you might as well be buying the frozen food, in which case you're quite often buying the processed food. And so then you're missing out on the best benefits of that behaviour in the first place. So it's again a sacrifice you're having to make. Mostly DBZ has got some good tips, but you'll never escape that crushing force, those crushing economic forces. No, don't make like a month's worth. You make enough for the week and you don't have to freeze it. Well, then it's not fresh anymore, is it? Like a week later, say you're making vegetable soup, so you're not eating that 2 days after you make it, because then it's lost all of its goodness. You have to boil it to make the food anyway, so very much you're looking to... Anyway, this is a silly conversation. The truth is, like, you want to eat it as soon as you possibly can. A week later isn't good enough. So, I mean, I agree with you, mostly DBs. That's what you got to do. But it's not the best case scenario. You can make it and fridge it. Yeah. Does TA School by Jamie and Rocky still offer one-on-one sessions? I remember when it first released back in December 21, that was part of the sign-up. Yo, Benson Kitty. The coaching availability is Sunday night sessions on the Discord, and they're usually now run by Jake and Lucas, who are absolutely fantastic, and you're not missing out on anything by getting it from those guys instead of us. And now those two are offering one-to-one coaching for people in various time zones to help them level up. So you're getting that too, and often you'll find Rocky and I there doing those things as well, but it's hard to do it on a schedule because Rocky's got chronic fatigue syndrome, so only has a couple hours of working hours a day, and I'm picking up all the slack everywhere else. In my greater life there's a lot of it, so I can't promise certain specific things, but the fact that the course comes with lifetime availability to that coaching site means that you'll likely get as much as you could ask for of one-on-one from Rocky and I over the piece, and You're also getting excellent help from people like Jake, Lucas, and Bad Man Majama occasionally now as well, and other people too chipping in to lift up people's abilities and level people up. So you're getting all those things as well. And yeah, so I mean, you're still getting those things, but not on a schedule every week at exactly the same time. And so I suppose it's like, yes is the answer, but probably not in the way you're asking. But there are other things that like make up for it, more than make up for it. And I stand behind anything Jake or Lucas said, 100%. If you could take what comes out of their mouth as coming out of mine. And not only that, they've got a very, very good method and means of teaching. So, and often they'll be better people to speak to depending on your personality type. Especially if I'm get to the point where I'm about to get fucking angry, then you'd be hoping it was someone like Jake or Lucas who don't lose their patience. But yeah, I mean, you still get a lot of, like, you're getting incredible value on the course, if that's the question. I have to eat broth and steamed broccoli for the next week to gain my eternal life. Steamed broccoli, yeah, keep the goodness in the broccoli by steaming it. You also used to eat the stems, the broccoli stems, that's where loads of good stuff is. You guys are making me pinch my belly fat and regret things. Don't forget to like. Pinchy, pinch, pinch. Tubes, excellent course. Tubes, legend. Good to see you, mate. Thank you for your response. I'm walking away from the buy huddles DRS indoctrination from certain online groups and trying to leverage my shares to actually make money rather than unrealized losses. Good, smart thinking, Benson Kanisa. Yeah, yes, ideological approaches to things don't really help. You know, they don't really help. My own suggestion are do things that make you money as well as making that difference you're looking for, and make your own decisions and decisions that suit you. And Benson, you've been, I mean, I remember you maybe like 4 years, like, I don't know, 3 years at least, like, the conversations over that time have been very fatiguing for people that are trapped in situations that weren't their own choices. And making your own choices, they're much more memorable decisions that you can, like, then, you know, you don't blame other people, and so you're not, I'm not saying that then you then internalize the blame, you then make it useful, right? Like, if you can say, right, it wasn't the market's fault, it wasn't like Dave's fault, it wasn't like Smelly Big Nose off Reddit's fault, it was my own decision, and I can make different decisions, and the way that I make those can be based on a system, and then having a system that you can apply to various scenarios and say, like, this one would be better here, this one would be better there, this, you know, it only takes so long before you really get into the mode of behaving that way. And then, while it might not be profits come immediately with that, that's where you will get ultimately like a skill for life that over a period of your life will make you much more than you would off of any one stock. So that is definitely the right way to look at things. Just navigating around Discord seems straightforward enough. Smiley face McTavish, good stuff. Good stuff. You'll feel better the day you do the better. The external results show later and are none of your business. None of your business. They're just you're just there for you to enjoy. Good stuff. Good stuff, Benson. You know, you're in a commune with yourself, right? In your future self, they want you to make the hard decisions now so that you get the benefit of them later. And so that those good decisions compound, and so that when they do arrive later to your future self, that they'll be in the sort of position where you've taken advantage of all those investments in yourself to now be deriving the success from them. And like, when you get into a continuum as a trader, you know, you don't give a shit about the P&L at any given period of time. Of course, you'll be using these trends to track your own performance, but like, that's not how you judge your own success at all. You know, it's always about committing to the process. So by the time you arrive with your future self, that won't even be a thought anymore, right? It'll all be about your system and making it better. And then you'll cherish that system the way I do. You'll love it the way you would a family member. You'll hold it more important than your car, you know, like, or your house. Like, long ago, like, that would have been the case for me. you know, like also like when I walk up and down the street, or I'm going somewhere where I've not got an immediate thought process in my head, you know, they'll take time to get there. So I have the thoughts in my head like you do every day about the stuff and the things that go, and I go to feel good about. And like everybody has an id, an ego, and a self, right? You know, your own self is made up of these different things. I think about what the good stuff, you know, what's the good stuff, and the good stuff is my edge and my system, and that it's always getting better, and like my team and the Discord and like the progress we make, and how these people have a system, they have processes, they're going to get better, and they're going to follow in each other's footsteps and keep making it, you know, blazing a trail for others, leaving a path behind. And how that's going to build up and build up and build up. And then I look back and now and say like 3-4 years worth of that, and really, really positive, you know, take a lot of confidence from that. And like you'll be the same, you know, 3-4 years from now, no matter how hard it seems at the minute, 3-4 years from now, you'll be walking around thinking, not like I made 100 grand, I made 50 grand, whatever, this sort of shit, which is a grotesque way to think anyway, right? Instead, you'll be walking around thinking, man, I'm doing things the right way. You know, I can rely on myself here. And that'll be in great contrast to any anxieties or worries you have in life walking around at the minute, thinking like, oh, fuck bills, or oh, fuck, you know, the X, Y, and Z happened and I regret it, or whatever. Now, in future, it won't be regretty spaghetti. It'll be like a positive system that you're working on and improving. And, you know, humans are built that way psychologically to feel like that's better. Same way that you put the fruit in the fridge and you don't have to worry about making it tomorrow or the next day. It's the same way, you know, human beings have psychologically evolved to feel that, and it's exploited by capitalism, and they sell you new cars so you feel good about these products you buy, and you get retail therapy and whatnot. And all of that is not like human beings are somehow predisposed to feel happy about buying a new dress. That's the way capitalism has exploited that evolution of our own psychology. The truth is, you're meant to, as a human being, feel good about the work you did yesterday paying off today. That's why you make you feel happy. Happiness itself is an illusion, right? It's that satisfaction from doing the hard work that makes you feel happy in any sort of a way that's actually meaningful. And committing to the work now, doing the process, starting that process now, allows you to benefit from feeling that way later. Otherwise, later on, you will come to realize that truth anyway and regret it all the more that you didn't do it. So you're making the right decisions. Don't forget to forgive your past self too, or thank them when they did well. But most importantly, don't forget to care about the present self the most. That's a nice way of putting it, Nana. Mostly DBs. One way to start might be to do TAs on companies you know. Definitely companies you know, especially if you've got contextual information about those you work with and that. And then you get bad news or good news, or you think about your company's development or changes, and then you look to the chart and see how that plays out in price over time. Things like that makes a lot of difference. Funny you talk about future self. I'm getting my PhD in MGMT entrepreneurship, and took an economics course that the professor discussed the future self quite a bit. Good man. Where are you taking it? Who's your professor? Tell him to watch me. Did that with BBY, watched it drive me into the ground, but it was my decision to hold home for a turnaround. It never happened, but it was my decision, never regret. Matt Tavish. Never regret. Yes, not point regretting it, right? Regretty spaghetti. Regretty spaghetti is a dish best not served at all. Today's button. After Lips and Pops, where will the Doomslayers be gathering be Ibiza? Yo, ravioli. It doesn't really rely on lips and popping in order for us to have a meetup. It's mostly to do with what suits everybody and it being, you know, possible for everybody. So lips and popping probably facilitates that for others who wouldn't be otherwise. But I'd like to do it somewhere in the south of Spain, where I lived previously, and I've got lots of friends and can organise like a really full-on, properly good value trip for people, you know. So you weren't just coming over for the meetup, but you also got tours of the Granada, the Alhambra, the caves, you know, underground caves, triple down to Nerja, and then we could have a huge party in Marbella and properly live it up like the millionaires do, while also seeing like the world's most visited tourist attractions and getting extremely interested in culture and history from the best tour guides in the region, who are all my friends and run by my friends' companies. And then you'd be able to get VIP access to things like the Alhambra late at night when nobody else is fucking allowed in the thing, or private tours of like the underground caves, things like this. Awesome stuff that you wouldn't get anywhere else. So I'd like to organise it in around that sort of thing, more than just a meetup, but like sort of once in a lifetime opportunity that like money can't put a price on, but it should also be the same price as a normal holiday anyway. So that sort of thing, and then top it off with a nice big party. You could also then get the boat across to Ibiza. Last time I went to Ibiza, I've been to Ibiza a number of times, quite a number of times, probably more than I can remember, but lots of times. And I've been all around it and done all sorts of things and anyway, long story short, I'll tell you all about that some other time. Anyway, last time I was there, we got the boat across from Ibiza after the party, me and the person I was with, to Barcelona, to a manager of a big water park there called Ventura, who gave us like free passes, and that was brilliant. And you get in at the right time, you don't have to wait in the queues and all that, really good fun. And then he was travelling back down to Sevilla. So we went down there, got a tour of like the old palace there, which is like amazing. And then we hopped on a bus ourselves to Granada and spent time in the old town there in Albaicin. I showed her the Alhambra with your boy that runs the tour group, and then down to the beach again at Costa del Sol. So that sort of a thing, it's not actually all that much travelling, and it's nice and comfortable when you are travelling and you get to see amazing stuff. So that's what would be better, right, than just like a meetup, which itself would be amazing anyway. But like because the community is so vast, right, like we're from all over the world, and like this channel in particular, nobody's left behind. So you want to make it so that it's accessible for everybody. So if Lipson was popping, that'd be good. And then in the meantime, you guys are encouraged to have the meetups of the people that you like anyway, in the areas you can do it with, which doesn't cost you as a lot of money, so you don't have to make a sacrifice to do it. Those sort of things are still encouraged anyway. And those people, like the heart of the community, those who are most involved on the Discord and so on, they would be looking to organise those things. There's been a couple of meetups already. So those sort of things, that's what you'll be looking at. I have family in northeastern Spain, but I've never been down south. I would love to see more. I'd love to see the Alhambra. Yeah, it's amazing. You would, Diana, it's amazing. Northeast of Spain, up around Barcelona. Barcelona's losing its beach. The sooner you get there, the better. Right, so it's 5:30. Don't crack, don't bother, good. Don't like it when everything cracks all the time, for no good reason. Right, so GameStop back into that level, that interesting level. Oops, I'm drawing everywhere now. I didn't mean to be drawing everywhere. In fact, I don't want it to be confusing, so I'll try and delete some of these. No longer need most of this. Good. Well, I'll keep it on 1 minute because that seems clear enough. See these past moves in price, the gap, the retracement into those levels, bouncing and finding support, the higher lows, subsequently one higher high. And looking to try that again. Having had a higher high without subsequently a higher low means that this might be the higher low. That's possible because you're back within that trend line, that bright blue support diagonal. And so you could now go on and put in higher highs anyway. Those areas to be targeting 25.16, 25.45. Looking left, you can see there important distinctions in prior price action. And it may well be that's where you're looking. If you drop out of this again, Gotta be careful there too. 15-minute time frame is good to see this broadening wedge on. You know, and if you do make it back above that resistance level, I suppose you would be cognizant of this guy. And you can just be dotted. I don't know why you're not, in fact, dotted. Ugh, dotted's horrible. Instead you can be dashed. That's better. Just, right. Oh, can drop you down. And then this line doesn't matter. That matches up nice. This looms large above us. Zoom. Wow, it gets really, really large when I zoom in. You've never been to Spain, Zoltan? Jamie, can you take a look at CRSR? Boing, 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 CRSR. What time frame should we start on? None of the drawings on this chart. Which one are they on? I think they're all mostly different. Yes, so this is at long-term lows, has been for a while. Careful there. You know, 1080 would be in a good place to manage risk on this, so would have 1026, and it is just below there. But that being said, it's put in its third touch of bullish divergence now and met that trend line. Top side of the bearish control zone. If it pushes in and makes that trend line no further and then escapes, that would look good. It wouldn't look great on price because it would only be able to do that if price was pushing lower, but at this stage it is offering potential opportunity. Across this top side of price action, you've got 3 touches there, 4 touches, it's definitely real. Escaping that would be exciting for price. You'd have this guy is the all-time fib currently, so your 236, 382. And then, you know, from this point I wouldn't be looking much more than that, but like ultimately maybe if it does really explode, you'll be looking at that golden pocket. Then we talked about this on Discord, didn't we, after somebody mentioned it previously as a potential merger opportunity, and we were saying that like whether or not that happens, there is a trade for you guys to take on this thing, but you have to use your own risk management, of course, as long as this set up here. Not bother with that from here. Then maybe if you're looking for the moves back up again, you'd be cognizant of these levels of resistance. And of course you'd want to be aware of any gaps or anything. What we're looking at here, nothing desperately important there. One of them in that there, 1761, that's interesting. 4-hour time frame, let's focus on that guy. How would you get there? That trend line on 4-hour isn't there. Mostly you're just talking about how it's like in the bearish control zone and you don't like arguing with it there. The resistance at the top side being below the bullish control zone, you could take it to be in the bullish control zone, meaning oversold, as opposed to above it at this stage. And I'm supposed to have this on log. Do I have that on log? Makes it easier for my analysis because I then draw Fibonacci's on it. Anyway, you've got that downward sloping diagonal too. Cut that guy out, you still get a number of touches, but I would just ditch it because I've got more important things to look to on that. And those Fibonacci's that we just drew from the peak there, I still got it on. Hope not, I don't want it on, right? Those Fibonacci's, they also match up with some of these. 886 at that guy. Gap would be a 1.14 extension. That's where it is at the minute. If you were to push much lower, where would it go? Speculative fib there loses value really quite quickly. why am I drawing it down to there then when I'm saying the opposite? Ugh. Yeah, so all of these areas, all of these will be likely, every line I've drawn there will be significant on any retracement. So, because it's a downtrend, it's very dangerous. The way I'd look for a move would be when RSI is putting in bullish divergence, which we've explained a number of times on the show today. So, like when like, what's a good example? Here, right? RSI was clearly not as low. Price was lower. And then again here, price made like a equal low, but RSI clearly much higher. Subsequently, there again, RSI lower. Can't see, it's too tight. It's too tight in there. It's 4 hour, mind you. I'll probably find it on other ones, but you can go across these lows. Lower on price, higher on RSI. That's when you get good moves on this thing. Also, when you get that, you're also getting this cross from MACD back above its own signal line, from below the center line. See, each of these 3 occasions, you're getting, if I can just drop this on, I'll show you where it's happening. You do it on the cross. And on these moments, this is when you're getting a reason for an impulse move to the top side. Now, it doesn't necessarily break the trend, so you'd want to be following your stop and profit behind any pullbacks. Stoolbacks? You know, and then these areas, where is the vertical cross? I mean, I can't do it there. It's after the RSI. Oh, I've drawn the RSI wrong on that one. It's like all, whoa, jeepers. It's like all the way up here. So yeah, when you're getting the RSI with the bullish divergence, especially when the RSI climbs back out of the bearish control zone, even less risk then, right? Even less risk, which would give you, like, I'll zoom in and show you what I mean there. So the signal you're looking for on Corsair is the bullish divergence on the RSI, and then the RSI itself climbing out of the bearish control zone here, climbs out of the bearish control zone here, climbs out of the bearish control zone here, right? You've got, previous to that, you've got the bullish divergence on the lows, or during it, you're getting it. And then the MACD, you're getting the cross of the signal line back above the MACD line from below 0. And at those points, you're getting moves. You know, you're getting this move, 31%, this move, 20%, this move, 11%, so like 30, 20, 10. Maybe, what's the next one? What's the next one? Well, it can't be 10 again, but it could be half of that. It could be 5. Maybe two of them weren't half, they were just... Anyway, point being, shut up, Traceboy. I should go down in time frames and look at more stuff, is the point. That's very oversold there, right? Like, historically oversold. Lower lows than it has been previously, but not than this wick here, that guy. So there's a touch of bullish between them, but I'd say that this is a new phase of price having rolled over. Each time it's resetting the RSI. Potential cross there on the early, you're not getting, you know, you probably are getting like more and more oscillations, but you're not getting the 4 hour divergence, which is leading to like the bigger percentage move. So I'd be looking for that. As to whether or not it's recovered, I'd take that same idea. You know, you've got the bullish divergence with the price pushing lower, but on the hourly you might be looking for a number of touches, like the price is getting lower, or itself not necessarily so yet. And you've got this cross of the MACD below the center line, but you're not getting any velocity in that move yet. On early on the 15 minutes, you're getting loads of divergence there. You've got your MACD cross, but it's bouncing off the center line, not pushing through it. And like, that's what you're looking for, it to move through the center line, and for the RSI to hold back above the bearish control zone, and then price to make the move probably in at around where it is there, like the does this give you more than? Where is the golden pocket on this? And let me measure those retracements on each of these moves. So we talked about the 30%, the 20%, the 10% and all, but they're also 786, and then the next one was a golden pocket, and then the next one, see the next one will be a 50% move too, won't it? Is that it there? Suppose you could try that, and the move was a 50% one too. Yeah, so you had like 786, gold 618, 0.5, and then if that was all sequence was all true, which is now a little bit silly, but if that sequence is all true, now you'd be looking for a move back to the 382, and breaking that 382 would be like something new. That would be something new for this thing. And so this is the levels it needs to get back above. 10 spot 66, which isn't a huge percentage move from here, obviously, but it might get people back in profit who were entering previously, and then allow you the opportunity to add a stop. So 4.55%. A golden pocket retracement, which would then be the next place you'd look to, would be a 10% move, and if it was to touch this downward sloping resistance, and a 20% move back up to around 1247, that breaking would be interesting because of this gap, which is still on the 4 hour. Don't need all of this now. Well, so that would be interesting, you know, because it doesn't actually break the structure of price, and so it doesn't present a huge change to the theme on this chart. If price is to make it back above this downward sloping diagonal, right, on daily time frame or not, who cares, right? It's not real. It's the horizontals that matter, and where they intersect with it give you a nod to potential price movements. But the diagonal itself isn't crucial. It's the horizontals are what define higher highs and higher lows, or lower lows and lower highs, and so that's what matters. And you don't need to break the most recent high. Like, these are the definitive ones, right, in it around this zone, and then in it around this zone where it approached that diagonal. That gives you the trend highs and lows. So you know, you'd be looking for it to, if it's not going to break with this is a lower low, this is a lower low, and this most recently is a lower low. So like price could easily move from here back up to this level and close that gap at 1839 and so on, and then come in and test for the idea of a higher low, and then a low anywhere back up where it is now or higher would suggest then it could go on and try something like these moves up to around 2830, that sort of thing, which is totally plausible. Totally plausible, so it is. $10.60, you've already got a flash at that first target to aim for on the 4 hour, not interrupted. 1 hour. Oh. You'd be looking for, still that's based on the TA we were talking about more than anything. 1269 in and around that downward sloping resistance. That's another area that you do have a flash that's interrupted at the minute, so you'd be waiting for the trend to start establishing on those lower time frames. But interesting. And yeah, so like that's what you'd be looking at, a recovery following that pattern, and minute cognizant of the fact that it is in the downtrend, and the areas to manage your risk most recently have gone through, but price probably tests back to them without too much bother, because it's bullishly divergent here already across a significant time frame. So it's not presenting an immediate go, 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 but it is giving you hints of that. That would be the strategy to look to. 4 hour with those things we talked about on RSI, and then also the right signature on the MACD, and then you'd be looking at those moves, that downward sloping resistance and whatnot, and you could slap a risk reward on that at the time, make it work for you. I betcha you could. And I'll get back to looking at that thread on Discord about Corsair if you like more detail, and if you want to clip this, if somebody does clip this little section here, or at least give me the timestamps when I spoke about it, then I could maybe make a clip and put it on there, which would be helpful for people that are looking at that trade. Thanks very much for the question, Kitties. People will be like, why is he answering his question? He didn't need it. Because he's been a member for ages and ages, and he's on Discord, so you know, and it's an active trade that we've already talked about. So there's all that. Plus he donates all the time. He's dead nice. So that's why. Yo, Kitties, cheers. So that's what we're thinking about. Cost 13.47. It's doing nothing. It's got a flash at 421. It's absolutely screwed, and you've just seen that, and you shouldn't have, because it's a secret. Anyway, it's absolutely screwed. It's a piece of shit, and I don't care what it does in the meantime. So if you're trading it, manage your risk. GameStop. 1 minute. That's good, you know, not back at support, again at resistance. That's not great. Don't go through the center line now. Don't go through the center line. But we did say, like, a sideways price action coming up for lunchtime, whatnot. Maybe you're looking for a test to put in that higher low before you look for that higher high, and that would be in the sequence of trend, and in between time, it rests on patience and not getting carried away with your own psychology. Bitcoin, what did it test back up at? 56.8, above 57 nearly. Still put that in 4-hour context. It's got a lot of work to do before it recovers. Careful there. We've got a big post about Bitcoin in the crypto room this morning from Rocky Outcrop's video, and a little bit of an analysis of that and breaking down the things he was saying in different ways to help people who would see it slightly differently. So that's what we're looking at there. Patience, careful, aware of this sign, not getting carried away there. I hate the way the MACD just doesn't update properly. Logarithmic RSI so much. I think it's just obviously way better, but some people get confused. So if you want explanations, rightio. What's Jackbox saying? We can all split the parrot. That's a very small piece of parrot each, Kevin. Yes, risk averse. Like the idea of trading, good point there. The idea of trading is to reduce risk as much as possible. And parrot, say, bloody hell, that does sound like a bit of work. Good work, Sarah, every week, yo, good work. You're welcome, Keys. Thanks, Sarah, for sharing those links. Okay, alrighty. Get him an owl. You know, Coco would kill all of these animals. She wouldn't have the... Like, maybe she would somehow decide to make friends. But I doubt it, right? She'd probably make friends until I went to sleep, and then I'd wake up to some feathery mess. Stranger things have happened. Parrot or riot? Yeah, careful, James. Careful, James, with those smells. Careful with the smells, James. Okay, let me know if you'd like me to do anything in particular, or if you've got outstanding questions, or you're not sure about things. People in the chat box too will be able to help you greatly with these answers now. Really leveled up recently. I say recently, but over the last 6 months, 12 months, people who watch the show, the regular viewers and whatnot, getting much, much more confident in their own approach. And those people who talk the most typically are those people who are feeling like better and better about their own actions and behaviours, as I saw from Sarah there. And they're careful to always communicate with risk management first, which I really appreciate. KT was good at doing that the other day, so everybody is really. But think about that idea of managing your risk as a positive aspect to trading, and you know, these things, when you feel scared, like, they're good warning signs to be taking the right actions so that you're protecting yourself. Some people think like you can't make money without taking risks, and that's true, but like, you want to make sure those risks are as small as possible and that the rewards are as great as possible. And you can control your risk, but you can't control the outcome of price. So looking for those opportunities where your risk is low and your opportunity is high. Like, that's the objective. So there's no reason to be like scared of the scaredness, but just remember, fear is the mind killer, and there is no reward without some risk. So you'll all be able to help each other there, won't you? I'm going to put the air fryer on, and I'll be back in a second. That's the MACD. Nah. We've got a really good walkthrough on how to use the MACD and RSI on the course. Really, really good walkthrough. And in order to know how to use the MACD properly, you kind of have to know what goes into it, and people just don't know, which is weird. But you will know after you take the course. My goodness. Care to take a look at SUUN? I'm back. Look at that. Look at that. We've lost viewers. They're upset. We've lost that upset viewers. Just check this quickly. What's it done? Nothing. It's done nothing. Other than what I said it would. So, sound. Weekly time frame, strong recovery there. Good to see that. Continuation divergence. No reversal divergence, but lost the momentum, pulled back up again. Went to oversold. Did put in a lot of divergence at that stage, but nothing that would be all that surprising there. Losing the center line on the weekly is not great. MACD's had a negative cross, but whatever. Daily. Right. What? I took the opportunity there to peel some spuds, and as I was peeling the spuds at the window, Steven Seagal turned up. I don't think he's there anymore, so I gave him the spud peelings, and he had to move away from the window for me to put them on the window, which is good because then he shits on the bar staff below and stuff. But he had to move away from the window, and does his kung fu poo. The kung fu poo, Steven Seagal, and the kung fu poo is his killer move. So he had to move away from the window, and in that moment he gave a swoop down and annoyed the bar staff. That's really good. And then I put the peel there, and he came back and he started eating it, and he looked at me like, "This is absolutely disgusting. What you're doing to me." And I got the sense that Steven Seagal's a little bit ungrateful. So that's him on the potato skin rations for a while till he shows some appreciation. Cheeky Steve. So I got that down to the 4 hour. I can use this now. I can't use that now. Use this now. I suppose it's relevant, so I'm going to include it, but it's not extremely important. That's the only extra one we got. The only extra one we got, but whatever, it doesn't matter. If it is, it is. So this gap meets an important horizontal level of resistance, now likely supporting at 2 spot 39. You'd be very, very likely to see a bounce if price got there. How far it would go might be restricted by the top side of that gap at $3.20, but that's like, what is that? I could work it out, but they might probably get it wrong, and then I'd look stupid, and this is the internet. 32% move, a bounce from there would be maybe a good trade. Go back up again and do this from that's all you're getting there. This oscillation held the golden pocket, and as this oscillation golden pocket towards the bottom of that gap, it's the top side of it. Top side of it, golden pocket. Bottom of it is a 786. I don't need another line there. I don't need you anymore either, mate. So you've got a lot of reversal like this is continuation divergence on these most recent peaks. So I'd be very, very cautious of the fact that this has pushed so much higher, but price has failed to make it back above even this peak, which was like escaping from the bearish control zone. That did become the previous support line, which might speak to a change in trend, but we're on the hourly time frame. We're not seeing any positive trend on any time frame with higher highs and higher lows. I'll just borrow you because I put you up. Get up there. And you're meeting that downward sloping resistance. So I'd be very, very cautious of this thing, meeting a natural level of downward sloping resistance. It's very, very overbought at the minute. And the reason for the inflection was this bullish divergence, which you can see with price going more or less sideways here. And you're clearly getting these higher lows on the RSI here. And that trend line would break as the center line broke, at which point you'd have so much left to run to come down to where it normally goes that this could come back down again and test this sort of level. You know, you've got a number of tests there, though that is the wrong line to use because I've been using these, so I'll just keep using that and delete that. So, you know, if this thing doesn't manage to break up from here, and breaking up for here would be taking it back to 450 and 10% move. Again, very unlikely, and even more so when you see how it's already overbought, then you might be looking for this to come back to 388. That doesn't hold, the test of 352. And at this stage, you know, you'd be talking about the fact that this was divergent high itself was a reaction to moves we saw elsewhere. These lows on the RSI putting in these return to where it was previously back at these areas suggest there was a touch of bullish divergence, so you got an oscillation back up again, but it wasn't significant, being that it didn't even manage to make 50% of the previous high, so it failed to demonstrate any meaningful strength there. And now you're trapped in this awful area where there's a little bit of resistance, so I'd be very cautious of this thing. 15-minute time frame, you know, perhaps that's not the end of the world. You do have a positive reaction. It is a W bottom. This thing could be turning around, but is it really? On the 15 minutes, it looks like it's actually the sort of area we would turn around as well. 5 minutes, and you've got bearish divergence. It could be a flag, but in context, I'd say that's not really. You know, it needs to be back above 427, at which point you'd be looking for a move to 455, and then that 30 cents, 8% move or something. What is that? 6.6, 7% or something. That would be the best area to look for, like a low risk trade. It still doesn't make it a huge one, but you get an entry that can be like right next to a stop and then a target, and you can get a risk reward out of it of 7 to 1, and maybe that works out, you know, but like the capital you need to put on to get a significant return there might be that you're looking at all the things, but that's the idea. The recovery on this daily, the bullish divergence at the low, the failure to put any strength on the move to the top side, I'd be very worried about this coming back and closing that gap, because as well closing the gap here, you'd be meeting this trend line, and a lot of people would be anticipating support in it around this level, so I'd be very careful that you know, I'd be looking for it to test in it around that. And in the meantime, I'd be very surprised but enthusiastic if it managed to break above this guy, and if it did, then, you know, targeting this guy. That's the best trade on from here if it breaks up, but in actual fact it probably doesn't break up, it probably comes back down. And you know, if you're looking for a short trade, then a different situation altogether. MACD crossing up through the center line here, RSI in the bullish control zone, but it's now meeting resistance, and so like these positive signs that you got from the bullish divergence here and from the MACD crossing up here, they've taken price to where it is at the minute, oversold. And then with regards to the 200 period moving average, you know, maybe you'd only be taking that trade to the 200, which is where it's made its way to, retrace back from subsequently. It's trying to hold a 236, so I'd be very, very scared, scare, if this thing broke below 4 spot 10, 4 spot 12, which is right where it is at the minute. It's done the move that everything would suggest would be, is a move to here. It's done this move, which in context is a 9% move. You know, that was the move looking for on this thing. The cautious of it is because it's in a downtrend and it's not fantastic. It's not a fantastic trend, doesn't really help you reduce your risk, so I'd say careful with this thing. The lowest risk trade is when it starts making an uptrend, and that even doesn't change the structure of price, but on the lower term time frames gives you an opportunity. If it breaks down, then resistance at a 236 likely, and probably comes back to 395, then that probably breaks and probably comes down to 387, and if that doesn't hold, test to 350, and if that's not on, closing the gap. And it's more likely that long term you're looking at this thing closing that gap and then moving up based on what we've seen, including this trend line that could catch the lows on price action. So I'd be careful there, Luke, very careful. Have I got the camera back on? No, I didn't. Oh my god. I've got the audio on. It looks like I do. If you're allergic to cats, you're allergic to their saliva, you know, which they lick themselves and then leave it on, and then you get allergic to it. That's generally what people are allergic to, as opposed to the cats themselves. It's their saliva. Seagulls, they don't lick themselves. I know they do nibble at themselves, but I don't think they lick themselves. So the allergy is probably not exactly the same. I made a purchase of Lipson. Good to hear, Orbital. Interesting. Kitty with the incorrect information in the chat box, despite the fact that she's quote unquote allergic to everything. She thinks it's the dander, but it's not. It's the saliva, the cat's saliva you're allergic to. Seagulls don't have the saliva. At least I haven't seen them dribbling. I haven't seen Steve dribbling. Katie with the misinformation. Hardcore people associate it with their hair because the hair is covered in saliva. Exactly, most lidibas. Lol, you wish I was wrong. No, not at all. I really don't, Katie, I really don't, but unfortunately you are hugely wrong. Hardcore people associate with their hair because the hair is covered in saliva. Yeah, it's just they don't want to think about the fact that cats clean themselves by licking themselves and they're covered in their own saliva. They also lick their own bums, and so you're covered in that too. You gotta be careful with these cats, you know what I mean? Ugh, disgusting. Ugh. I'm not in the habit of consuming cat saliva. Well, that's what you think. What's your cat up to when you're asleep? Probably sitting on your face and dribbling into your mouth every time you yawn. Cats love doing that. That's what Katie's cat does every day. Dribbles all over her face when she's asleep. But I love Fox's kisses. Foxes. Oh, the cat's name. How confusing, huh? How confusing. Oh my god, GameStop, what are you doing? How dare you? How very dare you, GameStop? Every time it reaches these $25 levels, people closing out trades because of that resistance point. This resistance point here. And a lot more longs and shorts. More than twice as many people long as shorts. So it's those shorts. They're not all that bad anymore. It's the longs, those nasty longs. Does that actually work? Look, I'm gonna pay you to make it full screen. Hey, it's perfectly big enough already, you big dum-dums. Plus I can just do that. Ridiculous. Plus it's ridiculous, man. 7-day free trial of making the screen full size. That's how they're a good middleman. You know, we'll give you this full screen feature for more money. No thanks. What? Okay, you're coming in for a potential bounce now. It's either here or it's at 24 spot 24. Unless it does something that's very unusual, which like it has done. There. But that was at a close. That was at a daily close, and then the next day's open. And distinct difference is then in price action with a gap.
I need a volunteer.
A volunteer?
Come at me with an imaginary knife. That's how it's done.
What? Yeah.
Who's next?
That's me.
Chris Ross, $20. Thank you very much, Chris, who's, oh my god, GameStop, exactly. Chris says, would this be an optimal type of strategy? Say, dump near dated in the money calls. Dump them, meaning you already own them and you're selling them early in a gamma ramp. Flip the profit into shares and buy further dated at the money, near the money calls, and hold for the ride. Yeah, that would be a very good strategy. I mean, if you're talking about price in a positive bull trend, that's very much a good strategy. It might not have a desperate impact on the float or on the short side of the trade, and you might not cause a gamma ramp. You in and of yourself, any one individual trader, find it very difficult to cause a gamma ramp on a large market cap stock or on a really heavily traded stock. So it wouldn't necessarily be yourself and yourself alone that would be able to impact price with that strategy. But dumping in the money calls and buying at the money calls with a further dated expiry does leave you with an awful lot of potential upside. It's just that upside then relies on there being a positive trend in price with higher lows and higher highs. And the time at which you rebuy, so you dumped it in the money calls and then you buy at the market near the money, then essentially what you're doing in that instance is you're just rolling your contracts, right? Closing one, buying the other with further dated expiry. That's just the same thing as rolling contracts is what it's called. And people roll contracts to get that further out expiry because they've got more time value in the trade, because it's further away, there's more potential that it'll achieve those targets. Those targets very close to the price currently means that the potential for them to be finishing in the money is still quite high. And the further dated expiry means that you're getting more value, time value in the trade. But again, it relies very much on a positive trend, and you're absolutely best doing it when, at various times, because especially ahead of volatility, right? You would like there to be less volatility than normal, and you would like to be taking the profit back from selling those in the money calls at oscillation highs, and then buying those at the market trades at those oscillation lows. And then you'll benefit from the positive moves on price. But the only way to do that is, of course, to be cognizant of the trend. And then interact. Why are my drawings disappearing on different time frames when they're just circles? That's really annoying. And now where have they gone? Now they've just disappeared completely. There they are. Crap drawings anyway. It's crap drawings. Screw you drawings. So yeah, it's great strategy, Chris, but the nuances to it are slightly more complicated than just than when you were able to fit in your very generous message there. Thanks so much for doing that, mate. It's you're going to have to also put in the current price behavior, and trend is such an important part of trading, especially when you're trying to do that kind of a thing. To exploit the trend is to do exactly what you said. That's trying to exploit it, and it's trying to exploit it with option contracts. It may well be that buying and selling contracts in that way isn't itself the best way of managing your risk. It is a good way of exploiting the trend though, because you know, you're still using option contracts for directional trades, and you eat the premium you're paying on that if it all goes wrong. And the option chain on GameStop is quite expensive if it was GameStop you're talking about there. So it's a good strategy if you're exploiting the trend well. It's not one that's using options to provide you with insurance, but instead it's a directional trade. And doing it with options does provide you with the asymmetric risk return. But you'd want to be very cognizant of the fact that you've got a 4-hour positive uptrend and you're taking those buys at the lowest possible place and price on that 4 hour, and you're taking the sells at those oscillation highs. And it's difficult to judge where those will be if you're an emotional trader. You really need to have like the trend well quantified and well understood. See you're getting back above previous highs, and then start taking that position on the long side down, selling them. And maybe you do it in trenches as price goes through previous highs, and then maybe the buys come in trenches as you approach previous lows. Again, I'd be using stop losses and whatnot to preserve capital as best as possible. But yeah, it's a good strategy. It makes sense. There's people here in the chat box will be able to give you more context if you've got more questions on that same topic. So do ask away with more detail on the ticker and the timing and the expiries you're currently using and what you're thinking. And it's not financial advice, of course, but I would say to you, over your piece as a trader, using option contracts for insurance on positions you've already got in terms of actual shares is lower stress and lower risk way of managing your behaviors there. Things like this, like that's just going sideways now. This isn't really useful in sideways price action, right? Because the option contracts themselves aren't going to change dramatically in price here, because price itself's not moving that much, and volatility is quite low, which is positive. But if it does pick up, it could very much be to the downside, because there's no real established trend. If it did move to the top side, we'd be laughing, but so would you be in anything? Also, this doesn't have options, so that's not a strategy. But like the sideways move in price action here means that throughout all of this time, you're getting closer and closer to your expiry. Bear in mind I'm on a 15-second time frame, but today is a Friday. Getting closer and closer to your expiry, and there's no options traded on this, so again, it's not relevant. But if this was an options traded stock, you're losing time value in those contracts all the time. All the time you're losing that time value, which is the premium you pay. So it depends on the stock, the trend, and so on, your expiries and how far away these strikes are or aren't, how deeply you're in the money and whatnot. And then, yeah, those two things mostly. Well, so we've looked at this. It's very white. It's very, very different colours. Do they have a dark option actually? Let me just check that. They probably do. They'll charge you. Hey, wait, that site's run by TradingView. And I try to charge you for making it full screen. Do you have what you like, TradingView? Get out of town. Oh my god. Oh my god. Oh my god. You still got GameStop on the screen. You do. Make it fit the dramatic profile that we like. That's got continuation divergence on it, and it looks dangerous there. So it does. There's something to be said with price at the minute, you know, something to be said about this. You'd like that a little bit lower, really. And as such, maybe you're actually looking at it like this. Even then, that's really stretching it, but it's, you know, some people would. Now that's all naff, right? That's all a bit naff. Gives you some targets though. And then you've got like, well, you've got continuation divergence, and like this is failing at the center line, and like I hate it, it's a ball naff and rank. It's also true that you've got bullish divergence. No, you don't really, but like you go up a bit, to go up a wee bit, you know, you've got a lot of bullish divergence here. And price action is going sideways, so would that still be a harmonic optimal point? Maybe, you know, maybe, probably has another such a divergence should it get there. This looks like maybe something because it's got horrible inverted head and shoulders. Maybe. I mean, I'm not recommending this, right? Because your risk reward has to be below the D. So, like, actually, you'd much prefer it to be like that. And then you could be talking about a 5-to-1 from here, or 6.5-to-1 on. You'd probably still get maybe even a 7.8-to-1. That'd be a better trade, like way better trade. But people will be excited about this idea. Oh my God, this idea! And you don't have to hold it below that previous low, so you can just ditch it. It's just that's like the cost of that trade is expensive. And why bother even bother? Why even bother, right? Why even bother? There's be way more moves in future. LPSN, what have you been doing? Still putting in those higher levels on this tiny titsy bitsy witsy time frame, those higher lows as well, holding this formation and looking to test those downward sloping resistance levels. Did it hold that? Where was it? 5.8. It got the 5.74858 level already. Is that today? No, it was Wednesday. It's not come down yet. It's hardly moved. Oh my goodness gracious me. This guy, what have you done? Nothing. What are you doing? Nothing. Everything's doing nothing. Oh guys, why is price so lazy right now? Price is extremely lazy right now. I can't carry anymore. Price is all like, I can't carry anymore. Yeah, Dana, does harmonic give you, does TradingView give you hints? Does TradingView give you hints on the level, or do you just have the fib levels memorized? Of the harmonics themselves, yeah, so you would know. I mean, there's some people have got like their favourite harmonics, and there's people in the chat box here better than me at doing them. And like more better at remembering them, who would put them as a higher priority in their technical analysis. They might not express great confidence in doing it, but they might do, and they'd be better at it than at remembering those levels and perhaps spotting them than myself. Like Tubes, a good example of that in the chat box there. Hi, Christina. But yes, I would typically just look to my own memory. Like the way to do it is like if you see an M or a W, especially if your M's at the top of a, it depends on the harmonic of course, but if an M's at the top of price or a W's at the bottom of price, then you would look for an XABC or an A, B, C, D pattern. A lot of people call them the wrong thing. A, B, C, D, which is like A, B, C, D. And if you get your A, B, C, D, right, say like, oh, it's back to that potential entry. It definitely was a better trade. Blue man X, stay away from the dodginess, eh? This is an entry now. Bluely divergent, at a support level, it's interesting, and you do have these potential targets, and while this is all absolutely naff and rank, it still could work out okay. So what you look for is like an M, that A, B, C, D idea, right? That's not it. Sorry. A, B, C, D. Right, there's a W with an A, a B, a C, and a D. And when you see A, B, C, D, then you can look back and see, was there an X? Like, right, this would be the X that come before it. And if you see that there is this, and that then you start working out from this move here, like what's the X to the A retracement, and where does the B come in? And in that one you've got a bat. And you would look for the D point on this then to confirm which harmonic you were using, along with the B point and the C point, and you'd put these in context and you'd say like, well, here would be a D, or here would be a D, or here would be a D, and like this would be the bat, this you know, depending on your B, this would be your crab, depending on your B again, like this would be your Gartley, whatever, and you'd have your big X, A, B, C, D. But the first thing to look for, the Gestalt thing, is that with your A and your B and your C and your D. And for most harmonics, you don't really want your D below your X, so you'd look back for your X and hope that your X was like back below this D and whatnot, and you might actually get something just like that happening on price right now, like something that comes up here, back to like these sort of levels here, comes back up. You definitely, typically this would rule out most, right, because your A here, typically you wouldn't have this C point, this is a C, and this is your A point. For the vast majority of harmonics, especially the good ones, you don't actually get a C that's higher than the A, so that would rule out most of that. But say for example, right, price does something like this. Then you'd look back and you'd see like this X, and you'd measure the retracement up from that A and where you got to on the B. And depending on how deep the B is, you can work out what sort of harmonic it is. And then you would look for the move to D. Now people would look at that move and try and trade it, but actually that's not the way harmonics work. Like the probability of success isn't like this C turning into that D, because price does what the A to B to C all the time, always does that A, B. That's how price moves around. This D isn't guaranteed, so you can't really trade the C to the D. It's a crap way of trading harmonics. Actually, you see the bounce from the D, and then when it makes its way back above some sort of important level within this guy, which would probably be like your 236, so you know, in and around here, but also all of these levels. And then when it goes above that, you would take an entry here, and your entry would be like your this with your stop below the D, because it's unlikely it would go below the D, but in particular if you could get your stop below the X, and you would still have a risk reward ratio that worked out for you, and like you'd have these targets, you keep it closer and you get like, you know, more opportunities at the trade, and then you get these targets, and like that would be your trade, like that there, and this is how you manage the risk. Bloody hell, there's a lot of drawings. All the work I'm doing for you guys, eh? Crazy. Actually, we'll just keep that because it's funny. It's funny. Oh look, it's doing it right now too. Why is my redo button not actually doing anything, huh? Not doing anything. Doesn't like me. This is what we talked about here. None of that's guaranteed, obviously, right? You already started the breakout, you've had the retest of the hop, the harmonic optimal entry point, and then, you know, that sort of thing is totally possible. If it doesn't hold, then you've got this, where it probably comes, and you could put in lots of different harmonics doing all that, I'm sure. You're sure too, we're all sure. We're sure of that, aren't we, folks? Now, it doesn't have to go in a straight line, right? This is just measuring like peaks and troughs. It can go sideways for ages and make all sorts of like various iterations of the shape itself. But that would be the answer, Nana. Was it Nana? Boom. Boom. I bought a harmonics book, L. Baker Matthews. I haven't got into it yet. I'm still reading an option book, which I paused to read for the book club, after which I read a book about fibs. Now I'm back to options. Good work, L. Baker. You're flying, by the way. You're really nice. You're really positive for the group. You're a great person to interact with. You support the show all the time. You always have done. You know, really appreciate you, and you contribute so much more. Thank you so much, L. Baker, and it's great to have you as part of the team. You're brilliant, and like all that reading you're doing, that's going to stand you in good stead. You're going to be a brilliant trader. You're already really on the right track. There are others have a harmonic video series on the paid side. Nana knows the chat. You also get stuck into that, L. Baker. It's really good. It's grounding in harmonics, and Rocky and I think loads of the stuff that people talks about in harmonics is total crap. So rather than try to take on board lots of shitty information, that harmonic course is a great way to do it, and you've got access, so I'm sure it'll benefit you. Grounded explanation, learn by sight, darn tootin'. Well, you'll learn a lot in that course, definitely. Thanks, Jamie, I'm trying. You're flipping killing it, L. Baker. Keep it up. It's amazing. Don't slow down, you're doing amazing. Just keep working. Make that new tough level you're working at, make that your base level. You're doing amazing, and you've got a lot of responsibilities, and you're still absolutely killing it. I'm really, really proud to have you as part of the team. Freaking brilliant. All right. Lol, Nana says, lol, you answered my question in the first minute, but then you gave so much more value. Cheers. You're welcome, Nana. Appreciate you, mate. Appreciate you. Right. What are you going to do, Price? You're going to annoy everyone? You could do it. You could definitely annoy everyone. Especially seeing as I've drawn that on. It would be absurd for all that to happen. Isn't it, Price? I mean, this is a D reaction from a different harmonic. I'm putting another one on the back end of it immediately afterwards. Eh? Really out here taking the mick, aren't you, Trace Button? Really out here embarrassing Price, making it look like it's all easy to predict when it's not. It's impossible. I peeled some spuds. I'm going to chop them up now. I'm going to chop them up, but I'm still here. I'll be chopping them up in front of you. So if you're a big fan of spuds and you hate to see them getting chopped up, I'm sorry, but it will be happening. Wow, we've got even less viewers. What are people doing? Why are you going, you weirdos? Come back to weirdos. Look, there's proof. Real live spuds in the wild. Caught earlier today. Where the hell were you, poker baby? You just pulled your first early potatoes from the garden, Donna. One bet they taste brilliant. What kind of knife is that? It's a knife for people that are afraid of knives. I got it for my mom ages ago, and then she gave me it back because she hated it. She said it was annoying. It's supposed to make it so that you don't have to push down on things. You know, you just saw through things. And it was the one I grabbed, and I didn't want to leave you left alone too much, so here we are with the weird ass knife. We can't see. Oh my god, what you like, potato? That one really didn't want to be chopped in half. I hate this knife myself. I'd rather just chop the things. Get back in your box, potato. It's only 3 potatoes, you know, it's not that many spuds for a growing boy, which is what I'll always be. Oh great, now it thinks it's an apple. How have I fucking putting potatoes back together? I spend my life putting potatoes back together. Haha! We got an escaped potato! I laugh, but it's not funny. I hate you trying to escape potato. No, we're having chips. Christina, how clearly is it that we're having chips? Moussaka, no. Chips, yes. See, if you keep one of them together, the other ones don't want to abandon their friends. They're like those little Despicable Me things. Potato! There must be at least one of those Despicable Me things like potatoes. There must be at least one of you guys who like potatoes. Imagine this was your job. Fucking hell, I'd hate this job. I'm only able to do it because I'm thinking about how... What do you think you're doing, potato? I'm only able to do it because I'm thinking about how I'll eat the things. If it wasn't me eating these, there's no way I would do this. Ta-da! So before... Hello. I had to wash some dishes in it because, you know, absolutely nothing worse than having to do a job and getting no benefit from it because you've already enjoyed your chips and now you're just thinking, I don't even know if I like those chips, standing there washing the dishes. So I did that. Innit? You don't care, but that's what happens. Right, 24 split at 50. That's not a knife. I just ate potatoes. Good man, Vic. Can't believe I'm watching so intently, says Donna. As iron sharpens iron, so other man sharpens the countenance of another. So one man sharpens. That's a great quote, Diana. Our fries? Yes, Christina, fries. Exactly. I don't think I've ever seen a knife for that shape before. Yeah, me neither. It's because my mum's got brittle bones, you know, and isn't the young sprightly thing, so it was supposed to make it easier for her, but she just took that as a little bit offensive that I would do it, I think. Well, I mean, not really, she just didn't like the idea. And well, she's kind of like me, you know, if you give me a gift like that, I'll be like, what the fuck is that? Like, I will be like, what? Take it back. So that's what happened. That knife does not seem safe. It's pretty safe, Emmanuel, as long as you use it properly. Oh, I hear the bing bong.
Voila, tips.
So before and after, yummy, yummy, yummy chips. Homemade chips only takes a couple of minutes. And I gave you what step-by-step instructions on how to do that magic. So let's see what Price does while we enjoy these chips together. Some people aren't paying attention and they didn't notice the magic trick. Bling! Oh, another bing bong. Oh my goodness, silly me! Silly me. I was talking about all the things that Scotland invented, and who would it be to say that Scotland didn't invent chips? And you might be like, yeah, but Christopher Columbus, and I'd say, shut up already, Scotland invented loads of stuff. Bing bong, the sound is on. Again. That's again on. Now it is. McTavish knows the crack about chips in Scotland, and Nana spotted the magic trick. How an air fryer can turn your chips into ramen. Homemade ramen, you know, from a potato. And you were like, no, it's not made from potato. And now you're like, eh, shit, I was wrong. It is made from potato. He proved me wrong again. How does Sputta do this? So that's made it to the first level of resistance. You know, it could go squiggle, squiggle all about the place. In, out, do the hokey cokey. Or it can go to these targets. Jamie, does the course expire? I haven't logged in for a bit now. It doesn't show anything in the dashboard. It does after a while, yes. When did you first take the course, Karen? When did you first sign up for it? And you'll be on Discord, so send me a message with your email address that you used to join the course, and I'll have a look into it for you. No bother. I have to do that anyway for saying Kikas. So I'll have a look at the same time. How long do you put chips in an air fryer for? Will says, it depends, you know, on how thick I cut the things. These are pretty thin, so I put them in for 12 minutes, but I only put them in at 170, so I'll go back and check on them when they go bling bling again. Squish them about a bit, put some different spices on them, and then eat them. Typically I'll put some peri salt or some, at the very least I'll put some paprika on them. Maybe I'll put some chili sauce, maybe I'll put some other stuff on them after that period, and then cook them for a bit longer. Give them a wee shake around in that, you know, have them cooked evenly. Sometimes I just stick them in for 15 minutes on 180, 190 and then just eat them. But I had some ramen to tide me over, and it gives me the patience to cook them properly. Patience, see? Ramen's great for patience. South African peri peri. Is it? I thought it was Portuguese. I'm gonna look this up. I don't want to be walking around thinking something's Portuguese when it ain't. Peri peri, also known as pili pili, is a type of chili pepper as well as a sauce and seasoning made from those peppers. The invention is generally attributed to the Portuguese, but then they encountered the African bird's eye chili in Mozambique and Angola, right? So it's the Portuguese who went to South Africa, got those chilies, and then claimed it as their invention. So I'd probably say that like it's actually maybe African. Plus peri peri is a Swahili term that means pepper. So I'm gonna go ahead and say very dubious idea that it was Portuguese. You should have a show called Bang and Frying. Hey, Chip Hawkins, someone mentioned chips. Chips. In America, chips is taken to mean what we call crisps, and they were invented in New York in Saratoga Springs by a chef who kept getting his fries sent back to say they weren't crispy enough, and he just got pissed off and cooked them too much, gave them to the guy, and the guy loved them, and that's what you call chips, which is actually crisps. Actual fries were invented in Belgium. Local villagers in the region of the Meuse Valley used to fry little fish up, and then they began frying potatoes the same way when the river was frozen, and then they have chips, which you call crisps, which are actually which you call fries, pardon me, but that's what the real chips is. French later came along and they made pommes frites and said that they invented it. But like French are really good at doing that and invent very little. Regardless of their true origins, French fries are popular in America, gained popularity in the 20th century with the rise of fast food chains because they're nice and easy to make. Yes, Chip, I knew that, Chip Hawkins. I knew they were invented in the Belgiums, but back before it was Belgium. That's probably why the French claims that they did it. But Belgium, the Netherlands, Germany, all of these countries are really just Germanic tribes, right? They're Germanic tribes. Previously, they were Celts, conquered the area, got down to the north of Spain and that. And so really, they're all Celts. All these inventions are by the Celts. And then the Romans came along and like obfuscated all that history. They invented roads and toilets and showers and baths and stuff, so that's fine. You know, what did the Romans ever do for us? Well, lots of infrastructure inventions, but they didn't invent chips. That's for sure. You're going to Brussels next week for fries and waffles? Good shout. Brussels. What are you doing in Brussels? Brussels is a little bit boring sometimes, that city, I think. Mind you, I don't know anyone there, so when I was there for like 3 days on my own, walking around, getting drunk in bars and stuff, chatting to people, but I don't speak the crazy lingo over there, so maybe that's why I thought so. Right, so you definitely want your this turn to be lower than this turn if you're looking for your harmonics. But you don't need it. I mean, this is enough, right? This is a very awful harmonic. Badly drawn harmonic. It might work out alright. I wouldn't bet on it though. I wouldn't bet on it. Oh, somebody just come and picked up a phone that they must have left there. That's good they came back. That's good they came back and found their phone. I was talking about outside on the garden. You don't care. You don't care at all. Right, so price action. GameStop 24.55. What do you like, GameStop? Why is it all so prices are so lazy? Lazy prices and not moving hardly at all. What's SPY doing? Hardly moving at all as well. I mean, it put in that's plenty move to make. Well, that's enough money there, loads of money, but. Oof. Tesla's doing well, all things considered. AMC recovered $5 again. Cost is not very exciting, is it? Mind you, who might talk GameStop's not being desperately exciting either. Oh my goodness, another beep beep. What does it possibly mean? What could it possibly mean? I lose approximately 5 to 10 viewers every time I go and get some chips, so I shall see 90% of you when I come back, I expect. Sugar, I forgot to say, thanks very much, Daniel. Yeah. Thanks, Daniel. Yeah, so they need a couple more minutes, but I had a couple and they were damn good. You'll be glad to hear they were damn good. Trace button, what are you doing to us? What are you doing to us with the harmonic that goes the opposite direction? But it is a cipher. It is a cipher. So I've not put much faith in them, but that's what we're looking at. And you can get the full move on that cipher and come, well, I mean not the full move, but like target 2, maybe target 3 and get back to like here, which would still be higher than the D and the A, certainly giving you an opportunity for this. I hate this shitty harmonic beforehand, I hate it. And this cipher is already half of what we're seeing in terms of the other thing, so we'll see how it works out. 24 spot 46, it's exciting, it's made like a tiny bit of a move. Wow, guys. So far so good. Sound. Spaghetti. There's Steve the Seagull knocking at the window. He obviously wants more potato peelings. Well, tough luck, Steve. What do you want, Steve? I want food, it's not potato peels. Consolidation on a lot of these guys. What was someone asking about earlier? NNE, nanonuclears. We did talk about these guys. They're pretty new. It's in an uptrend. There's not all that much you can do. Period of consolidation here. Lower highs on the RSI significantly. Holding the center line. That's not the end of the world, but it's so brand new. So many gaps below. I'd be very careful of this thing. Plus, they're so very good at hype, aren't they? Anybody involved in this sort of thing. So, careful there. This is a period of consolidation. So, if people acquiring costs for the long term, or are people distributing costs on those who are still excited by it? That's the question for you to answer. It's not a significant move because it's got this tense amounts of RSI pullback, but price not yet retracing back beyond important levels. I say not yet because it isn't yet, but it's very much close to it. Ethereum, similar situation. To hear that, that's Steve. You must hear that. Do you want to go and see Steve? Because he's annoying me, so he must be wanting to say hello or something. Steve, hello Steve. Say hello Steve. Say hello. Hello everyone. Hello Steve. Oh shit. Oh my god, look at those chips. Or don't. Oh, sorry, I dropped a chip on you. My bad, sorry. Steve needs to work on his logic. You know, if he bangs the window and then I come over and he leaves, you know, what good is that for Steve? Fuck off, Steve. Give the Steve some chips. No way, Vic Vince. See these Scandinavians, they love the seagulls. They do, they love the seagulls because they're endangered, right? So they love the seagulls. Like Vic Vince, he's an animal lover. He's just a lover all round. But there's no danger I'll be giving Steve any of these chips. They're amazing chips. Amazing. So talk among yourselves. I'm still here watching what you're saying with a seagull eye. Good luck out there, KT. Away off to Walk of the Beast. More Lipsum Dollar. More Lipsum Dollar for everybody. Seems like there's enough to go around, doesn't it? Even though there clearly isn't. Seems like there is. Kitty's right saying it's a low volume stock, but that being said, 8 million shares sold in one trade. Market close last week there. Okay, so there's an hour and a half left on the day, but we're down to 86 viewers. I wonder how many people have actually got the stream on. Let me know in the chat box if you're here and what you're trading and how your trades are going today. I see Kitty's has just rescued his GME, getting in on that little dip at 200 on the 5 minutes time frame. 5 minutes, 200. Right on the nose. Right on the nose. 5 minute 200 period moving average is one possible place to look to. There's also this area in around 22.74, prior weekly monthly low, which might be interesting. But you got it at the midpoint of this broadening wedge. And the thing with these formations is they don't have like a break point, obviously. You know, the lines diverge, so you'd be looking at it in terms of the average true range. And what point does this, the width between the two support and resistance lines, when does that exceed the average true range of the stock itself in the time frame that the formation itself is most valid? And then what opportunities does that present you with regards to the break? Obviously it's best taking these things at the very bottom because you get a lot of chocolate on your biscuit. We got Luxbeers, Luxemburgers, Kitty's, Just Jake, Daniel, Justice, Walker, Hardaker, Donna, Controls Guy, Rod Bigelow, Chris Roth. Waiting for time and pressure. Diana Stevens. Good expression that, Chris. Diana Stevens, watching and making banana bread. Good shout, banana bread. Leptin in the fish. Leptin in the fish. What am I talking about? Leptin. He's a trader here, a nice guy. He made banana bread and sent it to me once. He sent it to me, and about 2 months later, it got returned to sender because the handoff between different mail services is difficult here between America and Britain, depending on which one it's sent with. So you always have to send things with the US postal mail if you want the Royal Mail to pick it up properly. They just ignore stuff that comes from other companies. Anyway, it got returned to him months after he made it. So he made a video of him opening it. He opened it beside his bin, and his wife was in the house with the window shut. And he cracked it open, and the whole thing turned into this moldy dust. It was like something out of a Disney movie. It was all right above the bin, so he was able to stuff it in quickly. But it was like a horror movie. It was unbelievable what banana bread does if you leave it. What's this thing been doing? Sideways. There's not much space left there. A break coming. Break's coming. Back above that 236 is good. but it's not amazing. Not the most amazing thing ever going. What else is Chatbox saying? Binaroli, Eddingful, JJ Star. Mainly buying LipSyn today. This week I've been mostly eating LivePerson's. L. Baker Matthews. Waiting for a bigger dip on LipSyn. It was so mouldy, Lisa. Look at that goes. Look at that go sideways, and we'll double check with this. Up at 1% today. Average trading volume 2 million. Volume today 1 million. Market cap 54 million. So no, 2% of the thing. I mean, it does a 4% is the average daily volume. It's quite high. But then the number of shares traded, you know, if it was to pick up, the thing would go absolutely bonkers. Absolutely bonkers. Bye bye Alex. We've got new head of product in at LivePerson recently. Not a great week for LivePerson. It says, look, gapping down at the start of pre-market on news, frivolous lawsuit against DFE bits us. Yep, that's a catalyst. Often you get these little catalysts that start pushing price ahead of new trends. Just takes the tiniest little move to get things kicking off. Which is why a positive catalyst at the end of a period of consolidation can be such a huge move in price, because people have been primed for anything. What direction is it going to go when it does break? And then any sort of a catalyst that pushes it up or down. It's jumped on by everybody to say, right, this is the direction. Doesn't really matter what started the move, but price drives price. So boom, there it goes. Boom, there it goes. Often the way it is with these sort of things. Costs sucking up a lot of the interest at the same time. Going sideways all day. Not just today. These bigger moves. Bigger moves. Bit of Wednesday in there. But today is just sideways. It turns out we looked at Maxon and Head and Shoulders, the retracement back down, double bottom, and this W, which sort of completes at a 236 and a 1618. Sure, it could go further. The move to take it to 3268 would be the bottom of that gap. I wouldn't say that you would say gap fill soon, especially if I was trading CFDs. I'd be at this point following it with my stop loss, and it would very much be in profit at this stage. I would have it at very least at 2.01. I'd probably put it here at 0.25. I'd anticipate the prior daily high, that's this high today, and this 236, and this 1618 as being quite difficult to break through. If it does break through at pace, then you've got your target, and that's bottom side of the gap. If it gets in there, then it's very likely that it slows down to 0.36, but this is resistance. Like this right now is resistance, and the good work you've done on the trade would, if it was me, I'd take a third off now, and I'd have my stop, a third of the stop in here, 0.21, and I'd have a third of the stop here, 0.25. Fully anticipating this guy getting taken and not having a problem with it. Maybe that guy gets taken and it bounces because you've got the 50 simple following it, if it's very positive. But this previous price action is gash, and like putting it in context, it's like at the bottom end of a total gash trend. And the thing is a $14 million market cap. It's had 32 million traded on average in the past 30 days. and the volume today 379 million of a 14 million. It's not actually going anywhere, it's just been exploited the trend recently. And so I'd be conscious of the fact that it's crap, it's going nowhere fast, and the moves that it has made have been, you've exploited them well, so I wouldn't be trying any further with that. There it is, like getting a rejection from that idea straight away. And that is the target we talked about the other day, and then getting rejected back down. You know, so much of your money that you made will be eaten up in these retracements, and if it does turn around and come back down, it would like take away so much of your good work and profit. So I'd be conscious of that. You want to let your winners run, so I'd split those 3 stops up. I'd have taken profit. I'd have another dude in there. Where was it? So what time frame was I looking at it on? I'd have another dude in there. I'd have another dude in there. So I'd anticipate another test. Also, you've got a cross of these moving averages coming up, and that's a 236. And you've got a failure swing if it falls break down. And the MACD at this level has just got up enough to cross and break, so 30 minutes, you got your MACD cross, hasn't yet made it up. Where's 200 period moving average on 30 minutes? Miles away. Is it going to go back up to $1? With that signal? Nah. 236 is the target on the 30 minute too, so that's made it to the target. Now I'd be just avoiding it until such times as it decided for me, if I was yourself, sir. You did well out of that trade. If it keeps going, congratulations. But I'd be cognizant of that hard work done and wanting to make the most of it. You're welcome, Mr. Chip Hawkins. Great trading, great trading. Chip Hawkins there. Good work, Mr. Chip. $382, you know, no further than a 382 in a trending move is crap. You really want things to be at least testing 50%, because even if they fail there, you can see it's at least trying. Whereas if it gets to 382 and fails, it's just that's all it needs for the people to reload that are pushing it down. You know, it's another entry level. It's lower high. Sure, you'd want to be looking at this as bullishly divergent. You're not getting, you are getting that good there. So recover the center line, try and pull up now, recover that 236 and go for a proper test back above a 200 period moving average on that time frame. You might have a sideways recovery, you know, break back into these crappy other moves. But you really want it back above 24 spot 24, like all the time. The longer it spends below that, the worse it is. Very much so. Oh, poor tour guide in the dreary Drake weather. Cost moving now? Not yet. Well, I mean it's moving, but only to the top side of this shitty trend. Chewy, you moving at the same time? Nope. GameStop, you're not doing anything good yet. Why not GameStop? God damn it. I mean, a dramatic breakdown would be interesting, but I would rather, you know, what for my own finance, like, I would rather it didn't do that, but I can see that that might happen. Come on, GameStop, stop being stupid. 24 spot 24, that's where it finds its 236 and that resistance level. Lipston still in channel, might get a retest in the midline. You're right, damn tootin', it might do, kitties. Might do, very much so. Very much might do so. It's funny how it goes, like, I think to myself like, oh well, I've got this payment coming in, I've got that withdrawal, it'll arrive, so I'll use that on LivePerson, and then I'll be satisfied. And then I do that, put the orders in, they hit the book. You know, and like a lot of other people, their names are on the cover at this point. And then I think, well, I'm totally unsatisfied. It's like eating what are those things? They're in America. They're really, really squishy marshmallow things with a biscuit on them. What are they called? You're like, oh, I'll eat one of them, and you eat it, and it's like you're not eating anything. What are they called? The biscuits, but they've got marshmallow in them. What are they? Zoltan, $25, you Mr. Generous Zoltan, for Riley. Go on, GameStop, do it now. I'll come back to you. It's just shy. Maybe it's just shy. Holy crap. Was that all wick? Whoa. 216. What? I'm not seeing that here. Why is that line not here? Weird ass line, weekly. What you like? Maybe I'm missing it. Maybe it's further back. Anyway. That's rank, but we'll include it anyway. It's at a 236, so this is an important area for price. In terms of support and resistance. Frank. I think that's better to go with that. This wick I'm just going to ignore. So it's come back and it's tested the golden pocket. This is the weekly time frame, so not the be all. Like not, it doesn't give you all the granular detail and whatnot. But if it didn't go any further, you'd be able to say that it was bullishly divergent. The fact that it's come back and tested these prior lows, having put in a lower high on the RSI and a lower high on price, and that's part of a trend, you'd look to this as a broadened information. And that speaks to the danger here should it break. You know, it's not just the golden, like, if it does come back, you've got a clear area of where prices touched before and a 50% retracement. And this is a broadening downward slope information, which should price continue within it, would speak to great danger. The top side resistance at 32 is 100% pretty much, more, 100% more than that on price, just to make it between these two fib levels. That is the weekly time frame, so there's a lot more to go on. And I'm going to measure it now from within this trend, because everything else is kind of useless apart from the horizontal support and resistance we got, and that Fibonacci likewise not giving us great detail. Got a rocket crop flash which has been interrupted, but it's at 11:17, 11:77, so you just have to also be aware of that. Mark that in this way so you can see it later when we leave. 4 hour. So when this thing does touch that top side resistance, it has a dramatic fall off in momentum every time, a dramatic fall off, and this is when it really goes the most distance in terms of the RSI. You get the biggest fall off, and so it's being traded short for sure, and like these touches of resistance are very attractive short entries for people. In terms of the bounces at the low side of the trend, you're getting an awful lot of them. You know, it's touching support much more frequently than it's touching resistance. And you could do the same thing, you know, like we could just double up with these and point to like, there's the low. It's also the low on the momentum when you're touching these things. Again, at the bottom of the bearish control zone is where price is touching support. Top side of it, but still really it's in it. And the next touch here, you know, that's dramatic low on RSI. You're also getting the lowest area on the MACD, where you do also get the cross. Same with this MACD area here, getting the cross back up again. And then the next touch there, dramatically low on RSI, also across on the MACD. And all of these moves really just showing you that, you know, there's again top side of the RSI, you've got your bullish divergence, which suggests this probably does bounce back up again, but it never manages to make it back above the downward sloping resistance. So it's always putting in lower highs and lower lows, always. It's down 10% today, and at this most recent move on the RSI, it's brutal. Like, it can't manage to pull its way out of its own moving average, back above the top side of the bearish control zone there. Market cap 462 million, average volume heavily exceeding the average volume. Confirmation of the trend direction, lower highs and momentum, lower highs, lower lows on price. It's at an important horizontal level that we marked out on higher time frames, so if that breaks, then you'd expect a flash fill at 11:38. This picture on that MACD is disgusting. That's disgusting. I hate to see that. One hour, that's the area to look to, but where's the timing of that trade? 2 touches of bullish divergence so far. That's the 1 hour. What about the 4 hours? Doesn't say much for that. I really dislike that picture on the MACD. I hate it. 30 minute, where's that guy? 29.47. That's not bad, you know, having 2 flashes at this area. Okay, I've got a flash there. Right, that's enough of that. We'll just finish it because we've already done so much of it. We'll give you extra. I just don't like arguing with stuff in the bearish control zone, and that MACD is disgusting. 1692 and another target back above. What's this saying? So those would be areas to look to. All of these flash targets above would be interesting areas to look to. There's gap fill there, bottom side of it's also got a flash. All of these are good targets to go for, but you'd want to be looking for the ideal moment to make that move. And there's a flash on this time frame. If I've come back and tested that support and you have got bullish divergence, it's just also got continuation divergence. So if it makes this move, 1562 from where it is at the minute, 1563, it's not a huge deal. Nor is it a huge percentage. It's about the amount you would use in a stop. Itsy bitsy time frames. It's possible, you know, it's possible. If it doesn't break down, that could be the start of a move back up again. It's just when you look at it on the 4-hour time frame, it's not yet at that low side of the trend. It has touched support once, it's gone on touch resistance, it's faced a rejection. That rejection's got price in the bearish control zone. On the hourly time frame, it's got a little bit left to go before it creates a significant trend line here. And so you may well be looking for it to come test this 1158 area, which is a flash, and that present the best possible trade for you, because you can just like have a really tight stop, get a really good risk reward ratio, and at that stage you probably do have a test of this trend line, which leads into all the possible positive trades. I would also want to follow this with a stop, because you could have multiple attempts. You know, you could get 10 goes at trading for that target, and it might not happen until such, like the actual target itself might not happen until you see this intersection somewhere around these levels. And so, you know, you could get one go from here, you could get another go from here. On the way up it could fail any of these levels, right, and you could get another go. And like, while this move from 15 to 20 is obviously pales in comparison, should it go all the way up and do a 100% move, that's still 25%. So I'd be following it with a stop, and I'd be using these areas here to manage that move. I've already got one right next to price. And I'd be looking at trying to take advantage of it multiple times if I was really focused on this guy. Ultimately, that's what you're looking for, that take profit there. But like when we did it across here, you know, and we looked at these touches, it's only had 3, right? Makes it real, but the point is it's had 1, 2, 3, 4, 5, 6, 7, you know, and so the probability is that it could test it again. If it holds support at that most recent level, still got that flash below. If it does hold support there, then you get an opportunity to take it up, and you could manage your risk really tightly, because there's this prior low to look to, and that would be a good area to manage risk at. See here, right? I'm going to draw it over here, but that's the entry, or you know, now's your entry, which is different people, different strokes, right? Different folks, different people, or something. Fool me once or something. So you could take it there, but you want your risk managed really tightly, like as I say, that previous low. It's cheering outside for some reason, I don't know why. And there's a lady in wooden sandals. She must live nearby, because that's silly, and she's not from Holland, so she must be living nearby. So you're looking at this thing and you're thinking, where's the best entry? Below that previous low means that you can't, you know, you can't judge where price is going to stop. So you don't want to be in the trade below that previous low. This being very close to a good entry point gives you an opportunity. We're on the high time frames and discussing like overall what might take you back up to test 29.48, and that being part of this downward sloping wedge that price is in. Overall, on the weekly time frame, you had it going sideways, it put in this awful low. I'm going to ignore that wick, and then it's come back up and it's put in a lower high. And so you need either it needs to go on beyond $98, which is a huge ask from here, or this is a lower high and it's part of a sideways price action. So the next low could be, you know, could be as low as this, and you would use this trend line to talk about that. If it is breaking down, it's had so many touches on support and it's had rejections on the top side, could well be that it does go down lower. It doesn't necessarily have to follow that trajectory, that path down either. The volume that came in there is the first time you've seen that volume since forever. First time you've ever seen that volume. And that was on this move up again that touched $43. Subsequently, you've not had any volume and you didn't get through resistance, so you would look to that volume to be confirmation of the trend still intact, and that trend, extrapolate that trend, it does mean lower lows and lower highs. So the best way of managing risk is patience and managing it with a really tight stop, and then the frequency of taking these trades. Can't get that any higher than that guy. So maybe entry at 15.38 with a stop at 13.64. It's still a big enough percentage chunk, that really. And then the targeting up at around 29. It's a huge move. So I definitely want to be taking profit at 18.12, maybe also 21.20, and maybe also 24. I'd certainly be moving stop up to, once price made it to $24, I'd want my stop back up at least at 18 if I'd entered at 15. Even then, you'd be leaving a lot of money on the table. So I would definitely be following the price with a stop. I would be waiting for it to come to me, this guy, and give me the best possible entry, really. So I wouldn't really want to take a trade right now on this, because it would tie up your capital for that move to your, to your stop there. And that might take, ages. It might take ages. You've got potential for it to just sneak along as well, or bounce off that entry and not actually stop you out, and then you're stuck in this crap until it breaks down. So there's an opportunity cost too. I'd wait for it to do that, Zoltan. I'd wait for it to come to me. If I was absolutely desperately eager to buy it, I would start here, manage risk at 13.72, 13.69, buying it at $15 and a tiny bit, 15.8, 15.5, 15. Taken quite a big hit there on that stop already. And long-term support, rocket crop flash 11.33 in at around 6.98. This thing, when it does make moves, it makes huge moves. So what's to say that the next move isn't from all the way down here up again, right? Obviously that's a bigger move than you've seen before. This guy was 110% though, so already off the charts. And if it does if it does bounce off that support line, because of the nature of the fact that it's making oscillations over 100% up and down again, the same amount off the top, dollar value, but not percentage clearly. So what if it's 317%? If it's done 100% moves previously, which it might have done, then you'd be looking at that sort of thing, thinking it's not completely out of the question. Still, you'd have to manage your risk and follow it, keep your stop chasing profit. Otherwise, it would get extremely costly. So that's what I'd be looking at. In terms of the here and now, you've got these mini targets to aim to. They do provide an opportunity. It's just nothing to say that that's going to lead to trend continuation, because they're all lower highs. And the gap at 16.15, that's just above you, and it's likely resistance, right? Because since you've got in here, you've not shown any positive signs in terms of momentum. This all being overbought as soon as it hits the bullish control zone because of the nature of it, and these extensive moves into the oversold there, where the trend really is expressing the totality of the move. So the downward move is possible very much. And you'd need to see this thing put in some sort of a reversal formation ahead of it pushing up, and you're not getting any of that yet. Worse still, it's in a downward slope and broadening formation. So I'd be very, very careful there, Mr. Zoltan, and watching out for it to possibly break down. But looking at the 1 hour and that broadening formation, if I was eager to go long, it would be from 11.20, and my target would be back up at around 29. How does that help you? Is that helpful? How does that help you? What are you thinking about that? This also GameStop looking like it's flagging at this area. That's not positive. Definitely needs to break up from here. Like, definitely. Or we're talking about the potential breakdown being either this guy, which is awful, takes it into lower lows back down to 23.50, or you'd be talking about something like that, which is where it has to get anyway. I mean, it has to get in here. This is a fair value gap, and it nearly definitely tests this or closes it there. I mean, there's an important line there, but I'm going to borrow this and say there, because it's nearly definitely going there, right? Whether it's from this flag information and the breakdown here, which is totally possible and could be so much worse. At some point, it's going to come back there. I'd rather it went up, but it could do. Go on, do it now. Make it a lot less likely immediately. That's helpful, thanks. Any other questions about it, do just ask. Now that we've covered it a bit and looked at it, it's a lot easier to go back to it too. And you were very generous there, Mr. Roltan. So definitely let me know, if you're like, I've done this and I've done that and blah, blah, blah. And what's going to happen if, and what might go with blah, blah, blah. Then I'll look at it for sure. Thanks very much. Moon pies are originally from Chattanooga, Tennessee. I got an excellent present from Chattanooga once, from Chardonnay Flasher. It was a Chattanooga train. There's also a brilliant tune that goes with it. Microsoft's been ripping Wadastock. Microsofty. Jimmy. Sorry. Hard to argue with Microsoft. I mean, people do constantly and they get wrecked, and it's stupid because later on they're like, oh, look, what's it been doing? What does it typically do? This is a monthly chart for Microsoft. This is why it's my favorite stock to trade in the world and has always been, and likely always will be, in terms of how much money it can make you, how easy it is to trade, how obvious it is it's going to happen. It's just constantly like this, right? So you get people who like short Microsoft here, right? And they think, oh, it's not done anything dramatic. It'll have a retracement, right? It'll have one, and then even if it's going up, it'll have one and it'll go up again. But it doesn't. It just goes up relentlessly, and that's nothing of and it's sideways. And then boom, it goes up relentlessly, and it just keeps doing it forever and ever and ever and ever and ever. Ever and ever, like forever. And so it's definitely my favourite stock to trade. It always has been. Every time anyone asks me, I tell them Microsoft's the best thing going. And if you can get any sort of an entry signal on Microsoft, and it's at any way near an area of previous support, it's super easy. It's so super easy. Like, here you had bullish divergence. Also, you had a Fibonacci retracement. So here's your low, here's your high, and it's a 382, right? In and around this 382, didn't manage to go below the 50%. So you've got this idea of an entry between here, right? Because if it does test that and go back up again, great. So that's your potential zone for an entry all along there, right? And then along with that, you had this, which is called bullish divergence, where your lows aren't as low on price or on RSI, but they are on price, and that's reversal divergence, at which point you're looking for price to go back up again and at least test this downward sloping resistance, right? which clearly it did, and then you got a double bottom, which again, bullishly divergent. So you had this idea of a long, maybe you were taking it from tested the prior low, whatever, and your stop just beyond that guy, and you've already got a 5 to 1, right? Just to reach this downward sloping resistance, that's already 5 to 1, and the chances are it's actually going to resume its uptrend. So you'd be looking for a 1618. 1618 came up here, and you got that trade. You know, it's just easy as trading. It's so easy. And then, so in actual fact, you follow it with a stop, and that's a 13 to 1 risk reward ratio. And like, of course it goes on again, and we're going probably up to there, like probably, which would be a 26 to 1 risk reward ratio. And it's Microsoft, you know, so it's like, well, is it actually any good? Yes. And do you need to discover what the fundamentals are? No, right? Do you care? No, the people who are running it are doing amazing. The amount of money they're making is like absurd. And it just keeps going up and up and up, and that's been that way for a long time, and likely continues being that way for a long time longer. So it's absolutely bloody brilliant, and I love trading Microsoft. GameStop, has it tried to make it? It's tried to make that recovery good. You silly bloody idiot, yeah. Good. So no longer flagging. Coming in and testing this level of resistance is positive. I'll just borrow this guy. We do like to recycle the lines here. Is this in line with the D? Not quite. That'll do. And it is the resistance at the top side here. That's right. This would be an 886 from there. Spot on. 24.59, another 20 cents on it, possibly if it breaks from here then. That was lucky, pulling away from that. Definitely didn't want the full extension down to 23 change. Definitely did not. At this stage it would be, I'm going to turn off the drawings. I don't know if I really want the cipher. They did the cipher move. This dude, well, I hate this dude, both of them. But they were interested in, well, they've made the point for us. You don't need that one anymore either. Did that. This is at 24.75. 24.74. So, I mean, it does look like the target would be 59, then 67, and then 74, should it push up. And not very much in between these levels to slow it down if it made that move. Some stuff turning green. AMC still holding $5. Tesla trying on now. Power hour could easily come up and test these highs that it's been to previously. That's the wrong colour. I'm not looking at a flash there. So it could easily make that move. LPSN, after a positive free market, scaring the bad guys. They're all scared. COS, it made that move. Where was that? It just made that move. Oh, we missed it. That would have been good to watch. Made it to, that's incredible. So just make that or what? When did this happen? Yeah. Oh well. Still, anyway, it's great. Even when I'm not looking at the lines, it still works. The fact that it came back down and retest this is rejected, put in a bit of a lower low and got a touch of class B, means that you're going to oscillate back up. The fact that you already found resistance there once probably is that's where price will be targeting again. If you can't manage to hold the center line, it won't work though. Last 40 minutes of the day, it's interesting. GameStop's gone flat again, which is like bleh. GameStop. What you like? Hey! 107 viewers. Yo, thanks Jimmy, that was useful and confirms many of my own thoughts. Great to hear it, Zoltan. I'm happy to go back and look at it again. I'm a history nerd when not looking at bouncy candles or work stuff. Yo, controls guy. I do like a bit of history myself. What do you think about the meme calendar flag representing Sirius Radio, seeing stuff about the dog also representing Sirius Radio? Sure, right? Sure. 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 Have we talked about that before. We may have done. Where is it? What is this stupid thing? This? No. It's not, is it? What is it? What's the silly ticker? I wish I could ship bourbon. I found some rare stuff locally. I'd love to share the wealth, but my area doesn't allow whiskey to be shipped. Blumenach, what are they like? You gotta love the whiskey. What are they like? Nasty area to drive out of town. You have to drive out of town to then send it out of town. You might as well just keep driving yourself. I'm sure I read something recently that was talking about Sirius Radio, but now I don't see it. Maybe the chat box jumped on. There it is. Sirius would. I don't see how Sirius would even make any money. I know it comes with cars upon purchase, but I've let mine run out as streaming services is cheaper and easier. You get a free car with a radio. Buy a radio, get a free car. Oh, right. It was like instead of it being Chewy, it would be Sirius Radio. Well, I mean, it's past that emoji, isn't it? So I suppose that's in the past, and the dog one made a move, so I suppose we're not really thinking that Sirius Radio is going to do a great service for anybody. I suppose. This is at resistance again. You know, it's not moving much, but like that means that it's not moving away from resistance, especially having touched it, come away back at it again. A little bit spotty above there, but this is picking it up again. No divergence, holding the center line. Oh. I mean, you're looking for it to a 236, or if it escapes that, then a 200 period moving average. Held support at the 236, 200 period moving average also exceeded. 50 simples also exceeding that. 50 simple came back, tested 200, price came down, recovered it, now it's back above the 50 simple. That's super positive, you know, and it's the first time since you've had these lows and the reversal formation that you've had price test a moving average cross to the downside, hold that test, move back up again, and perhaps avert the idea of those crosses happening. And at the same time, you've had price back above a 200 period moving average, got that buy signal, and you've got the bullish divergence between those two most recent lows. So that's also positive and could lead to a test of, you know, if it breaks the golden pocket, you'd look to the 886. It's already done that. So now you'd be looking at extensions on the previous guy around maybe this 886. Certainly this golden pocket at 0.74 prior monthly high, and if you escape this downward sloping resistance here, especially on like the 1 hour, you clearly escape it for the first time, then you would maybe even be looking back at these peaks here, which is a clear level of resistance, like touches on there, maybe even higher. So we'll see. Every time I see that and I think that it's possible, and I think, you know, let not get excited yet, I do feel a bit of me inside thinking, yeah, just put everything you own on XSpot, just go crazy, but no. There on the 1 hour time frame, you're at the 200, you've held the 50 simple. Even if price does escape this, you've got this idea of a cross. When there is a cross, price does come down to test the strength of that cross, and then the 50 simple below the 200, finding resistance at that top side, not great. Having done it this way once, you now have the opportunity to undo it and price to sort of move out of this guy. That'd take the 50 simple back up again, and then come back and test it as this 50 simple crosses below, like above that 200, and the 50 simple itself then scoot up and price, you know, away off and above, which you've got the potential to do because you had the cross here, and price like came back to test that and found resistance at it. So that's how that would probably evolve if down here it started going crazy, which eventually it will at some point, and then we'll get very excited. But I don't want to get people excited before the move happens. You know, then you've got your own plan and you should stick to it. Spy, right, just doesn't care. Right, yep, divergent. I'm divergent, but I don't care. Sort of like GameStop, flat, not flat. GameStop, you're being so annoying. Cost, everyone will be comparing it to cost and saying like, oh, I should have just bought cost. Blah blah blah, and that. I can't imagine that really is the answer though. Golden pocket here, 50 simple above the 200. That cross well tested. 50 simple holding price now be good. If it doesn't, then you'd be looking at 1334 again. More sideways. 30 minutes for that to happen. Less than maybe would like. Into GameStop then and see if anything breaks at the last few minutes, and we'll watch that. But at the minute, we're going to look at GameStop and see what is the end of today. What does it bring? Or if anybody else that puts in anything in the chat box, we'll have a wee look at that. Cheers, Sultan. Really appreciated. McTavish, thanks so much for coming a member. I missed it at the time. Cheers, McTavish. That's appreciated. Chris Ross, thanks for your support for the stream earlier. T.A. McCall, thank you, sir. Kick-Ass Man, also a Kick-Ass member. Thank you very much. Wakanya, who's in Hyde Park, had a good start to the stream, a good start to their concert. Diana and Kitty's Never Die, 35 months. Eric, donating also for the cat treats. Nick G, bacon pancakes. Nick Burmery. Legends, absolute legends, supporting the show today. Thank you very much. You're welcome, Mr. Chris. Mr. Chris. I believe the gap was filled. What gap? The man. Which gap are we talking about? What's up, my doggies? Yo, Moon. Howdy doody. Howdy doody, Mr. Moon. Howdy doody, sir. Why is the actual chat box different from my chat box? Is it just not moving? No, it's actually real. Stop doing that, screen. What gap are you talking about, Mr. the Man? Whoa. What does the Aztec calendar say about interest rate cuts? It says, look out for August, McSchmoggist. I read the wrong chat box. Oh my god! Well, you're in the right chat box now. You're in the right chat box now, Mr. the Man. Justin Pickerel, dug with a bone. Someone was talking about the gap at the start of the week. My goodness, they're still back there on Monday and we're all here on Friday. They must be like British or something and hate independence and they're trying to pretend it didn't happen. It did. It's already happened. Let's see if we do a shitty average week again. 24th by 39. Wolfie J, speaking my thoughts. So you're at the 200 period moving average there on the 1 minute time frame, and that likely is resistance along with the fact that it's a golden pocket. And price action has previously been in a downtrend. That likely would be looking at that as potential resistance. You're also at the top side of the bullish control zone, so momentum's not really got anywhere to go. That's starting to look like a pretty obvious rejection now. Hold the center line, great, then the momentum has somewhere to go, but like back to where it just got rejected from. Why would it do that? So, oof. That's 30 minutes left on the day. That's where your time decay really starts disappearing. You've only got cents on the dollar left now on that time value, getting completely crushed. How can what school? It must be a school trip. Can't be school holidays. And I see Steve out the other side of the house now, or else one of his cousins. He's got out and about today. Silly Steve. Those potatoes are good for you, Steve. You're so lucky. You don't know how lucky you are, Steve. You could be eating plastic or polystyrene or something. That's what a lot of seagulls end up eating around here. So that's very simple. This 200 period moving average could just trap price for the next 30 minutes. This is all divergent and dangerous, and then losing a 50 simple. Psst. testing it again, and then coming back down, test 24 spot 24 again. Again. It's going to happen again, isn't it? Like again and again and again, forever and ever. Boom, 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 boom. Spy. Hey. Hello, Spy. You've woken up, huh? Higher low, lower low. Get back above 5563. Maybe it comes in and tests 5564, which is in terms of some people will be looking for like much bigger distances on their TA, but you don't need it on SPX. If you're trading it, you'll know what I mean. What's this guy doing? Bullish momentum profile. If you hold back above the center line now, the higher lows and whatnot, or even if price, like they've got the moving average cross there, but it's 15-second time frame, 1 minute, same sort of situation. 50 simple is turned up again. And price did not respect that moving average cross. Recovered it, held the 200, and now the 50 simple going through the 200. That'd be taken as a failed cross, and you'd lead up to the 30 minute. Where that was positive, this has held the center line, and that's what we're talking about. If this return to the top, when you're getting a buy signal on the MACD, the moving average cross looks like it's held, and that the 50 simple might turn up again, so that's interesting. Costs. 15-second, what are you doing? Has it gone and hit a line again? It's like we turn up, we go somewhere else, and it goes and hits a line. It's as if I'm doing it on purpose because I hate the thing. Which I do, but that's not what, it's not not doing it on purpose. But I do hate the thing. Yeah, I did it again. Is it like whoever's trading it knows that I'll be looking at it and they don't want me saying, this is a fake piece of shit? It feels like that. But I'm still going to take it to his lines, but it's a fake piece of shit. Pardon me. So yeah, GameStop sideways. Silly sideways GameStop. Eh? Oh no, it wants to test that. 24 spot, what? Spot where you are right now, pretty much. There's only cents in these moves. 1 cent. There it is. Bang. Bang, bang. She shot me down. Bang, bang. Bing bong. She shot me down. Bing bong. What sort of a gun would that be? A clown's gun. Pretty funny one. So it's come in and it's tested that at 24.26. And then it's going to 24.25, and she's got this little area of inflection to close if it wants, and then come back down and do the full golden pocket. Ugh. No, there's where you would expect it. And it's there, more or less, and 25 minutes left on the day. Oh my goodness gracious me. Bounce off the 200. You've got your Class B bullish divergence, come back up to 24.32. Whoop-de-doop-de-doo. If this was SPY, you could be trading it and making shitloads of money. Because it's GameStop and the margins are so small, then not quite as much. Still, it's impressive. It's impressive. That it does what you tell it to is impressive. The Germans will be studying what exactly is handball tonight. In the night classes that run all across Germany. And those important topics they cover, like handball. I'm sure they know and they're better at it. Jamie, is there a pennant on the 4 hour on Lipson? A break of it is confluent with the major 236. Justin, Lipson, 4 hour. Boom. Where are you talking? I'm not seeing it off the top of my head. This 236 at 0.75. I'm not seeing it myself, sir. What else are you thinking? Tell me what else you're thinking about it. Need to find the ever worse trades offset against time and time again, so which bank is up for grabs this week? The old banks, the banks, they're doing alright, goddamn banks. Opportunity cost is killing me on lips, and damn my prior obligations. To hell with them, I say. To hell with them! Look, Spears, the helpful information there. The gap was filled on the Tuesday. Yeah, that's right. I think at the time, on Tuesday, Luke Spears said, I think that's the gap filled. And then we checked it and it was. It's all coming back to me now. Sideways is getting tiresome. That's what it always feels like. It's sort of designed to make it feel that way. New question, what is dark pool trading? In 1979, the American government made it legal to trade in alternative investment markets. That is a market whereby it's off the lit exchange and you're allowed to trade through those. One of the first ones was called the Hollywood Stock Exchange. And the way it works is that the participants in those dark pools pay a license to be there, and then they can trade at nibble pricing. That's the national best bid offer. They have to offer prices in line with that nibble. But at the same time, nobody that's not a member of that exchange has oversight over those trades. And so you can set orders on the books there that won't be seen on other books. You can execute there and people won't be able to understand exactly what you're doing. Ostensibly, it's a good place to build positions, but those positions you could be building might be facilitating your short side trades. And so because there's more and more dark pools and more activity happens in these dark pools, then it obfuscates the impact on price that these trading funds have. And if they adopt a strategic portfolio which is designed to exploit moves on lit exchanges, and then they have firms that control the price and the spread, i.e. through designated market makers, then it creates this Chinese wall scenario where there's one trader sat at a desk with information that the trader next to him is not legally allowed to see, and vice versa. But of course they're going to tell each other when they go for their bagels and cheese, like double bacon, hash brown cheese, deep fried bagel that drips fat all over their keyboard. This is speaking from experience. And then they eat that, and all of the fat drips in between their keyboard, and then they just write to the stationery people, and they're like, I need a new keyboard, and they keep doing that, and they keep getting new keyboards and dripping bagel juice all over them, and they piss off normal people around them constantly, and that's the way it works. And then because these funds can create a competitive advantage from that dark pool or alternative investment market, and because some of them exploit that flow so very well, they're able to use that margin when they've got a big enough group of that liquidity. They're able to exploit that margin to create exchanges and broker dealers that they then push on retail traders, along with really extremely dangerous systems and processes that make their apps look like a casino in Las Vegas. And then they exploit that liquidity by benefiting from the flow and passing those trades on to people. So they really use the spread themselves to their own advantage, and they exploit those moves. They also build up positions and then whap them onto the market when it suits them. And if they ever get in any trouble, then they can just borrow from one of the largest banks in the world, State Street, who set up lending desks for this exact purpose, to facilitate this nefarious activity between broker-dealers and strategic funds that take advantage of their seats in the market makers. So that's what an alternative investment market is, / dark pool. Will feel lucky. Right, I'm looking at this, but remember, I think it's a piece of shit, and I think anyone who gives a flying fuck about politics is a stupid fucking idiot. It's made a move, it's rolling over, it's found zero support, it's just ranging, it's rinsing everybody that goes long, is getting ripped off. There's people sitting on this, probably involved in running the company, who scrape all liquidity off anyone who invests by pushing it down with short contracts. They're screwing them, people are getting screwed there. 1 hour, you have the moving average cross on the 4 hour, you're getting breaking down here on the 1 hour. These are lower highs, lower lows. The only reason you bounced here was because of the bullish divergence looking back between these lows. This reaction subsequently is crap. It's come back down, broken the golden pocket, likely goes down to the 86 at $26 and change. If it breaks down from here, it's absolutely screwed. It'll come back and fill this fair value gap at $17.67. That probably is what happens. It's got an Adam and Eve. It's got bearish divergence. It's been, everybody who goes long is getting absolutely rinsed. And I'd be very careful about trading that thing. 25 spot 25, so I imagine it tested that 25 spot 24 there on GameStop. Like being a god damn, it did die a wee bit lower. Oh, come back, get back, get back, get back. I can't see you. This is annoying as, right? So it's had that move back up, it tested the golden pocket close here at 24 spot 45, and then immediately faced a rejection that took it to the golden pocket back here. Golden pocket, 236 break, falls down again. This 236 at 24 spot 23. It's back above there. Does it now go back and test the golden pocket on this move, which would be $24 spot 37, another lower high, or does it hold? This is totally interesting to check that 236 at 24 spot 27. It needs to break that. You've got a moving average cross coming in, which is why it's coming up to test it, but it's already gone through the 200, and this 50 simple's got an extreme slope on it, so I'd be very careful there. Very, very careful. You know, that's pretty interesting on LPSN. That's positive. It's RSI, center line, own moving average, in the bullish control zone, touch the moving average again. If it bounces up now, that might be it. Last chance saloon for cheap LPSN. That might be the chat. Interrupt that and leave. Hold that 236, having broken out of this downward sloping diagonal, you could just let that interrupt and leave. It's a 3 minute flash. I never trade a 3 minute flash. 7 minute likewise. 15 minute, though it filled that one pretty damn excellently. 15 minutes. I'm a fan. 1 minute. I'm a fan. 30-second, I'm a big fan. That's interrupted, it's gone. That's interrupted, it's gone. This could be it, guys. Let's see. That's close enough to the break point. This is going to cross. That's interrupted, it's gone. Just one touch in the golden pocket and then it held that, and the moving average is probably going to flick up there. We spoke about that. 1 hour. This needs to interrupt this. If it doesn't, it'll come back, test that, it's another higher low.
I need a volunteer. Come at me with an imaginary knife.
An imaginary one, just a prickle. Jamie, tagged you on the lesson chart Discord,
That's
sir.
how it's done.
It must mean Lipson, Justin, Mr. Justin. Thank you very much for that donation, Mr. Lipson. In the Discord, tagged me. What did he say? Good old feel. What did he say there? I'll get into that now. Justin. Oh, look at all those people in voice chat. Good on those people working away, learning, studying, smart folks over there. Legends. Where is Lipson? Here it is. Good work from KT. Owl, funny memes from Owl. Right, so you must mean the Lipson paid site, right? I don't see it there. Trace point. There it is. Lipson. Oh, this is what you're talking about in terms of a pennant. Well, I mean, I would like to see the pennant at the end of a move. You know, I love seeing pennants at the end of a flag pole, so there are more flags. But what you're talking about there is very right. And then your picture on the RSI with it recovering above the center line and its own moving average is very right. The only thing I'd talk about on Lipson is this potential hourly flash, and that'll get interrupted. That'll get interrupted if you see a big move from here. Very, very likely it gets interrupted. And the new way it works with those interruptions, I'd be very, very cautious of them. Fucking hell, you know. And this is a 4 hour, which hasn't been like, holy shit, I have to turn this off so people stop knowing these things. Like, so I'd be very cautious of what happens on the hourly, right? So just pretend you didn't see what I just showed you there, right? So here on the 1 hour time frame, this is really positive considering that it touched this area before, it's pushed back into it, and it's managed to push higher again. If we see this move into the bullish control zone now, exceed those prior highs, price in doing so will be back at a golden pocket or higher. Because it's a downtrend, you'd have to be cautious of the potential for continuation divergence and a rejection at 0.6546 that takes it back down below 0.5684, at which point, I mean that 0.6584, 0.5415. It's not a fair value gap either, so it doesn't have to do it. It could break it. It could definitely interrupt it and break it, and that was your fair value gap, and it was a normal gap, and it was broken and with bullish divergence. So whether or not you would look at this as a pennant, which is Justin's talking about here, is like this sort of pennant here. Right, let me just double check, is that what you're talking about? Yes, more or less. Does give you an awful lot of opportunity. You know, it does give you an awful lot of opportunity to manage the way this would break out. Perhaps something like this, which would take you back above these prior highs and then towards that 786 at 0.7990, which is probably where it would go. Then you're talking about the measured move from the inverted head and shoulders. I mean, a breakout at this point, Justin, you could be looking for that sort of idea. It doesn't have to be exactly like a pennant. That's not really the point. You know, these chart formations all speak to the psychology and the behavior of traders. Like, so it would be the same result, and you've got those touches there that make it real. That one's a little bit distant from it, which is partly the reason why you might be cautious of it potentially coming back there. It's just that if it is coming back there, but beforehand it exceeds this high, the probabilities are that it goes on up to the top side, right? Much more likely than it comes back down and tests in around there. going back, we'll have a golden pocket, having held a 236. It's like putting in all the structural confirmations that it needs to convince somebody who's like even okay at technical analysis, but puts all their emphasis on it, that they'll have reason for a trade, especially if it breaks that level at 0.6498, especially on a 1 hour open, close, open. That would be it back above a downward sloping resistance, which it hasn't been above that diagonal, and it's on the weekly time frame, so it's all very real. It hasn't been back above there since the 5th of March. And it would speak to, like, why would it be there when the company's narrative previously was so negative? Why would it be doing that? And it would be doing it because things have changed, right? So, and I wouldn't worry about, you can 20 years time it can come back here and do whatever the fuck it wants. But I think this is interesting now, very interesting, more so than it was at these previous moves, which were exciting and fun and all the rest of it. But I'd be waiting for that 1 hour flash to be interrupted and be looking at that 4 hour as maybe about to start happening, Justin. And you're right about the idea of this tightening price action towards these two converging lines, and the fact that everybody and their granny knows that LPSN cannot exist in here between these 2 points. There is nowhere between them. So you'll be looking at that resistance on the top side anywhere around here, and this support anywhere around here. And if it breaks out of that but doesn't exceed this prior low, this is the fake out point on the pennant, or if it does move to the top side and does exceed this fake out point, which is again, right, these are the fake out points on this pennant here. If it gets there and bounces, that's super positive. If it gets there and rejects, then it's just more sideways, and you'd be measuring that downward sloping resistance as now potentially support. And it could even follow that all the way down to fill that every area. But if it breaks that, then it's not coming back for a while. And if it bounces off of this and gets back above that downward sloping resistance, it'll go here. It'll test both extremes. And based on the way it's been behaving, and the fact that I'm going to buy all of it, I would imagine that it keeps going here. Even if it does make that move. But I'm not anticipating it making that, even though we've got the flash in the 1 hour. I think it might be interrupted. You've not got a reason to trade for it yet. So you might be right, Justin, and overall, everybody could see this as a potential head and shoulders, and everybody can see that massive move, and so it can be a self-fulfilling move, right? It's like that's the best trade on this chart right now, is that move. You're taking it from this high to this low, because previously there wasn't significant price action. Your 1.13 extension at 1.29. Prior high support in around 1.15 to 1.18. I mean, it looks like that might be what's happening there, and that looks like, something's getting started on LPSN. Something really is getting started on LPSN there. Even if it does move back, it's sort of showing you what's going to come in the future. Cheers for that, Justin. Nice wee extra conversation in and around what we've seen. Also, I wouldn't necessarily call that a pennant that I'd be looking to in terms of if my TA was based around recognized chart formations and the rules within them. I wouldn't look at that as a pennant too much, because so much of it's involved in the current move on price. Why is everyone outside cheering? Has somebody won the football or something? It must be that. Why is everyone cheering outside? There's loads of cheering. GameStop in the last few minutes, can it exceed this? Maybe, right? Chewy, 25, it's had a positive day, but again, it's just ranging. It's not out of the ordinary for it to make those kind of moves. Costs, it's rejected off the top side. It has been moving sideways. Pardon me. Cost doing threatening to be interesting, but then not.
I need a volunteer. Come at me with an imaginary
Bless you,
knife.
Sputter. Jay!
That's how it's done.
That is how it's done. Thank you so much, Jay. Thank you so much, Justin. Bless you. Bless you. Thank you very much. I was thinking about slapping the ask. I think about slapping the ask all the time. The flagpole on the pennant I drew included the gap down, Jimmy. Am I wrong to think this breakout gets to 140? No, 138, 140 would be the idea, right? You said it was... Wait a minute, just double check what you said there. It's the 4 hour. The pull, what pull are you talking about? Oh, you've got this breakout from the top side. Does that be your pull? Cheers, Jake on the cob. Thank you very much, Luke. Thank you very much. GME has a boring end of day lately. Sometimes has done, yeah. Just bought 3,200 Lipsons kitties into the getting stuck in and about it. Does anything about cost volume interest you, considering there's only 5 million free foot? How's it not moving? Because everybody who bought it the other day is selling it as soon as it moves up. It's an absolute piece of shit. It's highly manipulated. There's only a couple of people who actually own the company, and they're exploiting a Reddit post in order to get fake hype about a thing that's absolutely shit. And everybody who's in it needs to get out so they don't get trapped, is my idea. But, you know, play your own game, and it's not financial advice, but I hate costs. I hate it. I think it's shit. You know, and I don't like saying that and putting people off. Good people who trade it in GameStop, and I'd like, you know, don't mean anything against you guys. I like you guys, but like, it's horrible, eh? Like, it's so easy to manipulate costs if you were one of the larger shareholders without doing anything that would ever get you in trouble, but is really unethical. I hate them. I can like them now, and I can love them. Why can I like these and love these, but I couldn't the other day? Like and love. Liking it and loving it. So what did you say though about that, Justin? That's not it, it's this one. What did you say about that poll? And I'm not sure what you mean about the poll there. I talk about polls and flag polls as like the flag that leads up to, like the pole that leads up to the flag, rather than like a pole on the other side of the thing. Vis-a-vis, 25 bucks. Boom, boom. Boom, boom. Weekend snacks for Steve. Thank you for another week of learning, Jamie. Lisa, you're an absolute superstar. You're an absolute freaking superstar. I'm so lucky to have Lisa. Thanks so much. You're absolutely amazing. You ever want to get in a YouTube video by me and look for the interesting part of the video that's relevant to you? Lisa's made that possible for so many people. So many people have said, Lisa directed me to X, Y, and Z, and now I'm doing X, Y, and Z, like part of everybody's journey here. Lisa's an absolute legend. Jimmy's get killed every Friday afternoon. Yeah, it's like some sort of a movie. There it is. Markets have closed. Lipson at 0.6347, up 3.22%, and really now closing and testing this idea of that downward slope and resistance. Really in there now, doing it. It's breaking above it, holding it so far. Once, twice. You know, it never did that with a negative candle before, straight afterwards, and now it's done it with positive candles for the very first time. Now you get an open and close here. Right, the next target is 0.7531, then you're looking up at 0.88, and then you're back above a 200 period moving average on a 4 hour time frame. At this point, you probably would see price action go through some sort of a test here, right? Whether it's just consolidation and holding it, and then break up again, possible, because then it would have its own bull flag as well. Like from these levels to these levels, your 236 would suggest that it's not going to drop back below there. Nothing to say that it definitely does stop at a 200, right? It could easily just push back above it. If it's super bullish, it'll just push back above a 200 and then use that 200 as support as it moves up again. And the measured move from it up to around 140 and so on, it would be from expressing the the inverted head and shoulders here, Justin. That'd be what you'd be looking for, that move, right? Because that's like the actual chart pattern that's definitely on the chart. This in terms of a pennant, not necessarily, and the measured move from within that. You know, there's different ways of looking at it. That'd be the first one. Up at around 0.8. That'd be the first one. But like, this isn't a pennant, so like drawing the measured rule from a pennant out of this isn't necessarily a valid way for taking the rest of the formation. Though the break of the formation would match the psychology you would expect from a pennant. What would it be in the same sort of deal? Symmetrical triangle also shares that. And that back above a 236 on this dominant fib here from the previous high on that was the right side of that head on the inverted head and shoulders to that right shoulder. That Fibonacci gives you this 236. You're at the golden pocket there. Oh, wait a minute, this is the low back down again. This would be this guy here. Oh, get out of my town. You'll be looking at this. Well, that 236, the 886, the golden pocket here matches up with that 236 anyway, so same sort of deal, 0.75. That breaks 0.83, and then you're talking about the measured move being the extension there. 1618 takes you up to 123 anyway, 1.13 of that previous guy takes you up to 130. And like, you know, there's this gap here, which it probably aims for because it's so very close to a 1.14. Everything matching up just so neatly is providing you with this idea of confluence, you know, because people will be trading for these targets, other people will be looking at those extension targets on that fib I just deleted. A lot of people will be looking at the bottom side of the gap, other people looking at the top side, you know, and it's stair-stepping its way up there with a 200 period moving average to aim from that breaks out of these downward sloping formation, it itself back below a prior high, so it doesn't even need to break structure to get there. It probably goes on and then tests the resistance level at 0.13, find support at the 200 and then do the rest of the move towards the gap. That would be what would very, very often happen with this kind of formation, and with everything lined up so well, they'll just draw it up further, right? There's nothing to come back for other than a flash, which is nearly definitely going to be interrupted based on the way the price action is behaving on a breakout of this guy. So it's nearly definitely going to interrupt that flash. It's nearly definitely going to move to the top side, and that would be the full measured move off it. If it fails at any of those stages and slips back within this formation and comes back to do the 786 test here, or not even, you know, you'd be looking at a Fibonacci evolving from the move on the breakout, but like even if you just took it from this to this height here and you've got your 786 coming in at 5.575, that sort of level, and it's probably even not completely accurate, in and around there would be the next test, a higher low, and at that stage you'd be looking at, you know, just people, you know, like liquidity over this thing, taking it back and testing this sort of level here, maybe third touch on that guy, very, very possible. If that doesn't hold, then you'd be talking about moves within this little gap between that low and this low, blah, 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 but that's not really the point at the minute. It might never be the point. I'm not actually anticipating that. So I'm thinking this is now getting quite about to get exciting. Yeah, Brad. Big time, Brad. Sold all my costs and bought LivePerson. Let's go. Yes, Brad. Fuck yeah. All right. It'll do you much better in the long term. I know that. Though it's not financial advice because it can't be. But bloody hell, I know it will. Good shit, Brad. Buddy closed above 50 on the daily on LivePerson. That's exciting. That's exciting. Is it back above a 50 on a daily? Because then you're just aiming for the 200. Yes, it is. It is. Where's the 200? $2. That's the 1618. That's where you find it. Like, it could just fucking go straight there. It could, you know. 3.22%. It's not enough of a reason to get excited. It's all to do with the structure and the makeup of price, and like this is what I've been waiting for. Cost finished at 24.65. What does that mean for the structure of price? It just got rinsed at the end again. I fucking hate this thing. That was Brad. Good work, Brad. 13.98, and you knocked it down a bit chunk. Fight the bastards. There's GameStop getting hit again. GameStop getting hit on Friday, as it so often does. The chat box adding so much value here to the show today, keeping us up to date with all the important moves. It's usually me, but I'm talking about the future when it comes to LPSN now, and I'm getting really bloody excited about the thing. Ladies and gentlemen, welcome to this quick clip on GameStop, LPSN, and all your favourite stocks. Traders, enthusiasts, what an exhilarating day we've had, even though prices didn't really move. They were stagnant across the board for some of our most important stocks. There is so much to be excited about though. Today we witnessed large moves, and the cautious traders will have been wise to manage their risk on things like MAXN and KOSS, but they both have got serious concerns about them, and I'm not looking at either of those as being long-term interesting whatsoever, as they're at very dangerous levels. And let's pull back and look at the bigger picture. Right now we're seeing something incredibly thrilling on LPSN. The price consolidating at levels that we've been targeting for big moves. This consolidation is not just a lull, it's the calm before the storm. When the stocks consolidate at resistance, it means that they're gathering strength, coiling like a spring, filling those bloody fuel cells, and they're ready to explode into action. And this is now looking at LPSN on the verge of something potentially really exciting. I'll quickly touch on the GameStop TA. It's come up and tested a 200 period moving average here on the 1 minute time frame. It didn't manage to find support at the 50 simple. When you go to look at it on the 15 minute time frame, it's all really much of a muchness. Going sideways, not managing to break higher highs, and it's stuck within this broadening wedge. So it could test as high as $27.50 and still come down to $21.50, and then it doesn't look like it's necessarily going to break off. And this type of consolidation isn't the type that you likely see ahead of a big move to the top side. You want to see a horizontal level at one side or the other, or else a downward sloping diagonal that price keeps butting its head off. And in GameStop, you're not seeing that right now. LPSN, it's only had a 3.22% move, but oh my goodness gracious me, it could be the start of something absolutely massive. A lot of people in the chat box here have got a lot of the thing, and that's something we share in common. And if you want to be like us, join our club. You'll get loads of chocolate on your biscuit. Right, this moment we've been waiting for. Stocks consolidating at resistance. It's like the fireworks you saw there on the 4th of July. We could be celebrating our own independence from this world of muck. Price surges, momentum builds, and the excitement is palpable. Loads of people then start joining this ticker that have never heard of it before, never heard of trade spotting. They've never heard of any of us, but bloody hell, the world is going to know. So buckle up, fuckleheads, because we're on the verge of something potentially spectacular. Keep your eyes on those key resistance levels. When they break, we're going to see some amazing upward movements that will make today's consolidation seem like a distant memory. You will never remember the stickiness of LPSN when it starts to move. So get ready, fellow traders. This rocket's about to launch, and we're all on board already. I can't wait to see this thing soar and ride up to incredible levels. I'm sick of watching shit stocks do it because they've been manipulated by gimps. This is a real proper opportunity on a really strong company which has gone through a significant transition. It's got amazing CEO on board. It's there's new product manager coming on board to replace like a feckless CTO. They've got amazing technology ready to launch. Stay sharp, stay excited, stay focused. Let's make the most of this. Please note that none of the things I say are trading advice. You shouldn't trade the same way I do. Everybody has to make their own decisions in the stock market. The risk we take on is both the danger and the beauty of the markets. And I can't tell you what to do with your money. I can't give you financial advice, but I can tell you that I think LPSN is going to fucking explode. Thanks very much for watching. Welcome to Trade Spotting. Check a live stream out sometime. You'll be in great company in the chat box. Short and sweet. You'll have more capital soon, Justin. Don't worry about it. Fucklehead's my new favourite word ever. It's pretty damn great, isn't it, Katie? I'm a happy fucklehead. So that's what the play is. Vol it up and down, fill the 19 gap. 19? 69. 69. You're talking about the gap down on GameStop at 19. And certainly, you know, it's definitely possible. Within this broadening wedge, there's this flicking stupid, annoying ass broadening wedge. Yeah, it could definitely just follow this for a while. It's unusual it would get so many touches on the bottom and only a couple on the top without completely breaking. We were looking at something earlier, it was the same situation. It's like if you get the formation and it is real, and eventually, you know, if you just skirt the support line long enough, it'll go up, and the only place it's going is to go and fulfill the topside move of the same formation it's been in for a long time. It might be what you get on GameStop. But if that is what happens and then it finds a rejection, then that gap will get filled at 19. In order to fill that gap, it would be very, very difficult to do it and maintain this formation, the integrity of it the whole way through. Very difficult, because you're talking about what? Where does the gap actually fill? If we keep this line correct and fill the gap, Uncle Phil, you know, that thing wouldn't happen until the 29th of July. Like, it's very unlikely that GameStop doesn't move any more than... What's the percentage move from where we are at the minute? It's somewhere in around here. As if, what you're talking about? Well, maybe, you know, 17%. Is that actually right? Am I just making shit up there? It's very possible I'm just making shit up because everything's too close. But then if I do put it on a smaller time frame, I can't get to the 29th of July. So it's possible, it's more likely that the formation breaks if price is to take its way there, oscillating highs and lows in between times. Yeah, like that gap is like a magnetor on price, and it's dragging things back every time it tries to make a move higher. That and the fact that price is like been consolidating around this diagonal, which is part of this downward sloping top side red line, upward sloping blue line, that creating this symmetrical triangle. I've said it so often now, like the rest of the world is starting to pick up on this fact, even though they haven't watched me. It's like Chinese Whispers eventually makes its way around to earth and back to me. And that is that this is not real. This is not a real line. It's just drawn there to illustrate that the potential future formation price action could put in, and the likelihood of it bouncing at this area should it push up, not least of which because of the nature of these retracements. Now if I turn off the drawings, you can see this low to high. The retracement here was a 786, and you see this high. The lows so far here are somewhere around the D point on that harmonic. I can't actually see them myself, but they're somewhere around there. So this is 786. If this is a golden pocket, which would be the one below, then you'd be looking at tests of 36, a 50% retracement. That's what you'd actually be looking for to test the strength of the move back against the previous one. You'd be looking to say, well, is this thing strong or not? Well, can it go 50% back the direction it came from? That would speak to a degree of strength, right? You'd want to achieve 50% of your target, and at least that, and do it in such a way that demonstrated some strength of price and integrity to that move. And if you can't do that, then it's not strong. So that's what you'll be looking at in these circumstances, and that would suggest that you're getting a touch of this guy in at around the 12th of July. Weather might be good. It would be breaking the broadening formation that you're in at the minute, breaking that to the top side with a lot of touches on the bottom and only a couple on the top. You'd probably look for a positive catalyst. That might just be price itself and the velocity of any one move. The fact that it could break that broadening wedge would suggest then where's it going, and that would be the area to test. That downward sloping diagonal and that 50% retracement. Very, very possible in at around 32.81. The longer it takes, the lower that is, and the fact that you might be looking at something like a 382, and if it can't break above 30, then that'll be really disappointing to people, and they'd be thinking, like, some people would be taking profit, they would be interested on that level. We talked about the open interest at 30 and 25 causing a lot of stickiness, and up at around 30 you might get the same issue again. But I mean, who cares if Lipsu's going to go fucking mental? You know, we can buy GameStop up ourselves and make it interesting all again. We make GameStop great again by taking shitloads of money for the rest of the market and just have fun with GameStop. We can just have fun with it. That'd be good to see. Not that we would push price around, us the little retail traders. What could we possibly do? You know, how could they possibly expect that of us? Anyway, we've had a good show today. It's been 7 hours long, nearly 7 hours, minutes away from a 7-hour stream. So I really want to thank everybody who supported the show today and this week, but in particular today. Lisa, 25 bucks. Thank you so much, Lisa. Jay Corn in the Cob, thank you. Justin Pickerel, Zoltan, hope that was helpful. I'm happy to check in with these things again for you, mate. Mac Tavish, becoming a member. Welcome to the team, buddy. Great to have another Mac on board. Chris Roth, thank you twice today. Really appreciated. T.A. McCall, thanks, mate. Kickass also became a member. Welcome to the club. Lots of chocolate on the biscuit round here. Whacking ya ahead of his concert. Diana Stevens, thanks, Diana. You're getting better and better as every day goes on. Kitty's legend, 35 months anniversary. Eric, thank you for the cat treats. Chris Ross again. Nick G, that was appreciated. Just sending in a $10 to support the stream. Really good of you. Cheers, Nick. Bacon Pancakes, very similar. Nick Boomery, yourself too. Total legend. What a lovely guy he is. If you see Nick around, say hello. He's a legend. Thanks very much for everybody who took part in today's stream. Everybody who contributed to make it possible. I'll be back again next week. We'll see what suits the viewing habits of people. I know today we didn't have quite as many people on board, and that's all perfectly understandable, but if Lipson's taken off, well, we're all going to want to enjoy it together, aren't we? And where else would you do it? Like, nowhere. So it's here, or so it's on the Discord, because the rest of the world doesn't give a fucking shit about Lipson. They don't know about Lipson. They're all going to be whacked across the back of the head with the thing and cursing their luck, because everything could be said about it was laid out for us. We understand where it might be going. We've got a lot of excitement there. Linda White with $10. Number one fan. Linda's now the number one fan. Quickly, at the end of the show, overtaking everybody else and rising straight to the top of the leaderboard with a number one fan sticker. If it wouldn't say it if it wasn't true, this is the Trade Spotting show, so we have to accept that. Linda White, number one. Thanks so much, Linda. Really appreciate you and everybody else for being here today. Awesome. Linda White. Linda White for the win. Right? Buckle up, fuckleheads. Buckle up, fuckleheads. Next week, big shit might be happening. No jokes. Even though it sounds silly. That's my mum. Hey, we got Linda White. It's L. Baker, Latoya Baker's mum. Linda White watching the show. See, it's a family show. What did I tell you? You know, you can get confused by some of the words I use sometimes. This is a family show, and it's the best one going. Thanks, Linda White. Thanks, L. Baker. You definitely are top fan, Linda White. You definitely are. Thanks so much for watching. Thanks so much for supporting everybody else in the chat box and each other. Next week, guys. None of this Wednesdays off because America are having a holiday, right? You haven't done anything to deserve a holiday anyway yet, America. I know you want one. Who doesn't want a holiday? They're great. Everyone loves a vacation, but you haven't done anything to deserve one yet. So thanks very much. I'll see you next week. We're going to work harder. We're going to put in more effort. I'm going to help each other out even more. And in the meantime, we're all going to be on Discord. Who is Linda? She's El Baker's mum, and she's an absolute hero. She's one of our favourite viewers, and she's top of the list. She's the number one fan. Thanks, everybody. Oh my goodness gracious me, there it is on the screen. So if you didn't know it's the first instance, well, now you've got it. Yeah.
That's how it's done. Who's next?
Who's next? Top of the tree. Thanks very much, Linda. Thanks very much, El Baker. Thanks, everybody.